Good morning. I'm Meg Zabo, and I'm delighted to welcome you back for day 2 of the Bloomberg Sustainable Business Summit Global. Yesterday, we heard from some of the leading voices in business and finance that are focused on getting to net zero. Today, our conversations will focus on the financial case for sustainability and the S in ESG. But quickly, before we get started, I've got a few housekeeping announcements. First, I would like to acknowledge our global advisor, Natixis Investment Managers, our summit advisors, PwC, RBC, Schlumberger, and Wipro, and our supporting sponsor, Principal Financial Group. If you experience any issues at all with audio or video quality, just try to refresh your browser or use that chat box in the bottom right corner of the screen for support. You'll also be able to submit questions during the interviews today. To submit a question, just open the white tab on the right-hand side of the video window, and you can submit your question there. If you note your name and your geographical location, we'll give you a quick shout out. Also, please engage with us on social media using the hashtag SustainableBizSummit, and engage with our other attendees in the event chat, also at the bottom right-hand corner of your screen. And now with that, let's get started with our first session of the day. Please join me in welcoming Commissioner McGuinness in conversation with Bloomberg's Francine Lacqua.
Hi, everyone. Good afternoon or good morning, depending on where you are in the world. I'm Francine Lacqua from Bloomberg TV, and I'm delighted to be joined by Commissioner McGuinness. Now, this is part of the EU policy series at the Bloomberg Sustainable Business Summit Global, and so we have about 20 minutes to discuss various events. Mairead McGuinness, European Commissioner for Financial Services, Financial Stability, and the Capital Markets Union, is joining us to discuss ways to step up private-public collaboration to achieve some of these goals. Commissioner, first of all, a very, very big thank you for joining us, because I know it's one of your busiest days, certainly of the summer. The EU, a short while ago, adopted the sweeping overhaul of rules to cut emissions by 2030. What does it mean for financial services?
Well, actually, what we did today is in tandem with what I'm doing with financial services. So this Fit for 55 package is about updating legislation because we have higher ambition for 2030, 9 years away. So very soon. And what we're doing on the financial side is making sure that the financial system goes or looks green, but also finances green. So we've had a number of measures, including disclosures, a European taxonomy of what is sustainable economic activities. And last week we had this transition strategy because we want to be more inclusive, global. And also a key point for me is that the financial system itself is subject to real instability because of climate change. So we're looking at how do we factor all of these risks into the financial system. Now, today's discussion, I've just come from a really busy college meeting, was on this package, as you've referenced. And look, what we all need to understand, wherever you are, that if you believe that climate change is real and you know that time is short, you can't say, yes, I want to change, but just not now. Don't ask me, ask a friend. All of us have to change. So it's not an easy message, but my message to the financial system since I took over this role here is quite a severe one, because the financial system has the capacity to give us the resources to do all of this change. Firstly, by investing in what is green today, but also investing in the transition and maybe looking at some of those investments that are not sustainable and perhaps turning away from them, because we need, if you like, those 3 pathways. And for me, then, it's how do I identify for the financial system what is economically sustainable? What am I asking of corporates, large and small, to do? And what I say in a simple way is look at our taxonomy, which does identify what is sustainable, as a management tool. So if you're not sustainable today, but you want to be in business in 20 years' time, you've got to work on the sustainability agenda, whether you're large or small. So in a way, there's a lot of pieces of our, if you like, jigsaw coming together on the financial side and on the legislative side. But it's a lot to take in. And I really, when we're talking to citizens and business, it's to try and reassure people that we're not doing this without being sensitive to the consequences, socially, politically, etc. But in one sense, to state very clearly, we don't have a choice. We have made legal commitments to reduce emissions and to be climate neutral by 2050. I hope to be around for 2030 to achieve those targets. I'm not sure about 2050, but I will have family who will be around, and I want to make sure that the world is fit for purpose by that time.
So, Commissioner, how can more private capital flows actually be stimulated, and in which areas?
Okay, there's several ways that we need to do this, but I think it's really important to say to private capital that's looking for a home that there's also responsibility on investors to look in a sustainable way, to look to the long term, and maybe to turn away from what they know they're investing in today, which could be damaging the climate and the environment, because we're really concerned about environmental degradation. We know that public finances will do something, but not enough. So we absolutely need to get a lot of private finance. And one figure, which I think is quite, stark, 350 billion additional investment every year will be required in Europe to meet our 2030 target. So how do we mobilize investors? How do we get that capital looking towards what's sustainable? We give them information, because at the moment there are many standards. Companies use a whole range of pick and choose, if you like. What we are doing with our Corporate Sustainability Reporting Directive is pointing out very clearly that corporates will need to report these measures, but equally we extend the range, the scope of the reporting requirement to all listed companies in Europe. We also want SMEs, if they want voluntarily to get involved in this, and I think they should, to come on board as well. So I think once investors have clarity of information, that what they're investing is sustainable. But equally, we need to make sure to give assurances. So there needs to be a way of verifying the information that's provided. And it also has to be available, obviously, in digital format. So the work we're doing, if you like, behind the scenes on this whole machinery of transparency is to really make sure that in a very short period of time, financial information, which is fairly well understood now, it took a while to get all the accounting rules, but it and non-financial information are equal. So in future, we won't just look at a bottom line on figures. We'll actually say, okay, so is this company damaging the environment, or is this company aware of the damage to itself from climate change and environmental degradation? So I think what it does require, but it's happening anyway. I'm sure people who are watching and listening will say this is happening, maybe slowly. Management, leaders, board members are having to change the way they think and how they look at a company. And in a way, I think COVID-19 has given us a horrible example of our inability to do that in the past. I keep saying to companies, did you ever think that an investment in public health would be important for you as a private businessman or businesswoman? Because you now realize that lack of investment in public health, where we were not resilient, has resulted in your business closing and huge losses. So I actually think we can use this horrible time of COVID-19 to remind us of how vulnerable we are, how we need to take a more holistic approach to how we live, work and play. And I think citizens understand that very well today. And I'm hoping that that push from, society generally will encourage investors to look towards sustainability. Pension funds, for example, they have a long-term view. They should listen to what their pension holders will want for the future. Now, we also need to make sure that there's a return on investment. So it isn't that we're saying that companies shouldn't be profitable to be sustainable. We need it to be both. And that's why a lot of our work, we have a platform on sustainable finance working internally. We work with our international platform as well, is to try and make sure that every step we take brings us closer to achieving transparency and solutions for businesses and the financial system around sustainability. Lastly, to say that ESG, environment, governance, social, everyone likes it in their annual report, and it was nice to have. From now on, it's not just nice to have, it's absolutely vital, because we will move to social issues, and it's also important that it's verifiable.
So first of all, I'd love to remind everyone that you can send questions, and please send many questions. Do not be shy, which I'll be putting to the commissioner. And you're of the view, Commissioner, that actually the COVID crisis really reminds us that the S in ESG is so, so, so important. First of all, what do you mean by S? And, what does that mean for the green recovery being at the forefront of the policy agenda?
Well, our priority at the moment is the climate. So a lot of our work is front-loaded to achieve our climate targets. But because we have ESG, we've also asked our platform on sustainable finance to look at the potential for a social taxonomy. So I can't give you details about what that might contain, but what it shows is that we are looking beyond finance, we're beyond climate, we're looking at social. And I suppose in a way, what that will probably mean, again, is a forensic look at supply chains, a forensic look internally at how a business deals with employees and diversity and inclusion, and all of those things which are now really, really important. They matter, and they matter at board level. So this is a work in progress. We will know more by the end of this year. And equally around how companies look to the future. I know I get a lot of angst from SMEs, small and medium-sized enterprises, and I fully understand that because they're coping with COVID and trying to get back on their feet. But what I try and persuade entrepreneurs, large and small, to view this transition, as we call it, I think it's more dramatic than a transition, truthfully, but to view this as their future. So if you don't get on board this discussion around sustainability and look at how vulnerable you are around climate and other risks, you won't survive. So in a way, what we're giving business and the financial system, we're giving them the tools for survival. And we all know that at the moment, there's a lot of money there looking for a home. In Europe, we want to encourage retail investors. We have a lot of money on deposit in banks. We really wish that people would look to invest in businesses and get a return where they're not getting it in the banking system. So we have a lot of work to do around the mechanics of literally getting investments flowing. But those at the moment who are sitting on big funds and are looking towards long-term investments, I see it already. I hear the narrative. And as I say, what they want is, I mean, we're past the nice talk. We're past all of that warm, fuzzy feelings. This requires action now. I made a comment recently, I think on Bloomberg, actually, that, money makes the world go round. It's the words of a wonderful song, which I will not break into immediately. But it has the capacity to, spin the world out of control. And that's what's happening around climate. If we put this money to good use, the impacts are immediate, and, they're visible and they're fantastic. And we talk here, we've had a lot of discussion about the costs of all of this change, and people look at the costs and the implications. And I try and balance everything by saying, look, you need to balance that with the costs of inaction. So if we do nothing, the costs are just off the Richter scale, and we will not be doing what's right for the next generation. So we need to really talk maybe about value rather than price, because that is quite different. And I think, again, the financial system, which normally doesn't, it's quite cold in its analysis, is beginning to understand that's important, but equally important is to have this broader look of the role of the financial system in society. And we went through a banking crisis not too long ago globally, and it tarnished the view of citizens of the financial system. So I think there's an opportunity for our financial system to restore its reputation and to be part, which it is, an essential part of this transformation of our economy and society.
And Commissioner, thank you so much for all of the questions coming. Commissioner, you mentioned these sustainability standards. I mean, they must play a big role in actually trying to scale up some of these sustainable investments in the EU. Do you think we'll ever get to a place where, the same standards will be applied globally, especially in the US?
Well, look, I think this is a hugely important issue for me, because if Europe goes alone and does what it's doing, that's not enough. That won't save the planet. We need global cooperation. So we've been running at this for some time. We set up the International Platform on Sustainable Finance. We would like to see a common ground taxonomy developed at the global level. So what it would mean is not that this is the highest ambition, but this would be, if you like, the starting point. And then different countries, different continents would work from that. So Europe is moving faster and further, but we want to be, if you like, in the global conversation, because it has to have a global response. Climate change is everywhere and impacting everywhere. And we've had good discussions with our US counterparts, and really interesting to see what way it will be tackled in the US and what Europe's doing. We can learn from each other. Equally, China is in this conversation as well. So across continents, there is now a very clear desire that we work together in tackling climate change. And this will culminate to some extent in the next COP, which is coming up at the end of this year, where climate finance, sustainable finance, is one of the top agenda topics. Because, I keep making the point that, woolly ambitions and warm words, really important, they motivate. But money matters. It matters hugely. And it matters where it's invested. We want to stop it being invested in things that are not sustainable and are actually harmful. And we really needed to move to finance the transition and what's green today. So transformation of our energy system, our construction sector, everything has to change. And I suppose one of the things I'm conscious of, because I have a political background, I'm an elected member of the European Parliament before coming here, I'm conscious of the need to talk to people about the implications and listen to their concerns and address them and make them part of this solution, rather than saying, we're doing this because we know it's right. We're doing this because we want you to be on this journey with us, not just for yourselves, but for that next generation.
Commissioner, I'm getting some great questions from audience members. So this person writes in saying, you mentioned $300 billion in capital required to meet the sustainability goals for 2030. How do you see digital technologies help you achieve and accelerate the goals?
Well, it's 350 billion euros, actually. So I won't do the changes there, but it's a lot. About 300. It's a lot. But I mean, the reason I make the figure visible is I think it focuses our minds on what's required. I mean, the question is around digital, but maybe I'm not getting the full sense of this. I mean, to my mind, this is about mobilizing capital. In whatever form it comes and wherever the sources are, as long as they come from reputable sources, because we know that money laundering is another issue that I'll be tackling shortly. So we need, I suppose, the financial system to understand that Europe is serious about the green agenda, about the transformation of our economy. We have this next generation EU, very big fund going out now to member states, 750 billion. We're raising bonds as we speak, and they are really oversubscribed because, again, I think long term, people realize this is the future and that Europe is leading in the future. So, I mean, my broad answer to that question is yes, this is a big sum of money. Secondly, we want it to come both internally in Europe but globally. We want to draw investments into the European Union. But equally, as you mentioned, the global context, we want to make sure that the developing world, our near neighbourhood, that they're also part of this conversation. Because in a sense, we here in this world, the privileged, if you like, who've managed economies and whatever, and have democracies, we have benefited from using fossil fuels. So in a way, we have to give a little bit back here and understand our duty to help others perhaps not make the same mistakes as we've made, and to leap forward with renewables and other technologies. And lastly, to say we also want money to be invested in innovation, because I think we all know innovation will be needed. And, not that we're hoping it will happen, we have to invest to make it happen. We have some difficult issues to deal with around the view around gas. Does it have a role in a transition? Many of our member states believe it does. They can't go from dirty coal towards renewables overnight. Then there is also the issue of nuclear, which will be part of the overall energy mix in the long term. Some member states absolutely committed to nuclear investments, and clearly it's low carbon. And then we have questions around another criteria we talk about: do no significant harm. So in a sense, all of the work we're doing here is certainly not simple. And I'm sure in 20 minutes we won't get to the entire core of it. But what I'd like to get across to you and your viewers is how serious Europe is about this. And I think COVID has propelled a sense of urgency as well, notwithstanding the many fears that will be there and concerns amongst some sectors. For example, if we decide to ban the production of combustion engines by a certain date, which will be revealed very shortly. But what we're doing is giving signals and signposts. And what's really interesting is if you take the automobile industry, they were a bit hesitant about all of this change. Now what their ask of us is not so much don't make us change. They're saying make sure you have the power points along motorways so people can actually recharge. So they're getting to the practical stage now. They know this change is evolving.
Where do you worry about greenwashing the most within the financial sector?
I think, first of all, I think greenwashing is a big, it's thrown over everything in a way. I mean, we've identified what is economically sustainable, and that's a difficult task. It is science-based, but it also has to be acceptable to users. So we have this taxonomy, which covers about, I think it's 80% of our economic activities. I mean, I think greenwashing will be found out very quickly. It's also fair to say, and really important to say, that we're going for this, if you like, gold standard European green bond. We've approved just the process by way of a regulation. So the co-legislators, parliamentarians, etc., have to get stuck into the details of this. And the reason we're going for this gold standard is there's lots of standards at the moment, ICMA and many others, and they're really good. So we're working off the best today so that we're best for the future. So I think anyone who's looking for certainty needs to work with the standard that is recognizable and that is today regarded as being clean, that it's not involved in greenwashing, where we will have to be really careful. And it does involve extra work in terms of assurances or auditors, is to make sure we just don't check at the beginning, but we have milestones and targets. So if it's a long-term one, you look at, is this really going in that direction? So that there is also then a fear factor. So our supervisors will be watching where the spend is going and people can be penalised. So what we're doing is a little bit of the carrot, we want to encourage, but equally to say, look, if you claim to be sustainable and you're found out not to be, you could be in trouble. So I think you need that balance of both. Maybe also to say around greenwashing. We work a lot with the NGO community and there's really important environmental activists and, they really want to reach the stars. And I admire them for wanting to get there now and immediately. I suppose with my practical hat on and a political hat on, sometimes I have to settle for some steps today and more tomorrow towards that best in class.
So what you were just saying, how does it affect, and this is another great question from an audience member, how will this affect actually trade agreements such as CETA?
Yeah, I think around trade, we've had a long discussion internally here. So one of the fears sometimes of industry and indeed our agriculture sector is, look, we have very high standards around climate, etc., and yet we might import and displace our own production. So we talk about a carbon border adjustment mechanism to take account of that. And again, the details will be rolled out probably as I'm speaking to you. It won't happen immediately because we need to make sure that it is WTO compliant and that it is in the wider scale that with our global partners, they understand where we're coming from on this. So that is a work in progress as opposed to immediately happening. But I think for all of us, I regard this as quite a simple but complex insofar as, let me remind you of Brexit. When Brexit happened, many businesses in Europe and the member state I know best really had to look at their supply chains to see how vulnerable they were to this new era where the United Kingdom was no longer a member of the European Union. And they changed. They changed their supply chains. They were ready and they were proactive. What I say to business and the financial system today is you need to do the same. Because the change that we're going to have to face and that you need to finance is coming. And you better be aware of it before it hits you because the costs involved afterwards are much greater. And if you look at our insurance sector, look at the difficulties around insurance for pandemics, all of these things, it hits every single sector in the financial world. So a lot of the work I'll be doing throughout the rest of this year is looking at our legislation around the insurance sector, around Solvency II, as we call it, to see, is it really helping our insurance sector to play its part in long-term investments towards sustainability? So you could say that we are, if you like, ratcheting all of the bolts in our system here and checking that they really are, fixed on this future, which is around carbon neutrality and addressing climate change, which brings other benefits. So my health commissioner colleague, Stella Kyriakides, spoke about the health benefits if we tackle climate change. People who are energy poor sometimes use dirty coal. It's all they can afford on a weekly basis. We need to make sure that we support them in a transition, and that will be better for their health as well. So, there's a lot of good in this. But I think there's a lot of fear around the kind of the implications and the change.
And Commissioner, I'm getting quite a lot of questions actually from bank representatives saying, what ESG scoring framework fits best with the incoming SFDR and EU taxonomy?
Oh, look, how long have you got here? I think what we're saying to financial
45 seconds.
Okay, we have actually got a financial disclosures. So if the financial system knows, what we're trying to say is, look, we're going to be looking at what your portfolio is, and you're going to be looking at that, and you're going to say, gosh, we're not very climate friendly here. We're going to have to change. So what we're doing is nudging change in the financial system, nudging change in the corporate world to avoid this mandatory, requirements. And I think that if we all, live up to our own responsibilities, this change will happen and happen in a very good way. But I do think that question, as I say, is too big for 45 seconds. But if you look at our corporate sustainability reporting directive just out, if you look at the financial disclosures which are required, we've done, if you like, a ton of work in the last year. And we now are bedding it down. So I would ask people to look at our strategy just released last week. I think that will give you more detail because we need more discussion around the transition and finance for that transition. And we need also to make sure it's inclusive. So citizens, SMEs, not just the big, but everybody gets on board with this. And so far, the response to what we're doing, while people are taking a sharp intake of breath, they're saying, actually, we know this is coming. And at least you're giving us very, very strong signposts. For me, the biggest signal is how we will actually price risk, or how banks will price the risk that they face from climate, what that will mean for capital requirements. We're going to get reports from our banking regulators here in Europe looking at these questions. And I think when that becomes part of the conversation, you're going to see a much more rapid move towards making sure that portfolios are aligned with the future, not stuck in the past.
Commissioner, maybe one final very quick question. And this is an audience member saying, should sovereign debt and EU debt also respect the EU green bond standard?
I could catch that with the corner of my eye. And what I wanted to say to that question, we're issuing bonds at the moment, which are meeting the best requirements today in the green bond market, because we want 37% to go towards green. The gold standard I speak of, the EU green bond, it will take some time for it to go through the legislative process. But when it does, it will be the one we will use. Our member states want this as well because they want to be able to use a standard. So in a way, yes, is the answer. There will be this standard when it's fully through the process. It will give clarity, precision and direction. And we hope that it's not just for Europe. We want this to be used everywhere. And we're very happy to talk to all our colleagues globally around our experience, because in a sense, we're out there first. We're trying to do all of the right things to achieve our targets. Our citizens are very engaged in this debate. And I think, to use that other expression, the rubber is now meeting the road. We're moving from words to real action. And the action is money. Money talks. We need it. We need private investment. And I would say to those who kind of, think this isn't for them, it absolutely is. And it is from a point of view of being sustainable. But I think all of us have a conscience. I think all of us understand that it's a duty, a moral responsibility not to invest in things that are bad for the planet. And sometimes that's too big a thought, but bad for your family, bad for your community, bad for your country. I mean, I think we all know what the right thing to do is. We don't want to go toward brown taxonomies, but they're always hanging there. I rather do it with persuasion through green and showing people the right way.
Commissioner, thank you so much for fantastic thoughts. And thank you, everyone, for watching us.
And thank you so much.
Well, I'm very pleased to welcome Graham Pitcatley, of course, CFO of Unilever. Wonderful to spend some time with you, Graham. And talk to us as the role of a CFO, how much sustainability, particularly your focus on the climate, has become your role. Did you ever envisage that when you were, the man on the numbers?
Probably not 10 years ago, Caroline, but now most definitely. Why is it important? Why does it sit in the CFO space? I think it's probably obvious to everybody that, society expects businesses to be more responsible and more sustainable. And that's probably only going to increase as the sort of relationship between business and society evolves after the pandemic. I have to say it's particularly relevant for a consumer products company like Unilever, because there's 2.5 billion people every day who use our products, and actually they want to know more about the company that's behind the products and what that company stands for. On the specific point around the CFO's role, what I found really interesting is that companies and asset owners and asset managers and banks and rating agencies and insurers and pensioners, everybody's sort of connected in this, and I really think we're sitting at a bit of bit of a generational inflection point, and as CFOs, we've got a sort of unique role to play in how all of our businesses respond to that. And if we don't, we'll be held to account, and there will be consequences. And why CFOs? I mean, it's sort of in our wheelhouse, because a really big part of what we do every day as CFOs is just simple market communication. And over the last year, we've seen such an increase in ESG investing, and the market expectations of businesses are moving so fast. And that's before you even consider your customers and your consumers and your employees and civil society. So I've actually become quite optimistic and quite evangelical about the capacity of capital markets and CFOs in particular to be catalysts in this space, and making positive progress.
Bringing that evangelism to us then, because what's so notable is, as you say, this is a stakeholder conversation you're having, whether it be the consumer or whether it be the investor. And we feel it here in particular, the latest rounds of annual general meetings, particularly for the oil companies, have been, extraordinary, because suddenly we've got board seats being changed. We've got really activism within the investor ranks. You at Unilever have been talking to your investor base a long time about this. You've been putting it to shareholder votes. How did you see that coming? How did you get ahead of that? Was it through the conversation with investors in the longer term?
Well, remember that we've had a bit of a head start with this, and really the sort of foundation of Unilever 100 years ago, the way that Lord Lever thought about the sort of purpose of the company and what it was here to do was really grounded in sustainability. So we've had nearly a century of practice at this, and it really started for us well over 10 years ago now with what we called then the Unilever Sustainable Living Plan. And that was an attempt to set out, the goals that we had as a company in the area of sustainable business. And we've now integrated that much more simply with 10 years of experience into a fully integrated business strategy for Unilever, which we call the Unilever Compass. And I won't drone on about that, but what was interesting, and to the particular event that you referred to, earlier this year we published, back in May I think it was, our first climate transition action plan, and that drilled into one specific aspect of our Compass strategy. It was around our climate goals in particular, and it was a bit of a cathartic moment for us, because even within the company, preparing and publishing the Climate Transition Action Plan, or CTAP as we call it, was a bit of a seminal moment, bringing together all of the company's philosophy on it, very honest and transparent assessment about what it is that we believe, the way we think that, in particular, climate will impact the business, how we'll impact the climate, what we want to do about it, what we know, what we don't know, what we're assuming in that. And it was a really powerful statement. We did decide, because we had it, we decided to publish it, and we decided to take it to our AGM in May. And that was the first time, and we got over 99.59% shareholder approval of it. But we did that because, as we said earlier, it really is about a sort of deepening, quite fundamentally, the level of engagement between companies, in this case Unilever, and our investors about our climate transition plans. And we thought that in sharing that plan with a really high level of transparency and accountability, we could strengthen that dialogue with our shareholders and really get the dialogue moving. That was the main purpose.
With transparency is data, really, and an ability to measure. And this is what we're talking about, the reporting. How have you thought through the metrics that you need? In particular, I know that this is something in particular you're working with the task force. A task force member, the TCFD, is, of course, a really focal point right now in terms of a climate change action group. What's that? What's best practice that you're coming together with at the moment in terms of metrics, in terms of reporting, in terms of numbers and data?
Well, again, let me caveat this a little bit by saying that we've been at this for a long time. So gathering the data, building the models, putting the processes and systems in place to allow you to measure progress against the targets that you've set takes investment and takes effort. And I'll maybe come back to that in a second, because I think it's important not to be deterred from starting because of everything that might lie ahead. But I mean, you mentioned the TCFD there, and in particular, I've been a member of the TCFD since its formation, and it's been a really amazing experience with the TCFD. I have to say, we've probably achieved what at the outset would have been at the top end of our hopes and expectations for the recommendations that we were coming up with. I believe, and I'm probably a little bit biased on this, having sat on the task force for a long time, I believe the TCFD recommendations are a relatively straightforward and practical guide to communicating the impact of climate change on your business and your business strategy and your prospects. And of course, you can use both qualitative and quantitative disclosure. But, and it's quite a big but, Caroline, climate change is a really complicated and long-term topic, and you can't underestimate the scale of the transition required to limit global average temperatures to 1.5 degrees. And there certainly isn't one template that can be applied, but mandatory TCFD reporting with a sectoral layer on top of that, I think, is a really, really good jumping off point. Consistency of data runs into trouble as you try to go across all companies and sectors, because if you try to be too consistent too widely, you kind of lose the relevance of that information. So I'm a big believer in some degree of all company disclosure and metrics and targets. But then I'm a big believer also in getting into sector specifics so that all stakeholders can really drill into companies that are in the same space and how they're thinking about climate within their strategy.
Of course, you're vice chair, I should elaborate on, of Bloomberg's Task Force for Climate-Related Financial Disclosures, the pithy acronym being TCFD. And to that end, the experience that you've had, the way in which Unilever thought really deeply about not only the products that you sell, what's within your products, how biodegradable they are, the impact they have on the climate, the way in which you're making them, but you originally were thinking about, well, how I, as the consumer, use them. You almost went into as deeper conversation as how much hot water I'm going to be using while showering and using one of Unilever's products. You decided to step away from that side. What was the learnings that you brought as vice chair of this task force that you think you can really bring to bear, the experience that you've had, the decade already within the game, that you're able to share with other companies on it?
It's a really interesting point, actually. One of the big learnings that we had in going through the Unilever Sustainable Living Plan into the compass, and then how we think about our TCFD disclosures in our annual report and accounts, being flexible in the approach as you progress, I think, is a really, really important learning that we've had. I'll just give you an example. Under the original USLP, the original plan, it was the 10-year plan that we published 12 years ago, one of our overarching goals, you just touched on it, was to reduce the environmental impact of the company by half by 2030. And two of the underpinnings of that goal were actions that aim to do two things. We aim to halve the greenhouse gas impact per consumer use of our products by 2030. And we managed to get it down by only 10% in 2020 compared to 2010. So we didn't make very good progress with that. And we also set out, for example, to halve the water associated with the consumer use of our products by 2030. And we'll go back 10 years, it was in 2020. And actually in 2020, our water impact per consumer use, and rather disappointingly, it was exactly the same as it was in 2010. So these are thorny issues to address because, when it came to reducing the greenhouse gas and water impact of our products on a per consumer use basis, we'd frankly really significantly underestimated how challenging it is to help consumers like you and me change our behaviors. I mean, frankly, we misjudged how long it takes to do that. It's not very easy to get people to take shorter, colder showers, or boil the kettle less, or wash their clothes in cooler temperatures. And we learned a lot about the areas that we can influence and those where we cannot, and areas where we need wider action from other players, such as a shift in the energy grid towards more renewable sources.
Really interesting how you have to keep on being flexible. Do you think the investor is flexible as well? When you're going out there and having these conversations with your stakeholders, what do they want to be hearing from you? What data is important for them?
It's very varied, Caroline. I mean, going back to, when I started as a CFO, just to make some horrendous geographic generalizations, when you were having investor meetings, the broad question of ESG would come up pretty often if you were in Europe, if you were doing some investor work in maybe Holland or in Germany, but it would come up at the end of the conversation. It came up sometimes in the UK, pretty much if there was a specific ESG analyst or investor in the meeting, and it came up very, very rarely in the US. Now, that was, 6 or 7 years ago. That's changed a lot. That's changed an awful lot. Having said that, there were always investors. I mean, Generation Investment Management or Stewart up in Edinburgh are really good examples of investors for whom thinking about ESG investing or sustainable investing is just fundamental to their investment philosophy. My experience is that those investors are actually setting to one side that they're interested in sustainable investing. They're actually just really, really good investors. I mean, the quality of the questions about business strategy, about your custodianship of the company, your strategy, your governance, your capital allocation, that is at least as sharp and sometimes sharper on the just core financial business points as you get around how you think about your business through an ESG lens. And that has changed quite dramatically. Now, what will that mean going forwards? I think there's a great game of catch-up going on. I think, as I said earlier, there is a risk that the appetite and capability within the capital markets runs ahead of many companies and boards and management's ability to engage fulsomely in this dialogue. And that's why I say that it's really important to, I mean, the best way to start is to start. This is a very relevant strategic dialogue for companies and boards to have with all of their stakeholders. But you have to get started and you have to build the dialogue and you have to evolve it over time. And as I said, you have to be flexible in doing that, but the capability has to be built.
Is it something, I'm going to use a sensitive word here, greenwashing? And is it something that you worry about, that sort of your story, the decade-long story that you've been having, the experience you have, sort of gets lost in every other company trying to voice their view on it and perhaps not doing? Is this what the task force, of course, Task Force of Climate-Related Financial Disclosures, is trying to really eke out, is that who's doing it right and who is actually sort of talking the talk but not walking the walk?
Well, the task force wasn't set out to be a sort of a scorekeeper, a gatekeeper, or a rating agency or something who said what's good and what's bad. What it set out to try and do was to provide something useful to companies and investors, to both sides of the capital market, so that they could get started on a useful dialogue about something which is definitely a normal business risk or an opportunity for any business. It just happens to be so long term, it's difficult to see and measure and talk about the impacts on your business. And what I think we did well in the task force was provide an accessible framework. I said earlier that I happen to believe it's quite simple to get started with TCFD reporting, because you can flex it according to how well prepared you are, how much strategic thinking you've done, how much dialogue and analysis you've done within your company, and start to build that dialogue over time with your stakeholders. And that's what's important. I say very often in the context of TCFD, and I'm never sure if it resonates or not, but I believe it's much more important to raise the floor here and for everybody to get started than it is for a few companies, maybe Unilever's in this bucket, who raise the ceiling. It's okay to have companies who are engaged and ahead and like to innovate in these spaces and want to pursue it, but it's much more important to raise the floor than raise the ceiling.
You said you were evangelical about the role in which a corporate can play, a CFO within a corporate can play. Raising the ceiling 10 years from now, how high is that floor that you've managed to bring up? How big an impact do you think you would have brought to bear? Is that something you can elaborate for us?
Yeah, I think certainly from my own personal perspective, it will be the extent to which we've raised the floor at scale that is the measure of success. I say this quite a lot, Caroline, in Unilever, actually, because, we're a very purposeful company. As I said, we've got a long history of sustainable business, and we've really sharpened that, and it's very explicit now in how we talk about who we are as a business. And for example, I mean, that happens to be very successful in attracting top-class talent to our company, because Generation Z really cares about this, and the best talent wants to go and work in companies that look and act and talk and feel like Unilever does. So that's a benefit to us. But quite often within the company, I have to be clear that if Unilever is 100% successful in all of our Compass strategy with regard to sustainable business, that won't make a difference. Because although Unilever is a very big company, in the context of the global economy, it's absolutely tiny. And so what's much more important is that the broad belly of the economy, that all companies move forwards with this in one shape or form than a company like Unilever just being successful. I should also add that our Compass strategy is a completely integrated business strategy. So our vision and really the center point of the strategy is that we set out to be one of the world's most leading sustainable businesses. But we want to demonstrate that by doing so, we will deliver superior value creation for longer, and we measure that by sort of top third TSR within our peer group. And that's a much more stretching goal than just becoming a sustainable business. We actually want to show that you'll be a more successful business and deliver more value creation by operating our business that way. And again, back to where we started the conversation, that's where it's definitely within the wheelhouse of the CFO. This is about value creation. It isn't a either or something that or an opposite. It's all headed in the same direction, that by managing and thinking about our business this way, we'll be a more successful business. And quite often I have to take that message inside the company, that we're not just here to operate the business this way. We're here to prove that by operating the company this way, we're a more successful business, measured through orthodox financial returns.
I remember having these sorts of conversations with Paul Polman before then Alan Jope came, and the fact that you can be profitable at the same time as being clean. Has it brought new investors to you? Have you found by singing from this hymn sheet and being evangelical, you're getting more people wanting to buy into that?
Oh, for sure. I mean, the dialogue that we have, I mean, we've got a fantastic base of investors in the company, and of course wider stakeholders, and sometimes default to talking about shareholders all the time when I should talk more broadly about stakeholders. But we're very proud of our investor base. We have challenging, ongoing, transparent, demanding dialogue with them. We're very clear on our capital allocation, our portfolio change, the things we do in M&A, the things we do to be a more competitive business. I'm sure Alan's said to you before, first and foremost, Unilever is about executing the fundamentals of growth in the company and being a brilliant consumer products company with great brands that appeal to more and more consumers around the world. I mean, sometimes, one of the big facts in Unilever is 2.5 billion people in the world use a Unilever product every day. Well, there are 7 billion people in the world, so there's 4.5 billion people who don't. So from the CFO's perspective, my fixation is in, what do we do to attract the other 4.5 that are there? But I mean, there really isn't a compromise. I very rarely, if ever, get into a dialogue with investors, prospective investors, or market participants who seriously believe that there's a choice to be made or some awful compromise between being a sustainable business and being a valuable and successful business. I think most serious investors don't consider that to be a choice anymore.
But Graham, I mean, we started this conversation highlighting the fact that, 99.5% or thereabouts of your investor base said, yes, we like your plan, your climate action plan. But the transition, the 0.5% that didn't, are they saying we want more? Or are they saying we don't like the way in which you're prioritizing?
Don't know yet, but every time there's not a single vote that we have for anything in our AGM that tops 99.5. I think Alan sometimes gets 99.7 at the AGM, but he's a nice guy and popular with the popular vote. But no, in all seriousness, I don't think we should take too much from the fact that we had a very positive vote on the Climate Transition Action Plan, because it's early days. What's really important is the engagement we now have with investors around it, and the ongoing dialogue that goes from there. It's no different. In fact, we've structured it in terms of the approval in the same way that our remuneration strategy and remuneration policy would be subject to shareholder vote under sort of normal, certainly governance here in the UK. So it's a very similar thing, and we expect to get exactly the same degree of dialogue and engagement over time. The one thing I should say about the Climate Transition Action Plan, it's a super accessible document. I mean, it's an easy read. Yeah. It's very transparent. It's very honest. There's a lot of good data in there. It just, even within the company, was a really galvanizing moment for everybody to say, look, it can be complicated. I mean, we started out in the original Unilever Sustainable Living Plan with over 50 targets. We've tried to simplify that enormously into the Unilever Compass. We've got fewer, bigger goals, etc. But fundamentally, it can still be hard to engage with even inside the company. What the Climate Transition Action Plan is a very accessible document that sets it out in one place, and very, very easy to engage with.
My job involves earnings season and a myriad of numbers coming on to the terminal to break. What numbers do you think will eventually be some of the most important numbers that investors look at in terms of climate, in terms of the data, in terms of the metrics that you're thinking about? Will we be headlining it? Will there be, as we know, if you're an investor, a red head on the Bloomberg terminal? What do you think that would be?
Well, look, I think there's a challenge between the long and the short term here, and what Mark Carney, in being a sort of pivotal spark of what became the TCFD, what he said in his sort of famous Tragedy at the Horizon speech is absolutely right. The problem is in balancing out things that are happening long term with the short term of the markets, and the way that the markets operate today. There's a lot more programmatic trading. Things are inherently short term in one sense, but of course the dialogue you have with investors is still inherently in areas about long-term strategy. Your right to win. Have you? What are you thinking about new market opportunities? So, to answer your question, I don't think things will radically move away from where is the value creation in your business? Where are the future pools of value? How will you access them? Do you have all the tools you need? Do you have the brands, the people, the capability, the assets, the network, the technology, whatever it takes? That'll still be fundamental. But I do think that particularly for companies in all sectors, but just to talk about our sector for a second, we sell branded goods to consumers who really care about the company that sits behind it. And if everybody's starting to talk purpose, and you spoke earlier about greenwashing and woke washing, consumers are really, really smart, particularly younger consumers, and those younger consumers make up more and more of the addressable market that companies like us face. They will very quickly understand if a company is taking genuine action, has got a genuine strategy, is genuinely thinking about these things. So I think that the investor dialogue around it will still be connected to the fundamentals of a business, but you bet questions like water, pollution, plastics, climate and nature, deforestation, carbon footprint, all of those things are going to be things that investors will care about, because the customers and consumers of the companies they're investing in will care about them.
Graham, loved your passion. Thank you for bringing it. Your evangelicism, we felt it today. Thank you, Graham Pitkelly, of course, of Unilever. Thank you very much indeed.
Thank you. Enjoyed it.
We're taught that 1 + 1 = 2. Simple, right? But today's world isn't simple. So what happens if we look at it from a new angle? Could we make something greater? If we bring together human ingenuity, passion, and experience with the latest technology, we start to make something more, building trust for today and tomorrow. Because when a passionate community of solvers comes together, you get new solutions for a new day. That's the new equation.
Well, we're really excited to be here and want to give you a little bit of background around ESG and talk about what it means internally to an organization and then what it means externally. So by way of background, my name is Shannon Schuyler, and I'm the Chief Purpose and Inclusion Officer for PwC. And my role is to really look after ESG within our company. So what does that look like to focus on our social investments, our diversity investments, our environmental investments, as well as how we look at this from a governance and a reporting standpoint? And what are the things that we need to do as a company in order to make sure that we're making the right investments, we're looking at our stakeholders, and really making sure that both our employees as well as our customers and clients see the impact that we have in those areas. I want to also introduce you to Casey Herman, who will give a little bit of background about his role, and then we look forward to getting into a conversation, letting you know a little bit more about ESG and how we're seeing it really play out in the market, and hopefully add value to the discussions that you have. Casey.
Thanks, Shannon, and it really is a pleasure to participate in this, and especially with such a good friend as Shannon is. We've worked together a long time. I am a partner at PwC. I'm our U.S. ESG leader. By technical training, I'm an audit partner. I've been with the firm about 35 years, and for all of those years, I've been a member and have recently led our energy practice for power and utilities and oil and gas. And literally every conversation I had with a client involved sustainability, decarbonization, and broader topics around ESG for the last 4 or 5 years. So as I began to see this momentum growing in my industry, I began to lobby our firm that it's time for us to invest more heavily in this. This is going to permeate every one of our clients in every area of our clients. And when change occurs at our clients, that's where we can add the most value and be the most useful as a professional services firm. So as a result of those lobbying efforts, I've been asked to help lead our ESG practice in the U.S. And I think it's a tremendously exciting time to be part of it, and look forward to talking about what we're seeing with our clients and in the marketplace.
Casey, thank you for that. And maybe I'll build off of and just kind of build off the relationship that you and I have had. I think one of the first opportunities we worked together was back in probably 2007, 2008, as we started to talk about sustainability from an environmental context, to say, what does that mean? What does that mean for our firm, the things that we should be doing, but also what are we seeing? And certainly you coming from the energy practices, the different things that we were seeing based upon policies either happening or not happening, certainly things that we were seeing across the pond in the UK and others that were really moving forward on this agenda and it had not yet hit the US. What do you think has changed so dramatically that this really went from something that you and I have talked about a long time to now people are really taking action, and they're looking at that action, not just around the environmental aspect of it, but ESG broadly. And that really is a part of building trust in why people invest in companies.
Yeah, Shannon, you're right. We've been talking about this for 10, 15 years, and we've had a couple false starts. And, I'm convinced that it's the real deal this time, that this is a sustained, permanent change to the global and the U.S. economy. And I think what has changed in my mind is there was a perception it was going to be driven by policy. There was a perception that either out of Washington or other capitals or even at the state level, policy and politicians were going to drive this change. And I think that what we began to see maybe 5 years ago is it's not going to be policymakers. It's going to be investors. It's going to be lenders. It's going to be customers. It's going to be employers. It's going to be everyone but the politicians that drive this change. Now, policy is going to steer the course a little bit, right? If the North Star is at 90 degrees, maybe policy will take us 5 or 10 degrees in either direction. It's going to moderate the speed, I think, because the federal government and state governments can devote more resources, more financing, more attention to this topic, or they can decelerate it. But I'm convinced it's not going to change. It really started with some of the European banks starting to divest from certain industries, and that got executives to take note. But at that point, ESG was viewed more as a risk factor, right? How do I factor climate risk into making my investment decisions? It wasn't viewed as an opportunity. Investors and company and management teams were on the defensive. How do I guard against being painted as a negative ESG attribute, as opposed to what is the benefit if I can articulate and be a positive player in this? And that began to change 4 or 5 years ago. And I saw it first with utility companies who realized that electrification was going to be the vanguard of decarbonization in the U.S. And this is a unique opportunity for us to be a positive influence on our communities, a positive influence in climate change, as well as a more important member of the economic attributes of our society.
Yeah, and it's interesting, Casey, because I think for so long, and especially 10 years ago, people were looking at these things in a silo. So you had your ESG, which totally focused at the time more so on sustainability from an environmental standpoint. And those individuals, and in many cases today, looking at it from an internal perspective, don't sit near those folks who make the investments on social, don't sit next to those people who are making the investments on diversity and inclusion, and don't sit next to those people who are focused on reporting. And what we're seeing now is the intersectionality and the ability for those groups to get together. That's the power of it, right? That becomes the storytelling nature to say these things aren't separate. We need to talk about what happens to marginalized communities because of the impact on water safety. What happens to society as we have issues that are related to natural disasters. These things connect so much. And I think the narrative is so important, but the narrative is important as long as we also have the data, because I do think, and want to get your perspective, especially with a background in auditing, that the numbers need to start coming with the storytelling. Because I think for a long time, as people did sustainability reports, it was all the narrative and it wasn't led by really having the data. How has those two things, how have those come together to really start to have this be more cohesive and really have this be something that the C-suite and the board is talking about?
Data and quantitative information, having one source of the truth is a growing importance, but it's a challenge. Our clients, the economy has spent hundreds of years developing accounting systems to track financial performance of the organizations. They've implemented highly complex ERP systems, computer systems, general ledgers to track that data. And those systems are very nascent for ESG data. They're going to be built. And I think that that's a necessary next step, is how do I turn accumulating this data from a manually intensive annual event to prepare my sustainability report, my corporate responsibility report, to a continuous process that I can monitor on a monthly basis, on a quarterly basis. I can report my progress, just like I report my quarterly earnings to my investors. That's going to be the next step. And then, Shannon, the other complication is you're reporting to a very broad group of stakeholders. So financial reports are primarily to the investment community and regulators. ESG has a lot more stakeholders, and the way that you communicate it has to be different. So I think that the cutting edge of this has been, how do I report my ESG story to investors, right? How do I report it through the GDP, under various reporting formats that are primarily used to report to your investors and lenders what your profile looks like. And what's evolving now is how do I report it to my customers? Because they don't read those reports, right? Nobody decides I want to go buy a refrigerator. I'm going to read the corporate responsibility report on this company's website to see their approach to ESG, right? They go to the website and look at the refrigerator. How do you start weaving in the ESG and sustainability and net zero stories into customer-facing portals and communication channels? And then it's just as important to report it to your employees, and they're somewhere in the middle. Right? They're not going to your external consumer websites to get their information. They're probably not reading the corporate responsibility report. A few do, but most don't. So how do you then drive it through that channel? And that's an art that I think the business community is still developing. We're eager to help our clients figure out how to do it. And Shannon, you're responsible for that at PwC, and better than anyone, you know how challenging it is to try and report fairly but consistently to all of those different stakeholder pools.
No, Casey, I agree. And I think the way in which to lead this conversation is one that companies need to be proactive in doing this. I agree with you. This is not going away, and you don't want your story told for you, and you don't want your data out there where you can't explain it. And so I think companies need to be proactive, realizing that this is the way to build trust, and it's a way to help accelerate their brand as well as the sustainability of their organizations just broadly. And the quicker that they start to realize how to be able to tell the story and the narrative with the data to back it up, I think the better position that they're going to be in, and we're going to see this as a long-term trend, not something that's going to go away. And so I really appreciate all the work and obviously your incredible friendship as we look to really push PwC forward, and as you certainly lead the charge to help our clients.
Looking forward to it, Shannon, and always a pleasure to spend some time with you.
Hey everybody, welcome. I'm Alex Steele, joined with some special guests, Karen Carneal-Tambor and Karsten Stendevad. They're both co-CIOs for sustainability over at Bridgewater. Guys, really appreciate you coming and doing this with us. And I think that the two of you together paint a really clear picture of how to think about investing sustainably. Karen, you come with 15 years experience in Bridgewater and investing cycle. And Karsten, you previously worked at a national pension fund over in Denmark. So you're like sustainability is in your blood. Karen, tell me how you guys are fusing these two things. How's Bridgewater thinking about it?
Well, one of the early decisions we made at Bridgewater was that we weren't going to build some other sustainability function. We weren't going to say, there's the real investors, and then over there we have the sustainable investors that are going to show up after the fact and tell us we should be polluting less or something like that. We basically said, if we're going to look at this, it needs to be in our bloodstream the same way that most of the large clients that we work with are increasingly put it into their bloodstream. And so we basically said we need to fuse, exactly as you said, both long-time Bridgewater experience. I've been working at Bridgewater, 15 years, been serving in our investment committee, built a lot of our algorithmic understanding of markets with deep sustainability understanding. Karsten, a leader in his field, wrote a lot of the early codes and understanding in Denmark of how to do this long before a lot of us probably watching this presentation right now even really thought about the word sustainability with regards to investing, and doing it across public and private markets at a huge depth, and saying we're going to build that as a function that is both deeply within our investment process, so that every time we look at an asset class and we're saying what's its return and what's its risk, we're just thinking whatever's pertinent to that asset. And if those happen to be, environmental or social issues, just whatever's pertinent to that asset. And at the same time, we're also going to build a new functionality to say, insofar as investors really care about sustainability as a first-class consideration, we can also prioritize that goal alongside risk and return.
Yeah, Karsten, so break that down a little bit. Is it that you have a big portfolio and a little bit is going to be sustainable, or the whole thing is sustainable? Like, do I want returns or do I want to feel good? Like, can those coexist?
I think they can coexist, but we approach sustainability really from the starting point of who we are as investors. So Bridgewater, is a macro investor. And so the most important thing when it comes to sustainability is to think about how issues relating to social and environmental issues, the extent to which they affect all of our portfolios, the risk and return of all of our portfolios. So if you think just about macro, already now, there are a number of issues relating to social and environmental issues that are pertinent if you want to have a macro understanding. Just think about fiscal and monetary policy already today is already driven by some of these issues. Look at fiscal policy and, in a way, the inherent, almost redistributive nature of that, and how that is often driven by and seeking to affect environmental and social issues. Look at today, the announcement out of the EU around a broad sweep of climate change initiatives. That's going to have clear impact on the macroeconomy, on capital flows, on investor behavior. So that's one part of what we do, just understanding how these issues affect macro. That's true for anything we invest in. And that we do in pursuit of the best risk-adjusted returns possible. But then increasingly, we are seeing a number of our clients say to us, look, we don't just have financial objectives. We actually also have non-financial objectives. It could be a net zero orientation. It could be other things. And there, what we've really spent a lot of time researching is the question of how can you build a portfolio that both delivers excellent financial returns, but where the security selection, where each security you have is also aligned to, for example, the UN SDGs. And that is really a new way of thinking about portfolio construction. Ultimately, whether you have a portfolio that's just focused on risk and return or risk, return, and impact, that's really up to asset owners. They are the owners of the assets. They determine the goals of the portfolios. But we basically are able to do both. Both take it into account in as far as it's relevant for risk and return, as well as build portfolios that have both risk, return, and impact objectives.
So, Karen, give me some specific examples of something that makes sense in a portfolio based on all of this, like today, that might not have made sense, 5 years ago.
Well, good question. I think that a really interesting spot, what I love talking about because so many sustainable investors hate talking about it, so I like leaning into it, is thinking about commodities. Because on one hand, commodities are very unsustainable. There's no commodity that you can't look at and talk about things that are not going well and how that commodity is either produced or consumed. And so whether it is using, having greenhouse gas emissions in the process of mining it out of the ground or mining it unsustainably with issues like child labor or slave labor, all the way to, oil, when you burn it, that's when you're really warming the planet. That said, we feel that investors just saying, you know what, I don't want to be in commodities, there's bad things happening there, is a very big mistake. Because when you kind of think, what is our vision of a sustainable world, it really requires commodities. There's no vision of a sustainable world where you say we're going to have no more aluminum and no more steel and no more copper. And actually, if you want to transition away from carbon, you need more of those things, not less. You got to get a lot of copper and steel and aluminum and so on to build all those electric vehicles and rebuild our buildings and refurbish them to be green. You've got to actually do all those things. So we feel that as investors, you one can prioritize being in the commodities that are the types of commodities that make a difference in a sustainable future, and getting out of the commodities that are the ones we need to phase out of, like coal and oil. Second, if you're doing it in companies, you can pick which are the ones that are doing it best. And then from a pure risk return perspective, to be blunt, I don't think anybody could say, what do I think is going to happen to the price of steel or copper without asking this question of what will happen to the pace of transition away from carbon. When you say, what is the supply demand going to be like, you have to basically ask yourself, well, how fast is the world going to choose to transition away? Karsten was talking about, the European Union putting all these climate initiatives. They're trying to accelerate people to move away from oil and coal. The faster you think it's going to happen, the more copper or steel we'll need. And so even if you don't care at all about sustainability, you've got to consider those things with regards to what do you think will happen to the supply demand? What will the price do? And then specifically today, relative to 5 years ago, the risk of inflation has gotten massively larger. And so the need for inflation hedges is more important. So now you're looking at an asset class of, let's call it metals, even though, steel and iron ore aren't exactly a metal, but you look at this whole class of things and you say, financially, this makes a lot of sense to me because I see the supply demand imbalance. From a risk perspective, risk of inflation is one of my biggest risks in the portfolio. And from a sustainability perspective, I want to pick, these commodities because they're what's needed for a more sustainable world.
So quick follow on that, and then I definitely want to unpack what the EU announced today also, because I think this fits obviously both in your wheelhouses. But Karen, if you take something like cobalt, for example, I know it's specific, but clearly that's huge in the EV battery market, right? And we're going to need the batteries in many different industries to make this transition work. But it's mined in the DRC, and there's not a lot of it. So like, how do you filter sustainability when there are just so many parts to it, right? Like copper's relatively cleaner when it comes to emissions, but like iron ore isn't. Like, so how do you think about the whole pie?
Carsten, you want to take that?
Yeah, so I think
pointed that one. She's like, bye-bye.
Yeah, that's right. Cobalt is a great example because it's a reminder that you have to look through the entire supply chain when you think about sustainability. So if you look at those beautiful electrical cars or other types of green infrastructure, a lot of it relies on cobalt, as you said. You mentioned the DRC, like a third of the cobalt mining is in these artisanal mines with lots of child labor and other bad things. So ultimately, I think for an investor, what we're really trying to build out is a very systematic way of analyzing sustainability, where as much as possible, we try to decompose a supply chain. Like you look at a particular company, you would look at, to make it concrete, you look at products and services of the company and see, is that sustainable? But then really drilling in also to how these companies are operating and what their supply lines look like. And one of the great news when it comes to sustainable investing is the very significant development of a whole new sustainability data ecosystem that enables us to actually try to understand these issues better. And so, for example, thinking about really the provenance of where, the supply chain, where the metal is coming from is important. But it's also fair to say that this is not easy. We don't have perfect data. And sometimes there are also clear trade-offs, meaning you have to go in and weigh, okay, so we see the production, how is that done? Is it above the bar in terms of what we want from a sustainability perspective? And what will be the usage of it? I think we will see much more focus on, when it comes to sustainability and the environmental angle, one, I think, very important point is to consider not just the environmental aspects, but also this kind of the social derived consequences of it. So in a way, modern slavery is a horrible thing, and it's often associated with some of these things that are needed for the green transition. So I think really having this holistic view of not just the first order effect, but the second and third order effect, which often is deep in the supply chain.
And just to build on what he's saying, since I know I passed that off as a hard question, I mean that I think our biggest strength coming to this is that a lot of these issues for investors, they're kind of hidden inside what you're buying. Because let me tell you, no one is coming to investors saying, please buy my company. I use slave labor to make cobalt. Nobody's going to tell you that. So it's not like an investor, you're going to kind of see that written out. So when an issue like that comes up, I think the question is for investors, no one's going to have the manpower to be like flying around the world and showing up in the DRC and tracking themselves where the cobalt's getting to. So we need to have investors like Bridgewater that have built years of experience taking huge, vast quantities of data and being able to process them and be able to kind of direct them and say what's really inside everything. And just like a Bridgewater can look at, I don't know, what's going on in Brazil and route that all the way through to which credit card receipts are we seeing in Brazil. We really need investors to be able to do the same thing, to look at a company and say, actually, you're relying on cobalt that's coming from these mines. You need to change your supply chains in some way, because no one's going to tell the investor that willingly, saying, I'm really worried I have child labor sitting in these mines. And so applying that sort of data analytics, rigor, and systemization to go from the concept of this is what I want in the companies I buy, all the way to actually being able to see it, we think is a really important part of the equation.
So to that point, and I swear we're going to get back to the EU and behavioral changes and such, how does China then, how do you think about China? Because that is a very complicated market to begin with. And then you throw in sustainability and it gets even more complicated. Bridgewater's big in China. So Carsten, like, what's the screen there? Like, how do you manage that kind of investment?
So the way we would approach it, the first question is, are we looking in portfolios that have a risk and return orientation or risk, return, and impact orientation? If it's the latter, where we would, for all securities, we would try to assess what is really the alignment to the UN SDGs at a very granular level. So the way we would evaluate, for example, a Chinese company is the same way we would evaluate any other companies in the world. We would look at the products and services of what they do, and we would look at how they do it. And so that's the assessment we would do. And so, for example, you might look at a company that does, let's say, recycling of materials, and we would look at, okay, that's an important, let's say, aligned activity to do for a sustainable future. And then you look at how they do it. I mean, you look at labor practices, you look at their environmental practices, all the other things, and ultimately we would make a determination. And so we will make that assessment the same way there as we would in any other place when it comes to assessing the impact, if it's for these impact-oriented portfolios. And then in China, as well as in other emerging markets, I think it's fair to say that making this assessment is still hard because the data is not as great as it is in other markets, although that is improving rapidly. But ultimately, we would try to apply the same process, not just across companies, but really across asset classes. And I think that's another important point we try to do, which is really to have a kind of intellectually consistent framework across, whether it's commodities like Karen just talked about, equities, fixed income, really all types of securities that you could invest in. So it's consistent across asset classes and across geographies.
Karen, I'd love to get your take on that too.
I think that as investors, the most important thing we need to accomplish on China is really a better data ecosystem. Because look, China is the second biggest stock market in the world, and there's a huge range of companies there. And so it's easy to point to a lot of things happening in China that are very inconsistent with a sustainable future, but there are also a lot of great things that are happening there that are critical to a sustainable future. Some of the most innovative companies in the world are there. If you basically say, where are the innovation ecosystems where new things are being created that never existed before? It's Silicon Valley and it's China. And so as investors, we really want to be able to tap in to all the companies that are making goods and services that are going to contribute. And right now, it's just very hard to do that in China. A lot of companies, they don't have a lot of work in English. They don't have a lot of transparency. And so our big push as investors is to say, we would like to create the Chinese ecosystem to be as approachable and accessible to US investors because we think it's huge and has a lot of possibilities. And that'll both shine a light at what needs improvement and give us access to a lot of the great things where we want to be really moving and providing capital and coming in as investors saying we want to be proactively giving capital to companies that are going to make a difference.
On the flip side, does the further shift to sustainability make some things uninvestable? And this is where I want to bring in what the EU did today in terms of their Fit for 55. So they're super aggressive in terms of hitting some of their targets. A lot of that's going to come from the aviation sector. So planes that we're going to take in Europe, for example, need to not use diesel. They need to use biofuels. Big shift. Autos, same kind of thing. I mean, if you move too fast, Karen, how do you invest in an airline when they're literally going to have to change their entire model in 10 years? Are there things you just can't buy?
Well, I think what's fantastic about what the EU is doing is that the policymakers really set kind of the guardrails and incentives that shift what companies need to be doing. And so investors can only do so much in saying we'll make cost of capital cheaper or more expensive, we'll provide you capital to do certain things. Regulators can accelerate that a lot by putting regulation in place that shifts it further. And so a lot of what the EU is doing is it's making the incentives for companies to go transition away from carbon much greater, both carrots and sticks, saying you've got to go do this. And then as an investor, whatever is the regulatory framework, that's the background. It's sort of like, those are the rules of the game. That's what regulators have set up. And then as an investor, you want to support and reward companies that are going to be able to live up to that challenge. So I think there's a great setup in Europe for airlines, for car companies to say, we have a plan that will have us, instead of suffering from these regulatory changes, actually, succeeding from them because we can do it. And that investors should be punishing companies that can't handle the new regulatory regime and can't make those shifts.
Carsten, what do you think?
I think that's exactly right. That ultimately, as Karen said, investors can do a lot and we have to lean into it. Companies, of course, can do a lot, but we need the policy framework to create the clarity around it. And so to the extent that these new EU rules, and hopefully followed by more global agreements on these important topics, it's just a helpful background for us investors to then go in, not just and understand how this will play out, but also to invest and align capital to these sustainable outcomes. The reality is, if you just look at how much discussions and chatter there has been among investors, I guess among the world community, around what will the implications of this transition to a low carbon economy, what will they mean in the near term and in the long term? We're all researching it intensely. But the reality is, it's a hard question when there's such broad policy choices that are still unclear. Carbon tax, no carbon tax. A lot of the things coming out of EU today are, first of all, we don't exactly know whether it actually will be implemented still. But if you don't have clarity on that, the range of outcomes is so broad. As an investor, you really have to take into account a lot of different scenarios. And the more you can kind of narrow in the scenarios from a regulatory perspective, the easier it is for investors to allocate capital aligned with that.
Well, especially when like different countries move at different paces and are more aggressive than others, like that's got to be really complicated. We have a question from the audience, and I feel like I'm going to maybe go to Carsten on this, but it might be better for Karen, so you guys can pick. Does Bridgewater publicly take a certain stance on various ESG factors or outcomes? This example the viewer is talking about is a stance on palm oil, or is it has to be an investment decision on a case-by-case basis?
So our overall approach to all of our investment systems is to try to first have our own fundamental understanding of issues, whether that's macro or whether that's sustainability alignment. So the first point is we try to come up with our own understanding of the issues, and we do that in a way that is as systematically as possible. So not case by case. We try actually to start at the high level of saying, you mentioned palm oil. We would actually start at a different place, which is, let's think about commodities. How would we think about sustainability in commodities? Start with that conceptual framework. And then we would go out and build out collect the data that we need to build out that picture. And then really try to, like say, the way we think about palm oil versus other commodities, it would be done like in a consistent manner. And so I think that's the first point. And what we do in terms of sustainability is really to try to use alignment to the UN Sustainable Development Goals as our orienting framework. What's very important to us is we don't want this to be about our views on certain things. We want as much as possible to anchor to the UN SDGs. Why? Because that really represents the global consensus of a sustainable world. So if you take something like palm oil, it would be part of our overall commodity assessment, and then we would see, okay, how do we think that aligns with overall UN SDGs? And we would look at, again, how is it produced? Is it sustainable or not sustainable? And what is it used for?
Karen, did you want to add to that, or?
Just to emphasize that we really believe in making those choices principled and transparent, because we feel that too much in this space comes down to sort of personal opinion, and that weakens the space. And so the more you feel like, Bridgewater has an analyst that really feels strongly about X, or that talked to this management team and got convinced about Y, the more you kind of say, this is a personal opinion issue, as well as I can't replicate it because I'm not going to have 1,000 analysts talking to everybody. What we really tried to do is, on any decision like that, be able to kind of share, these are, the principles we're trying to put at play. Here's how we systematically measure them and triangulate those measurements, and put that out there both so it's useful for others and it's more defensible, and it isn't like Carsten and Karen's personal opinion on the topic. And so, Carsten said in the commodity example with palm oil, you can look on our website and we have, our paper that lines up every commodity market in the world on sustainability of production, sustainability of consumption, how we measure that, how we triangulate the data, and therefore what we think the best and worst is and why. And hopefully that'll change and keep evolving over time. And we want to put those things out there for that reason. And any choice we make, be able to say, here's how we triangulated 3, 4, 5 pieces of data. Here's the type of questions we're asking. And then here's what would make us change our mind. That also makes engagement with the world a lot more principled, because it's less like I have to impress and sound good to Carsten or Karen, and more like, this is what they're measuring. This will determine if I'm in the portfolio. And these are the things that will actually make a difference.
And just having the two of you with your experiences in those specific roles sort of really highlights that. A couple questions coming in. So I think you mentioned this earlier. This one question, I guess maybe for you, Karen, is, or Carsten, do you engage with management teams to try and affect behavioral change? Is that something that would be a mandate for Bridgewater or no?
So really, as part of our these new portfolios where we seek to have this both risk and return and a sustainability impact, we are and we will. And the idea there is try to engage constructively with companies with the starting point for us of our understanding or our assessment of whether a company is sustainable or not, and then having engagements with them on around issues that what we think there's a potential for them to improve in some of these sustainability areas. So that's that's certainly part of our overall sustainability effort. It's a topic that I feel strongly about. In some of the Northern European countries, there's a very long history of this among the asset owners. I wrote the Stewardship Code in Denmark, which really is about how institutional investors can do this. And one of the lessons I had from then is there's no one size that fits all for all investors. At the end of the day, to have constructive engagement with clients, with companies, in my view, is the more it is an ongoing, constructive, fact-based dialogue, the better. And then, of course, there's also the reality of, are you a large, long-term shareholder? Are you a small shareholder? I mean, all those things will dictate how these engagements will proceed and how they can be most constructive. But clearly, corporate engagement is an important part of a sustainability effort.
So, Karen, this is the last question for you. It's a question from the audience. You sort of hinted at it with commodities, but the question is, what are the themes around the corner, the issues, themes that investors should be thinking about? And I think it's a fun question for you because you can kind of fuse the macro investment perspective with sustainability.
Absolutely. Let me say that I think that in some sense, everything on the environmental side is already kind of thought about in terms of there's no investor that hasn't figured out that every government in the world has made a net zero pledge. And so the world's going to try to move away from carbon. It's kind of on everyone's horizon. When it comes on social, I think that's a lot more amorphous. And a lot of people mean different things when they talk about that. And investors are going to have to figure out what's actually important about social. What are actually the social issues that'll matter to their portfolio? And that's where I'd say, look to the Fed. Look at what are the issues that U.S. policymakers are saying, this is impacting my views on conditions. And so when I look at the unemployment rate and I'm the Fed, I'm not just thinking things are great. Part of the reason that the Fed really hopes inflation is transitory is that it's thinking, well, there's a lot of pockets of the employment market that are not doing so well. What is it talking about? It's talking about inequality, how you get the expansion to get to all the different parts of the country. And as that weighs on policymakers' minds, that's going to matter for investors. When you look at why Biden is pushing so hard, not just to go for the bipartisan infrastructure package, he's saying, well, I want to remake the economy from an inequality perspective as well. So these are big issues that are impacting monetary and fiscal policy that investors have to be thinking about. Then you look at other social issues that in other parts of the globe are just becoming part of regulation. We've talked a couple times about labor standards with regards to commodities, but Australia has taken a big stand saying that modern slavery is an issue that just from a regulatory perspective, every investor is going to have to report on and try to figure out where that is in its supply chain and how it's investing. And so I think that's just right around the corner that investors are going to have to, in other parts of the world, say, how do I make sure that key social issues, as extreme as slavery or child labor, are actually addressed in what I'm investing in. And so to me, that's sort of the next frontier that's harder to measure than just looking at carbon emissions and going to become critical for investors to think about where it fits into their portfolio.
Such a good point. You guys, I could talk about this for the next half hour, but we all got to go. So Karen, Karsten, I really appreciate it. Thank you so very much. It was a real pleasure to talk with you guys today.
Thank you very much.
Hi, my name is Scott DeVoe. I'm a deals reporter here at Bloomberg. Cover shareholder activism. This year, we saw one of the most interesting proxy fights that I think I've covered in my short time doing this, or long time, I guess. It was a first-time activist named Engine No. 1, about a $250 million fund, took on Exxon Mobil, the oil and gas giant, and managed to win 3 seats on the board. It was a shock to a lot of people, but a lot of people also saw it as a watershed moment for so-called ESG activism, which focuses on environmental, social, and governance issues. We've got a great panel here today to discuss it. Obviously, there was a lot more to this fight than ESG, but I'll just take a minute and let everybody introduce themselves. Jennifer, would you care to start?
Sure, Scott. Great to be here and looking forward to talking about this particular topic. I am the CEO of Engine Number One, and we started the firm at the end of last year. So look forward to speaking with everyone here today.
My name is Ayesha Mastagni, and I'm a portfolio manager in the Sustainable Investment and Stewardship Strategies group of the CalSTRS Investment Office. We're the $300 billion pension fund for the California educators and their families.
And Lorraine.
And I'm Lorraine Kelly. I head the governance solutions business at Institutional Shareholder Services. We're an ESG company, probably best known for our governance and research and voting recommendations. Also a pleasure to be here today to speak on this timely topic.
Great. So I think it's important that we establish some of the background at Exxon in order to understand what really happened there. Ayesha, CalSTRS has been a long time investor in Exxon. You've had lots of discussions with them in the past. Would you be able to give us some background as to why you think that maybe they were in a position to lose such a lopsided battle proxy fight?
Sure. So at CalSTRS, we do have a long history of engagement with this company. And I think there were some key milestones along the way that led us to partnering with Engine Number One in terms of trying to get new leadership inside that boardroom. You know, the first was starting back in 2017. There was a shareholder proposal asking the company to present a report on the risk of climate change to their organization. That proposal actually passed by a majority support, so it was widely accepted and wanted by several investors and shareholders. But the company basically ignored that proposal. You sort of fast forward to the 2018-2019 time period, and organizations like Climate Action 100, which is a collaborative group of investors that are engaging the largest global emitters of carbon and trying to get commitments from these companies in order to make their organizations more resilient as we transition to a low carbon economy. And Climate Action 100 couldn't achieve any type of commitments or reductions from Exxon. Fast forward again to the 2020 annual meeting, CalSTRS actually decided, because of the lack of responsiveness from the company and from the board, we voted against every single member on the Exxon board in 2020. So it was a natural progression when Engine Number One brought this idea to us about really making a change inside the boardroom.
Okay, Jennifer, I've heard you refer to the strategy you adopted at Exxon as being the tip of the spear. Obviously, you didn't have a big investment in Exxon, but you obviously had a very large impact on what happened there over this proxy season. So I wanted to ask you, how did you know that you had the right company and the right ideas?
Thank you. I mean, we put together the company, so Engine Number One, where the whole idea for us is, companies and boards and CEOs have a responsibility to understand their industry, how their industries change over time, and how you respond to these changes. So Engine Number One as a firm is all about looking at companies and looking at their impacts and thinking about how do they take those impacts, into account in terms of driving their long-term value. And so if you think about that idea, Exxon, as Ayesha said, Exxon is a place where the industry they're in is changing, and it's changing because technology is changing, tastes are changing, regulations, all of the above. And so we thought about Exxon as a place where change needed to happen. And how does change happen? You have the right people on the board. And so it was natural for us to make the case and do the work on the analysis and how do you think about it and what were the skill sets that were needed on the board. But it also made sense for us to partner with organizations that, as CalSTRS has been doing, as Aisha mentioned, have been working on this with Exxon for a number of years. And so in a way, in this case, we did the work on what change could look like and what skills were needed on the board. But then as we went out, we could be the tip of the spear as a new firm in making this case and frankly, bring other large investors with us.
Well, that's the interesting thing, too. I mean, you did garner the support of some major institutions outside of CalSTRS, BlackRock, Vanguard, State Street, and all of these institutions are clients of ISS. I mean, so what surprised me about this fight in particular was that ISS and Glass Lewis also threw partial support behind engine number one in this. Without going into too many details, Lorraine, would you give us an idea of how ISS is thinking about these kind of ESG issues, versus, say, capital allocation and which, carries more weight?
Well, I think, Scott, first of all, from our perspective, ISS opines on the agenda items that are on the ballot. And what I think you're hearing and seeing is we're getting more situations and more agenda items that are ESG focused on the ballot. In the case of Exxon, I think we saw both. We primarily saw the capital allocation issue, but we also did see that Engine 1 made a very good argument for sustainability and for the need to change. So I think at Exxon Engine 1, you really saw both of those issues coming together. In terms of how we weight them, it's very situation specific, and you really have to look at, really everything that Aisha brought up in terms of what is the history, everything that Jennifer brought up in terms of what is the current situation in order for us to come forward and provide a recommendation to the marketplace.
So Jennifer, you're not just going to stop as an activist fund. You've recently launched a new ETF that has a similar kind of bent on ESG issues. Can you tell us how your ETF is going to differ from a typical S&P 500 ETF?
Scott, thank you. Yes. So at Engine number one, we think about it as being able to work in different ways with different companies and also provide access to different clients. So, why an ETF? Well, there are a lot of people that are looking to track the market, and you may be tracking the market just to drive returns, but people that want to have impact and want to help people, companies, think about how they drive to long-term value. They want to be active owners of these companies, and they have a vote. I mean, definitionally, if you're holding an ETF or a mutual fund, you own those shares, and you have an opportunity to vote those shares by choosing a manager that's doing that actively. And so one thing that we can do at Engine number one is we can do an economic and impact-oriented proxy campaign and an activist campaign like what we did with Exxon. And we launched the Vote ETF. There's a little clue in the name there, and we gave it the ticker vote. We launched this ETF because it's a way for people to stay invested in these big public companies over time. And then we, as the manager, will vote very actively. So instead of meeting in the middle or taking many years to get to a point of view, we'll be very assertive in looking at each company and using those votes on behalf of the shareholders to vote on issues each year. And then the ETF can also participate and take advantage of engagement campaigns or activist campaigns that the firm does over time. So we think it's a good way for people that want to hold companies accountable and be invested for a long time to also be very active on E, S, and G issues as owners of these companies.
So how will this work practically? I mean, will you be putting out papers or recommendations ahead of a vote with the idea of maybe persuading others to vote in a similar manner? Is that the idea? Or?
Yeah, so at Engine Number One, we certainly will have a point of view and we'll publish. But like in the case of Exxon, we will be more effective if we're working with coalitions of other large investors and pools of assets on these issues. So yes, we'll be active in telling everybody how we plan to vote and talking about why and putting content out there. But we also plan to work with other people on these issues because we think, like in the case of Exxon, coalitions on some of these issues to not always to be activist in an aggressive sense, sometimes, frankly, to be constructive and help companies think about how these impacts affect them today and how they'll affect these companies as they go through transformation over the next 5 to 10 years. So both active in publishing and having a point of view and voting aggressively and working with other big institutional investors. That's a critical part of our strategy.
And I can chime in here.
Sorry. Yeah.
No, I was just going to chime in because I think that, we as investors, that we have a whole suite of tools available to us in order to effectuate change. I think it starts with that vote, like Jennifer was talking about. Then there's private and public engagement. And then you sort of go to the other extreme, which is, the case with Exxon, where you're actually running a public campaign to replace board members. And there's lots of things in between. And so I think it's just taking advantage of all of those tools that we have available to us as shareholders to make change and make these companies better and more resilient for the future.
Well, that's what I was going to ask you as well. I mean, it seems that that CalSTRS is one of those funds that actually they disclose their where they're going to vote ahead of a vote generally to give an indication of where you're going. So it seems like you're doing something similar to what this ETF contemplates. But I was curious, like, why don't you run campaigns yourself as CalSTRS if you have views on these things?
Sure. So we definitely do post our votes. We try, not only because we're a transparent organization and a public entity, but we try to use our votes partially to help inform the marketplace. If anyone wants guidance, it's available on our website. As for the public campaign, Engine Number One, what they really brought to this was the core, fundamental analysis and the ability to partner with various consultants, the ability to source the quality candidates that we found. That's not our role. We just don't have those resources. And so Engine Number One really brought the resources to run a campaign of this scale. I think what we brought to the table was, one, our long history of engagement with this company and, our long-term capital. We're not short-term. We're here because we want to provide a safe and secure retirement for our beneficiaries. And so I think that's why the partnership it works so well.
So Lorraine, ISS is in a really good position to monitor these kind of shareholder proposals as they're presenting themselves, and the uptick in ESG proposals. What are some of the trends that you're starting to see over the last year or two in terms of the proposals and how shareholders are reacting to them?
Yeah, great question, Scott. So 2021 was a really breakout year for ESG and shareholder proposals. If we look at the top line numbers, in the US alone, we saw about 500 proposals this year compared to 445 last year. And the majority support is already up 46%. If you drill into climate, I think this is where it really gets interesting, because it seems very clear that many shareholders are holding the boards accountable for risk mitigation in the area of climate. So we saw a record number of proposals in the climate space, and there was really three flavors. So the first was reporting, requests for proponents wanting a report on your plan for reduction of emissions, perhaps aligned with the Paris Accord or with a net zero initiative that we've heard mentioned. We also saw proposals on lobbying spend, where proponents want to know what are the expenditures going towards climate lobbying. I think it's certainly notable here that a number of those proposals got majority support, with Exxon being one of those. They certainly weren't alone. We did see United Airlines and Delta Airlines with them and a few others. And then the last proposal category we saw was a new type of proposal this year called Say on Climate. And so if you think back to the Dodd-Frank days, a little over 10 years ago, when the SEC mandated companies to put CEO pay packages up for review, this is somewhat analogous in that the proponents are asking for a report on your emissions and your plan for climate, and then they also want to vote on it. So I think what we are seeing is multiple ways within shareholder proposals to really express those voices and views. And thus far, we've seen, I think, 12 of those proposals get majority support. So again, a trend that we see moving forward for sure, with investors looking closely at shareholder proposals and how they can, wield their voice.
Well, I would open this up to everybody. I'm just curious why now? I mean, Lorraine, do you have a sense of that, or Aisha or Jennifer, why now?
Yeah, I think when I look at it from our view and the metrics on the climate shareholder proposals and the support levels, if you look at 2017, you've seen an average support of 27% to now an average support of 58%. So it has been gradually climbing, but I do think this year was very, different. We noted Exxon, we noted the participation, but we've also had a lot of investment managers really publicly pledge that they are going to commit to a lot of these climate initiatives. Many of the investment managers and certainly the asset owners have signed this net zero initiative. And so now it's about, walking the walk. And I think that's what we've seen through this Exxon, Engine One scenario is, as you noted earlier, a lot of the large investors voted to support Engine One. So I think that, there is a real view that these are not special interest issues, that these are real material risks to these companies.
And
right.
I'll just add that I think it's really about, the links between climate change and financial performance are just increasingly intersecting. And there's a recognition by the broader marketplace, like Lorraine said, that recognizing that and really wanting to make sure that the companies that are part of their portfolio are going to be resilient in a changing world.
And Jennifer, I mean, you must have some thoughts on this too, because you launched a fund with this kind of focus. There are certainly, there are a couple other ESG focused funds, but it's still a pretty small group of investors that are focused on these types of things. Do you have a sense of, why now?
Yeah, I mean, I think to build on what Lorraine and Aisha said, the why now is, I think you have organizations that care about the long term. You have wealthy families, you have millennials who have a genuine concern about sustainability. And at the same time, I think we're doing a better job across data industries and the investment industry of linking with data these impacts and the climate impact to the pure economics of how companies will perform and thrive over time. And so I think it's the combination of a desire to be thinking about sustainability of businesses and planet, but also a lot of work to make sure that these become economic issues. We can use data about carbon footprint and how businesses are run and how they're planning their forward years, and we can turn that into economics. And I think people can agree when it comes to economics that there's a better way to run a business sustainably over time. So I think that's all coming together. And for us, that was part of why we think this is a moment in time where we were successful, together with other institutional investors on Exxon. But that's also what drove us to launch the VOTE ETF, because it's not a divestment-oriented product. It's a product, so a lot of early ESG funds change the weighting or divest from certain stocks. And so we think that now is a moment in time where people actually, they want to hold the big companies. They want to help the big companies transform, and they want to link economics and sustainability. So that's sort of why now for us on launching this Vote ETF.
So the other thing that I found kind of interesting about the Exxon fight, Jennifer, was how many different investors came forward and said that they supported you in advance of the vote. Lorraine, have you been noticing more investors coming out in advance of votes? I mean, we talked about it a little bit earlier, but it seems like it's something that's happening more and more.
Yeah, I think that and the ISS view is very notable about the situation with Exxon, because I think, investment managers have tended to hold their vote decisions, close to the vest and really wait until their, regulatory filings, whether that's with the SEC or, whether they're doing other types of stewardship reporting, to disclose this information. I know, Aisha, your organization with CalSTRS, you guys have disclosed in advance for a long time, and many other asset owners have. But the investment managers, I think this is newer. So with Exxon, we did see, Legal & General coming out in May saying, they were supporting Engine One. And then on the day of the vote, I think it was both BlackRock and Vanguard, issued, their statements that they had some support for Engine One and provided detailed analysis on their decision. So I think these are definitely watershed moments in that regard. And we definitely hear from more investors that they want to do that. And so, we've been working to evolve some of our tools within our vote disclosure service to help facilitate that. But I think it ties back to something that Jennifer said earlier, which is people do want to own these big companies. And so they're looking at ways that they can help affect that change. And certainly using their vote and using that voice is one of them.
Jennifer, was there anything that you did differently, or that would elicit these kind of investors coming forward, or was it motivated internally by them, or was it something that you urged them to do yourself?
I think to go back to something that Aisha said, two things when it comes to Exxon. One, a lot of institutional investors were already talking to the company and working with the company and looking for change. Two, it's easier for big pools of assets to have a conversation with a company if it's an economic and strategic discussion. And so for us, jumping into a conversation that was happening and trying to provide a set of data and analysis, and the team on our side at Engine One talked to other CEOs, other boards, talked to people about what were the skills needed in terms of CEOs that had led successful transformations in the past. How do you lead a company through change? Having the right skill sets in the energy industry to help Exxon. And so going in, we were able to do some of the analysis and the work to try to suggest how you might augment the board and what the right skill sets might be. And so I think that was frankly additive at a moment in time where a lot of other institutional investors were looking at it. And then, yes, in an example like this, there is a degree of making sure you're being persistent in having conversations with everybody on the way into the vote.
So I think a lot of people are going to probably look at this fight as a template for things that they want to do in the future. I'm curious, what your recommendations are for them, because, there was an ISS report that came out last week in another fight that said, ESG issues can't be a talisman people whip out whenever they want, in the middle of a proxy fight. So I'm curious. What were the lessons learned here that other funds might be able to adopt and take to different companies? Aisha, do you have any thoughts on that, or?
Well, I'll just to go back to what Jennifer was saying too. This was successful because there was a sound argument and the credible directors that they sourced to put on this board. And so I think that's really the lesson learned here, because, we start out at the beginning with engine number one talking about, where's the path to value creation? And because we wouldn't have done this and we would have invested the resources in this unless we thought that there was value to be had. And so, engine number one brought that sound financial analysis and what we thought was strategically this company needed to do in order to create that value, and then going to find those individuals that we thought could help drive that value inside the boardroom. So, I think that's really the playbook. It happened to be, that this was a company that had severely underperformed the market and its peers for 10 years. It had been quite recalcitrant when it came to engagement with its shareholders and investors. And so all of that led us to, this monumental vote back in May.
Jennifer, do you have any thoughts on or advice that you might offer other funds?
I think Aisha summarized it well, which is, to think about it as an economic argument, and then to bring ideas that can help the company have the right skills. And, listen, there are probably every industry is going through a huge amount of transformation in the next 10 years. And so thinking about what does a board need, what skills does the board need, what capabilities does the company need to be able to transform and to make it an economic argument. That would be my advice.
Okay. We don't have a lot of time left, but I do have one more question. In the middle of the proxy fight, Exxon decided that it was going to do a number of steps. It started trumpeting its carbon capture mechanisms. It essentially added 3 board members and then promised another 2 directors after the vote. Was there a point that you considered declaring victory based on those things, or why did you keep the pedal to the metal on it, as it were? Jennifer.
Yeah. I give you my take on that, which is, we thought there was a case for change to drive value for shareholders, and so making sure that we sort of saw it all the way through to make an argument for the right skills and the right directors to be added to the board. And until we got to the point where we thought that had been achieved, we were still in the fight. And we think we got to that place, and look forward to seeing what the new board with the new directors can accomplish in terms of long-term value for the shareholders.
Aisha, Lorraine, do you have any other thoughts on why that wasn't sufficient? Either to not garner support from ISS or CalSTRS?
Yeah, no, I'm happy to jump in here because like I said, we identified, the path for value creation, and then we identified the skill sets that we thought were necessary in order to achieve that. And it really was around, this was a board that needed more industry expertise. It needed policy making and regulatory experience, and it needed individuals that had gone through this at other companies that were in transformation. And while I think that the 3 board members that Exxon originally added filled some of those holes, it didn't do it in the critical mass the way that engine number 1 directors did. And so, we stayed true to the course because we knew that these were the right people with the right skill sets in order to achieve that value.
All right, Lorraine, we just have a few seconds left. Do you have any thoughts?
And, I was just going to, comment that I didn't want to talk as much about that particular thing, but I do think that companies are responding as well. And when I talked about the Say on Climate proposal earlier in this session, we saw globally about 20 clients put that up as a management proposal themselves. So I think that all of this activity is moving the dial with our companies as well as with investors, and that's a good thing.
Okay, well, thank you all for coming here today. It was a great discussion. I really do appreciate it. And best of luck on your new campaigns.
Thank you.
Thank you.
Thank you.
Hi, I'm Karen Kimbrough, Chief Economist at LinkedIn. And lately, we've been doing quite a bit of work trying to understand the world of the green economy. What is the intersection between green skills, green jobs, and the future of the world of work? So I'd like to take a couple of minutes and share with you some of our findings in the past year and what we're seeing going forward. First off, why is this important? Well, in a macro context, climate change is one of the largest threats facing this current generation. And what we're seeing is COVID has been a little bit of a catalyst, if you will, kind of a unique opportunity to kickstart some work by the private sector and the public sector to support what you might call a green recovery. We're seeing transitions towards this through the relocation of resources. We're seeing it by activities driven more by low carbon efforts that are more resource efficient. And so we want to be a part of this at LinkedIn and share with you what our data is showing us about how jobs are evolving to meet this need of this green recovery, if you will. So maybe let me start off first by saying, like, what are green skills? Green skills are really the skills or knowledge that a worker has to show them how they can help optimize stewardship or conservation of natural resources. It can be anything related to how they produce goods or services. And in our work, we looked across 800 different possible core green skills. We included skills that not only that people have in what you might call traditional green jobs, but also skills that people might have in non-green jobs. So think of that as you might be an ecologist, is a very traditional green job, but a non-green job might be something in sustainable investment. So what we're seeing in this sort of look across green skills is that they're growing across most industries. What that means is that if you think about skills that are extremely green, if you will, that might be something more towards construction or healthcare, or public administration, which has a lot to do with how cities plan the use of their green spaces, their walkways and bikeways and transport. All of those are much more advanced in terms of industries with green skills than, say, some of the others, such as media or legal professions, which are typically less characterized by core green skills. One of the things that we're seeing right now in our data that I wanted to highlight also was just how much take up there is by employers for green skills. When we look at hiring rates across the range of different countries that we can see, and at LinkedIn, we have a span of a network that covers the whole globe with 700 million members, 55 million companies. And what we're seeing is that the hiring rates for people with green skills is 1.5 times faster than for those without green skills. So it's telling us to some degree there is a demand, if you will, by employers for green skills. People are getting hired more quickly when they have them. And it's not really a surprise to us. We're seeing it when it comes to anything to do with ecotourism, anything to do, again, like I said, with healthcare, with public administration, but also construction and transport. And so what tells us is that the shift to the green economy is well underway. Many of the skills that are being sought after are highly specialized. They can be things like for environmental scientists or sustainability managers. But we also found green skills that are trending among professionals in roles that are not at all traditionally green. Think about something like environmental finance, climate risk management. So portfolio managers and investment analysts are looking for more climate expertise to assess risks and think about where they want to invest. So with this shift well underway, one of the things that's come to mind is the fact that the ILO, the International Labor Organization, has estimated that as many as 24 million jobs could be created by 2030 that are in the green economy. This is actually not that many jobs, to be honest with you. There are millions and millions of jobs being created every year in the US alone, not to mention worldwide. So 24 million is not huge. What I think is almost the bigger set of news is that so many jobs are increasingly incorporating a little bit more of green skills. So employers are increasingly focused on hiring for green skills rather than just degrees. I don't think we're going to see degrees change. What people study at school is not going to evolve as much as the content for whatever they're getting the degree in. So let me give you an example. Think about an architect. Architects still need architecture training. They still need architect degrees. But while they're studying, one of the things they're going to start to learn is maybe drafting classes that give them skills to develop buildings that incorporate more daylight, more natural light to light buildings as opposed to using energy. These are types of skills that are going to remain within the architecture occupation. So we'll always have architects, but they're going to become greener over time. I like to think of this as a green evolution, not a green revolution. And it's going to take several years for us to get there, but we're starting to see it happen already with the skills that are increasingly coming into different occupations. So what industries are we seeing that are, really reflecting this demand for green skills? I would say there's no one single green industry anymore. We're seeing green jobs across a span of industries. Think about fashion and sustainable fashion. Think about technology and the use of data managers, thinking about what's the energy load on their network. We're thinking about the transportation industry and fleet managers who are suddenly redevising how they think about what their fleet should look like and how they repair that fleet and manage that fleet and how long it lasts. So all types of jobs are changing, and they're across all industries, but they're happening at different rates. One of the things that I probably will, most stress is that we're seeing the fastest growth in demand for green talent in the energy and mining space, which is no surprise. But at the same time, we're seeing maybe a deeper set of green skills concentrated in some of the industries I already mentioned. So for example, energy and mining is moving very quickly to hire more and more people with green skills, but the construction industry, manufacturing, they are already pretty well advanced and starting to think about what are sustainable inputs and products, how do they manage their suppliers and the procurement, and how do they essentially operate with a lower carbon footprint. And we're seeing that everywhere, not just in the US, but in China, in Brazil, and in Europe, of course, which is in some ways ahead of the US. And so finally, maybe in closing, I would leave you with just one thought or call to action. When we think about where the world of work is going in the future, one of the things that our data at LinkedIn is showing us very quickly is that people adapt to their environment. When companies take the lead, when companies set ambitious goals, people will strive to fill them. So my call to action is actually not to individuals, but to companies to be bold, to be ambitious, to invest in training of your employees. Because if you set an ambitious goal, people will strive to meet it. And I think that's how we advance this green evolution even further and even faster. Thank you.
Fighting climate change is one of the biggest challenges we've ever faced, but it's also an opportunity to improve public health, create jobs, fight inequality, and spur innovation. At our company and our foundation, we're tackling the climate crisis from every angle, including problems that have been overlooked or ignored. We look for ways to make the biggest impact, and we focus on what we can do right now to make progress as fast as possible, because we don't have a second to waste.
We will soon be starting to defeat climate change, and it is possible thanks to the leadership of persons like Michael Bloomberg.
In the fight against climate change, Bloomberg's efforts are unequaled. Here is all of our work across the planet, cities, global business, and more. Around the planet, Bloomberg steps up when others step back, like leading the charge to end coal power. Bloomberg has helped close more than 60% of America's coal plants, half of Europe's, and we're expanding to Australia, Japan, and South Korea. And we are moving the US to a clean energy economy. We work around the world, measuring and improving air quality. We protect our ocean and the livelihoods of the people who depend on it. We support ingenuity. And in the absence of climate leadership, we step in.
I want to thank Michael Bloomberg and Governor Jerry Brown, whose leadership has been critical in creating America's pledge.
It gave us something to hold hope for, and that is that we'd have cities and states actively working to address these issues.
Now with the U.S. back in the Paris Agreement, Bloomberg brings together the most expansive coalition of American leaders driving climate progress from all of society.
We cannot address climate change effectively without putting cities at the center of the agenda.
Cities are home to the majority of carbon emissions, but also the most innovative ideas for fighting climate change. As mayor of New York City, Mike Bloomberg improved the city's air to the cleanest it had been in over 50 years. Now, Bloomberg convenes the world's largest networks of cities and mayors committed to reaching climate goals. We consult with cities to design and implement climate-related programs. And Bloomberg challenges cities to aim higher, then invests to turn their climate ambitions into reality.
Fighting climate change and growing the economy really go hand in hand.
Businesses want to reduce the risks they face from climate change, but often lack the information they need to act. Bloomberg led the charge to create a global framework for climate-related financial risk reporting to harness the power of the markets in the fight against climate change. And we help emerging markets attract financing to cut carbon and grow their economies. We provide the global financial community with data-driven insights to help them integrate an environmental, social, and governance lens across their investment process. Bloomberg is the world's leading source of research, data, analysis, and up-to-the-minute news on all industries accelerating the transition to clean energy and infrastructure and a more resilient economy. We convene global and business leaders to discuss the latest topics in sustainability, climate change, and finance, including how to move the industry forward. We're encouraging more people to join the fight against climate change by sharing the stories of people on the front lines and the transformations they've led. We support innovators and thinkers who raise awareness through art and design. And Bloomberg is leading by example. Our employees are dedicated to making an impact in their communities. As a company, we're committed to achieve net zero carbon emissions and 100% renewable electricity by 2025. And we raised the bar for what's possible at our new London office, which was rated the most sustainably designed office building in the world.
If we work together and act boldly, we can win the global fight against climate change. Our company and our foundation will continue leading the way.
Hello, everyone. Welcome to Sustainability by Design, looking at how we can have a focus shift for a greater business impact using design. I'm joined by two leaders in their field to help me unpack that. Kirsty Lund is here. Hi, Kirsty. Kirsty's head of business Europe at Design It, which is a Wipro company. There, Kirsty is leading the European studios in Design It. And Design It's a design and experience innovation company, in case you don't know. And they're working with sustainability every day. In fact, Kirsty is. And it's fair to say it's not only work as well, Kirsty, is it? It's more of a passion that you're curious about as well.
Definitely, Phil. Definitely.
And it's great to have you here, Kirsty. And Lisa Chong is also with us, the CEO of the Index Project. Now, the Index Project is a non-profit organization in the business of giving recognition, guidance, and support to ideas that improve life. Some of those ideas turn into businesses and organizations using design to bring humanity forward, if you like. All of them apply sustainability by design. And I think, Lisa, it's fair to say you're witness to the impact they have.
Yes, absolutely. Thank you, Phil.
It's great to have you both here. And I want to dive in by just asking what it means to design sustainably.
And before we even go into that, Phil, probably we need to define what is sustainability, right? Because I would say that we put a lot of focus these days on the environmental part, which is super crucial. But I would say that sustainability goes much broader than that. For me, it's extremely important to also talk about social responsibility as part of sustainability as well. And I know both Lisa and I, when we do our walks around the city of Copenhagen and talk about different topics we're passionate about, this is one of them, that we want to also highlight and push that forward as well, that sustainability has an environmental part, but it also has a social responsibility part. So that's important in order to talk about sustainability, I think.
Yeah, I fully echo with what you say, Kirsty. And of course, when we talk about design, we mustn't forget the user being in the central part of the focus, and understanding the user's needs, right? So whether that's, for human or life-driven qualities, we're also focused on just making sure that the end goal isn't always profit margins, but ensuring that there's quality of life for people and planet.
Agree.
In terms of sustainability, it feels like we're paving the road as we're walking along it as well, and especially in many businesses. I've heard this analogy used before actually as well. What kind of challenges are businesses and organizations and even individuals facing when it comes to sustainability and designing with sustainability?
I think exactly that, actually, Phil. The fact that you have to pave the way while you're building or having very high ambitions, which is great. We see a lot of bold ambitions out there, a lot of really strong strategies as well. But at least for our clients that design it, we see that a lot of them taking that ambition and making it tangible and understand what kind of action you need to take to just get there requires a lot of thinking and requires probably a lot of different thinking than many businesses have done in the past.
Thank you.
Completely agree. I mean, yeah, no. So I mean, I completely follow that line of thinking, and I think maybe also the challenges for businesses is to look at new ways of measuring success and redesigning that. We've mostly come to agree that growth at all costs is just a mentality that we have to move away from. It's eroded our planetary boundaries, and it's something that we have to address urgently. So, strategies and plans and things that just only focus on growth and growth at all costs really have to be rethought, and no better opportunity than, in a way, the pandemic. We've seen how devastating it's been for people and for society and businesses at large. It's forced us to be existential on many levels. And that presents itself an opportunity, because this is a great opportunity to reset some of those boundaries and reshape the way we want to live our lives and run our businesses.
And I think
actually,
yes, sorry.
Sorry, go for it.
I think this has also opened up, which I think is essential for driving business or sustainable businesses, is to rethink the way that we think about partnerships. I think that what we're seeing is a very different way of partnering, commercial organizations with nonprofits, with governments, with even competitors that we haven't seen in the past, because we're tackling something which is much larger than ourselves. And we're actually questioning and putting each other accountable for that progress as well, which I think is a really nice thing, and has only been emphasized and highlighted even more as part of the pandemic, I would say.
I think that's really interesting what you say there about these opportunities, about the growth, about the partnerships, but also the environmental factor. I mean, Wipro, which is a company that owns Designit, they've committed to reducing greenhouse gases, net zero greenhouse gases by 2040. But I guess this is sustainability in general is not only about reducing, it's also about adding as well. Isn't that right?
Very much so. I think this is where design and innovation plays a huge part, actually, is to rethink, but also create new solutions that still is desirable for us as human beings, but are also thinking about planet and social responsibility while we're doing that. And I think as part of the index projects as well is that we've seen a lot of ideas that are really pushing forward and have sustainability at the core of the essence of the idea, let's say.
Thanks. Lisa, are you seeing any, sorry for the delay, Lisa, but are you seeing any examples in this field as well?
Yes, I mean, we see so many ideas and great examples that can really prove to be aspirational. Coming back to what you said earlier about adding value, I mean, we've just a couple of concrete examples. I mean, we've seen a company, for instance, called Ananas Anam. They produce a material called Pinatex, and that's turning waste streams into value by creating alternatives to leather and plastic leathers, for instance. So using, the bits of pineapple waste that would have just ordinarily been incinerated or thrown out or just wasted, essentially becoming something that's hugely valuable for brands like H&M, Nike, Hugo Boss. So creating some meaningful and tangible ways of turning something that's very, very wasteful into opportunities. Another example that I think is really, really exciting is a drone delivery company called Zipline. Many of you may be familiar with it, but that completely embeds impact into its core, and the business is centered around distributing medical supplies, blood platelets, vaccines in hard-to-reach areas. So, what's really beautiful about this company is that serving markets like Rwanda and Ghana first, and prioritizing, the sustainable growth in these regions by implementing best-in-class drone technology. I mean, that just completely challenges, where we see, the central hubs of innovation, not just being Western-centric or Northern Hemisphere-based, but actually, implementing the best innovative technologies in countries that really will thrive with that technology growth.
Thanks, Lisa.
Whilst improving lives, of course, and that's the beauty of it.
Absolutely. I bet you're sitting on many examples that come through the Index project, actually. It must be quite fascinating.
Yeah, absolutely. It's an absolute pleasure and privilege.
Kirsty and Lisa, thank you. Our time is up. I'm sure it's a discussion that we'd love to continue more. Maybe we'll get the chance to do so. I hope everybody watching as well, it sparks some ideas for them. So thank you for your time.
Thank you, Phil.
Thank you so much.
Hi, and welcome to what promises to be a super interesting panel on a super critical and super sometimes complicated topic. We have Matthias Berninger here, Senior Vice President of Public Affairs for Science and Sustainability at Bayer, Aaron Bloomgarten, Executive Director of Emergent, and Claire Lunt, Global Vice President for Sustainability at GSK. Did I mention that Matthias is from Bayer? I don't know if I mentioned that just now. And we are here to talk about offsets and an intriguing, ambitious, and vast new organization program that is designed to well, let's just dive right in. Aaron, do you want to tell us a little bit about the LEAF program, and maybe in the context of what audience members may already know about offsets? We've seen offsets as something offered to get rid of our emissions from personal travel, and we've now seen offsets used to offset the emissions from a shipment of oil. So what are these offsets that we hear so much about? And what are you doing to make them higher quality and safer?
Sure. So that's a big question. Thanks so much. And let me back up and just say, the LEAF Coalition is really designed to address tropical and subtropical deforestation at scale. It recognizes that not one sector has the tools alone to deal with this massive issue. The public sector, the private sector, philanthropy, civil society. So the LEAF Coalition is a public-private partnership designed to unlock massive new flows of capital to really change the incentives on the ground to reverse deforestation. Because we know deforestation contributes roughly 15% to global greenhouse gas emissions. There is no pathway to the goals of the Paris Agreement without massively reversing deforestation. So you mentioned offsets. There's a tremendous thrust now and interest from corporate sector to use high quality emission reduction credits, importantly as to address hard to abate emissions, supplemental emissions, right? We believe companies should be doing all they can within their operations, within their own supply chains and value chains to reduce emissions, and then use emission reduction credits as part of that supplemental approach. So very important. I think that's a really important principle. Our view is that nature, supporting and protecting nature, is really the highest and best use of those efforts. And so the LEAF Coalition now, which we launched on Earth Day at the White House Climate Summit hosted by President Biden, and it's intended to mobilize as a start $1 billion of finance, public-private finance, to provide long-term purchase offtake from tropical forest countries. We only work at the jurisdictional level, right? This is moving from projects to large-scale jurisdictional programs, because we know we've got to massively rethink what we're doing here and massively increase the scale of how we're addressing deforestation. We lose every year an area the size of Greece in tropical and subtropical deforestation. So what we're doing is not enough, right? So we need to do more. We need to not only double, triple our efforts, we need to sort of 10x, 20x our efforts. And that's what we're trying to do with LEAF.
Do you feel like you're in a sort of race against time, not only because of sort of the twin major issues of biodiversity loss and climate change, but also because there's enormous corporate demand for offsets, and we need to make sure they're high quality offsets. And interested for Matthias and Claire to pop in there too, if you have some thoughts.
I'll just start. I'll say absolutely. Look, I mean, especially when you talk about protecting forests, once these ecosystems are lost, they're often lost forever, or at least for a very long time. We hear a lot about reforestation and so-called removals, all good, but very hard to restore the ecosystem function in a primary forest. So we urgently need to protect the forests and nature and ecosystems that we have in place now. The great news is companies around the world, large and you've got two great examples here, really at the vanguard of climate action. There is a tremendous amount of interest, not only to address climate change, but also to see how we can use nature as part of that solution. But there needs to be a safe and appropriate, both from a integrity, quality perspective, but also reputational perspective. And so, we think it's, the LEAF Coalition, right, provides, we think, an interesting proposition to come together, not only kind of leading companies, but also a set of donor countries as well. So in the LEAF Coalition, we have the United States, UK, Norway. We now have 9 companies. We have additional companies coming on board. We're partnered with civil society, including Environmental Defense Fund, UN Red, and others. So, but love to hear from Matthias and Claire.
Claire, do you want to talk a little? Oh, I'm sorry. Go ahead, Matthias. Sorry to interrupt.
Yeah, so I was just asking Claire to go ahead, but in any case, from our end, if you looked at the current situation, and there's a lot of work to find technological solutions to carbon capture and storage, and apparently they don't work as well as people hoped. And with tropical forests, we have actually functioning carbon capture and storage machines, but we are clearing them at a rapid pace. And I believe that's insane, and that has to stop. So for us, LEAF combines 2 very important things. It's a measure that will block land use change, and it will help to remove carbon out of the atmosphere. And what I like most about it is the approach that brings together civil society and governments on one hand, and business as a third partner, because this sort of uncommon collaboration is needed to tackle this challenge.
Yeah, and I would echo that point. I mean, from our perspective, offsetting, I know it has sort of connotations and a challenge, but it isn't a binary choice. We have to do more, further and faster on climate change and nature loss. So we have to do reductions, absolutely have to be critical in terms of what we're doing from our own site perspective, our own supply chain perspective, to reduce our own emissions and impact on the environment. There is also protecting the environment that is already there. And it's madness if we think we can sort of reach some of these targets and goals without protecting what's already existing. And then also do the removals and the additionality piece as well. So it isn't a binary choice. It is all aspects of systemic change, and frankly, not sequential either. So we have to do all aspects. And for us, really, we looked at 2 goals. So to be climate net zero and net nature positive, 2 goals because they are fully interconnected. So it was more about what are the solutions and the practicalities for really driving towards that goal. And for us, when we looked at the LEAF Coalition, part of it was absolutely how do we protect the tropical rainforests? How do we stop deforestation as one of the threads within that integrated strategy?
One thing that is and it might be worth teasing out is Claire and Matthias, if you why are you doing this at all? Why are Bayer and GSK involved so aggressively in this program? How does it relate to your primary business models?
Yeah, we have 2 reasons. So one reason is that decarbonization is the law of the land. Most governments around the world are on a path of decarbonizing by mid of the century. We have a goal to be carbon neutral by 2030. We want to reduce our emissions in the same path that was agreed on in Paris. So we are on a 1.5 degree emission reduction path. And for that, we need to do both, radically reduce our emissions and find high quality offsetting. And the second reason is very mundane. We are currently experiencing the worst drought in a century in Brazil. Apparently, when you chop down the rainforest, you're not only losing the forest, you're also losing the rain. So it's our belief that apart from stopping land use change, those rainforests are vital for farmers, for example, in Australia, in Sub-Saharan Africa, or in Latin America.
And I think the answer for us is relatively fundamental as well. We're a science-based healthcare company. So protecting and restoring the planet's health is fundamental, protecting and preserving human health. So we have to have it as part of our core purpose, and it's fundamental to driving that core purpose. And a bit similar to Matthias's point, we know we rely on nature. We know we are part of an ecosystem. So we have got to build resilience. We have got to work systemically across boundaries to continue to both drive the purpose of our company, but also the purpose for human health as well. So the connection with climate change, nature loss, and human health is I think very well known and understood, and certainly becoming increasingly understood. So we have to play a strong role in that protection piece as well.
Aaron, any thoughts to add there? Like in your observations, working with many other companies from many sectors, is there reasoning why companies need to take this seriously that you'd like to add?
Yeah. So I think what I would just add is, we're talking about voluntary corporate action right now, and voluntary carbon markets have been around for some time. And and I've been working in this space for about 20 years, and I think what we've seen is really a very positive evolution over the last really 2 years. Before that, companies were involved in this type of thing more for a marketing or PR boost. I think this is much more systemic now as part of companies' core businesses, precisely because both to do the right thing, but also there's a lot of pressure on companies from not only consumers, but in the market, but also their employees, financial regulators, licensed to operate. So I think there's a lot of pressure on companies to do this and do this the right way. So I take a lot of heart in that, and I think we have a real opportunity here to use this thrust of interest to really solve one of the big problems that is facing our world, which is deforestation. And then just on the deforestation piece, one thing I wanted to point out, I think most intuitively people understand. We all learned in grade school that trees breathe in carbon dioxide and they breathe out oxygen, and that's how we breathe, right? So there's that sequestration. But I think intuitively people maybe don't realize this. Deforestation is a huge source of emissions. It's about roughly 15% of greenhouse gas emissions. As if we had, these massive coal-burning power plants sitting in the Amazon, and so we can only focus on technical solutions around energy efficiency and renewable energy. We're missing a huge wedge. We've got to immediately stop deforestation. Just wanted to add that point as well.
Yeah, no, thank you. We have a first question from the audience about the structure of the LEAF program itself. And the question is, our understanding is that LEAF offers payment for forest emission reductions of $10 a ton for at least 100 million metric tons of CO2 in the years from the years 2022 to 26. So is that total emissions? Is that per year, or is that total for the 5-year period cumulatively? I would also add, I was curious how you got to $10 a ton as the price for these credits.
I can address that. It's the 100 million tons is total for the 5-year period, but as I said, it really is focused on that being the start. Right? We know that just this sector alone, RED Plus, probably needs 10x that per year. Right? So we probably need $10 billion a year moving into forest protection. In terms of how the $10 was arrived at, it's sort of a combination of where the market has been, where we think the carbon price needs to go, and where what we think can get it done right now. So historically, in the private voluntary market, RED Plus credits have been trading at say $3 to $5, maybe $6 per ton. On the public side, the World Bank and the Green Climate Fund and others have basically been paying $5 per ton. So I think it was important that we send a signal that this price needs to be significantly higher. So it's more than double, either double or more than double the historic price. So that felt right. That felt like the right signal to send. But we know that carbon prices need to go much higher if we're going to stay within the Paris Agreement. They need to be over 30, in fact, probably closer to 100 over the next several years. So the way that LEAF is structured is what's offered to the jurisdictions is a combination of $10 fixed and through the public donor participation, a $10 floor price. So there is some, for jurisdictions, there will be some benefit if prices go up over time.
Got it. The next question is for Claire and Matthias. And I think to asking for a little bit more specificity on a couple things you've already hinted at, and that's just how you intend to use the emission reductions. What's the interplay between participation in the LEAF program and your own carbon cutting efforts, and also how do you have say in which jurisdictions the actual credits you're buying come from, and visibility into what the sort of national goals and the national carbon accounting of those countries are? Are those considerations that you take into account, or LEAF in general?
Yeah, I'm happy to answer that first. I mean, from a GSK perspective, we're actually, I suppose, planning to use the LEAF Coalition as part of the net nature positive agenda for us. So this is around protecting and restoring biodiversity. So we weren't actually intending to use the carbon emission aspect against our carbon commitments. We're following the science-based targets net zero plan and pathway for that, again, against the 1.5 degree pathway. So actually, we were really looking at how can this anchor into the protection of tropical rainforests, of biodiversity, and actually the deforestation agenda. In terms of the second part about, do we get to choose jurisdictions or how does that work? That's exactly why we're part of this coalition at the moment, is to be able to understand what does that look like? How's that going to work? This, I think, is a fundamental shift. This is a systemic shift in what has happened in the past. And we need to go through that exploring phase of understanding how it could work credibly, at scale, with the right quality, with the right sort of social aspects as well in terms of what we're driving towards here. So I think the answer to that second one is we will wait and see as the sort of the program and projects progress, and we'll sort of take that action as it comes through. So I think this is an exploratory territory we're going into at a global scale. So that second part, I think, will come through shortly.
For us, the question of where actually those emissions are accounted is a big one as well. Like Claire has mentioned, a precondition to join LEAF is that you commit to do everything you can to reduce your carbon emissions within the 1.5 degree pathway. I also think that it's important that companies think about internal carbon prices. In the case of Bayer, it's €100 per ton that we internally account for when we look at our carbon emissions to really radically reduce our own footprint. The best carbon is the carbon that's not emitted. The question where those kind of LEAF credits are allocated is, of course, a big one. It kept COP in Madrid very, very busy. In our case, we are in a very comfortable situation because we have a long tradition in Brazil, quite a huge carbon footprint in Brazil, even in countries like Costa Rica, where we plan new investments and will announce them this year. We have enough domestic emissions. So for us, those emission reductions really don't need to cross borders. They can be accounted in the countries. And of course, that's the best of both worlds, that we are able to reduce our emissions in the countries where we protect nature, in this case, tropical forests.
Just a quick follow-up, maybe for Claire, on the nature-based use of the program. Is it like one reason why net zero has sort of just rode into town the last few years is it's quite simple, right? We need to get to net zero emissions by 2050 and everyone needs to cut their carbon. But is there a goal as certainly maybe not as simple, but simpler than deforestation? Like, what's the top goal for deforestation that you are counting these credits against?
I think that's a brilliant question. And I think that the challenge is the reason net zero has sort of, I guess, landed is it's relatively straightforward. It's one metric to measure, which is carbon. When you start to move into the nature agenda, there is no one metric. It's a range of biodiversity, it's a range of water, it's a range of water quality. So I think the challenge actually is not having a standardized metric to be able to bank it against is one of the challenges. But frankly, we do know, and I think it's fairly logical, and it's coming through from the Convention of Biological Diversity, it's coming through from sort of the other sort of actors as well. Protection of tropical rainforests is the right thing to do. So whether that's hectares of land or whether that's a species diversity impact, those are exactly the areas we now want to really drive in to understand the impact, understand how we can sort of make sure that where we are investing and supporting programs and projects, that impact and that measurable quality is there as well. And frankly, the problem is it's not just one solution, as I keep saying. It's not just a climate change carbon piece. It is biodiversity, it is water, it is ecosystems. It is a much broader spectrum of that. So where you bank it against is almost the wrong question. It's almost what are we driving? And it's reductions, it's protection, and it's additionality and removals. That's the right approach, I believe.
Great. Thank you for that. Next question from the audience is about the criteria that companies need to meet to join LEAF. Aaron, do you have thoughts on that? And I'm also curious about what are companies failing to do, if they are not meeting those criteria? Like, what do you tell them they need to do?
Yeah, thanks for that question. This is such an important question, and I think one of the key developments, I think, around LEAF. And maybe just to back up, I think Claire mentioned that offsets over the last, I've been involved in offsets, carbon offsets and emission reduction credits for the last 20 years. And Claire mentioned there has been, dogged by some controversy from time to time. And I think we were very deliberate in designing LEAF to try to address a lot of these issues that have come, whether they're technical issues like additionality and leakage or credibility issues. And this is a really key piece around the criteria for companies. So I think this is, one of the first times, at least, that not only are there robust criteria on the suppliers, in other words, that there has to be third-party verified, there's a really tight set of criteria for the jurisdictions to supply credits into LEAF. Similarly, in order for corporates to participate, there's criteria, and largely this is around ensuring that companies are doing all that they can do to reduce their own emissions within their own operations and with their own in their own value chains. And so there's 5. Which one is publicly committing to science-based targets, could be an SBTI or equivalent. It is publicly committing to mid-century net zero targets across all 3 scopes. Join the UN Race to Zero is number 3. Number 4 is report greenhouse gas emissions publicly following the GHG protocols. And the 5th is publicly and transparently report on the use of carbon credits. So those are the 5 key pieces.
Great, thank you. And have you had to turn people away who were interested in LEAF because they weren't satisfying those?
Yeah, no, we have actually more than one. There, one or two or a few of these may not have been met by some companies. They may be in the process. And so said to him, well, come back when you've publicly committed and you've got a plan. There are some industries that, go ahead, Steve, sorry.
Well, I didn't want to cut you off. We're getting a lot of interest in the next question, but why don't you go ahead and finish up? Sorry about that.
No, I was just going to say. I mean, there aren't science-based target guidelines for every sector, and so some sectors are waiting for that guidance.
When we talk about these things in New York London, Paris, Beijing, Tokyo. I'm leaving out, hundreds of major world cities here. But we talk about companies and countries and jurisdictions, and not often enough do we explicitly talk about the local communities who live in the places that require protection from deforestation. Like, what is LEAF doing to and the companies to gain the confidence of communities who are most directly affected by this work?
I mean, that's probably one of the biggest advantages that I see in LEAF. It is that the communities that often willingly also participate in the smaller projects we have engaged in so far have better protection. In other words, they participate in the process with the help of the three governments that were mentioned at the beginning, Norway, the UK, and the US. There is also much more support in their conflicts and struggles with the countries they are living in. So in other words, those communities play a key role. Forest protection happens on local level. Most often, forest protection is not a problem for those local communities because they live in those forests. Most often it's external forces that kind of try to use that land for different purposes. And therefore, LEAF is not only looking at trees, it's very much focused on people as well.
Any other thoughts on how to make sure communities are equal partners in all this?
Yeah, so I wanted to mention, I'm not sure if it was made clear enough. LEAF is a coalition. It's a group of companies and governments coming together. There's not an organization called LEAF. And so just to be clear, I'm the executive director of a group called Emergent. We're a nonprofit, and so we're mission aligned, focused on maximizing environmental impact, and we coordinate and act as a transaction platform for LEAF. So what we're doing also is we've got a very proactive engagement process and outreach process to communicate what is LEAF, to indigenous and local communities. We're partnering with civil society, both international civil society and local civil society, NGOs and indigenous groups on the ground. In this proposal, so the mechanism for LEAF is a call for proposals that we put out to tropical and subtropical forest countries. And there is robust criteria in there also around how IPLCs, indigenous populations and local communities, are engaged, how there's transparency, and it absolutely minimum has to meet the international safeguards and requirements at the UNFCCC level, Cancun safeguards, and others. So very much focused on this.
Got it. Thank you for that clarification. The rest of the year we're going to see a lot of big news. We have the first IPCC science report coming out since 2013 in August. We have the Glasgow climate talks in November. What news should we be on the lookout for regarding the LEAF coalition?
So I think a few things. We've got more. We expect more companies to come on board. Hopefully more countries. We expect to announce the first set of transactions. And look, I would just say we're the first principle of LEAF is that no one company or even one sector can do this alone. We're very much focused on building partnerships, engaging with other companies. So that's what to expect, right? The expansion sort of LEAF, bringing in more participation, both public, private, and civil society.
Any final thoughts, Clara, Matthias?
I think that's it. It's quality, it's scale, it's collaboration. That's what's going to change. Needs to change.
Great. Well, listen, I want to thank you so much for your comments and for doing all this work. We will keep an eye on GSK, Bayer, Emergent, and the LEAF Coalition. Onwards and upwards. Thanks very much.
Thanks so much.
Thanks so much.
Appreciate it.
Thank you.
Hi, everybody. I'm Shonali Bassick. I'm the Wall Street correspondent for Bloomberg Television and for Bloomberg News. I'm so pleased now to be joined by Maya Korengal, who's the co-managing partner of the RISE Fund, which has about $5 billion in assets. It was founded in 2016 by TPG and in partnership with Bono and Jeff Skoll. Then I also have with me Kelly Schmidt, the CEO of Benevity, which provides software that's focused on social responsibility and employee engagements to a wide range of corporations. And Kelly, as we talk about the S, the social part of ES&G, maybe it's worth starting with you to talk about what your software really helps your clients do.
Sure. So Benevity's mission as a company, or as we call it, our moonshot, is really to act as a catalyst to infuse a culture of goodness into the world. So what does that mean? We are helping companies help their people to be their best selves by connecting them with a sense of purpose to deliver not just social impact, but business impact as well. And so Benevity provides a SaaS platform. It's used by almost 700 purpose-driven companies today, really to engage all of their stakeholders around their ESG initiatives, whether that's giving back to communities through granting, whether it's employee match donations, volunteering, their diversity, equity, and inclusion initiatives that they're managing through employee resource groups, or even just engaging, people in pro-social actions and environmentally sustainable actions. And so we really are helping them to activate and capture and measure and report on all of that impact.
Maya, maybe it's worth taking a step back also and talking about the RISE Fund, how you've grown to be this $5 billion entity. You were pretty early in ESG, given that you guys were founded in 2016. How did this partnership come together, and how are you now expanding it with Benevity?
Great, thanks, Sonali. So the RISE Fund invests in companies across a series of sectors that are very intentionally focused on increasing social and environmental impact, positive social and environmental impact, in addition to building sort of great companies, just the kind of companies that we would normally invest in at TPG. And in the category of what we'd call technology for good, the RISE Fund was very interested in partnering with companies and providing growth capital to companies that are very explicitly helping other enterprise to increase the good that they can do in the world. And Benevity is a fabulous example of this. One of the things that we do at RISE is look for large market opportunities. We look for terrific management teams. Kelly is a prime example of the kind of CEO who we want to back, and her team is an exceptional team who have great technical skill, but also who are very, very driven by purpose. But importantly, what Benevity does, which RISE really resonated with, is allow companies to amplify and scale impact on the ground because of the services that Benevity provides. So this was one of the key investment hypotheses, if you will, for RISE when we partnered with Benevity, that it enables scores of employees, scores of companies, and amplifies impact all over the world because it enables corporate donation matching of employee donations, because it enables volunteering, because it serves as a filter that helps companies and employees identify viable and impactful nonprofits and causes to help back. So the combination of all of these activities really allows us to scale and amplify impact around the world, while at the same time, obviously, backing a terrific company that is at the forefront of a lot of of the ESG movement, that's not only present in North America, but in Europe, in Asia, and all across the world today.
Well, one interesting thing that you had just mentioned, Maya, was that a lot of this allows for corporate giving and grants and donations. But there's this other part of this, Kelly, that you also brought up about internal D&I practices. How are your clients, Kelly, balancing both the philanthropic and the giving aspect of being involved in a community versus the business aspect and doing better business?
Yeah, it's definitely evolved a lot in the last couple of years in terms of the role that companies are playing there. And so, workplaces today are playing a very critical role in society in helping their people grapple with difficult issues that are really the crux of the S in ESG. One example of this is we did a survey recently where it said that 77% of employees think it's important for companies to allow difficult conversations around race and social issues to occur at work. And nearly 40% said they would likely quit their jobs and go elsewhere if their company didn't prioritize those issues. And I can say that certainly wasn't the case when I joined the workforce 20 years ago. And so, as companies are investing more heavily in these things, they're balancing, traditional corporate social responsibility, which used to be more about giving back to the communities they operate in, with all of these social issues that their people and their customers, frankly, care about.
Maya, it's interesting. You're a strategic minority investor in Benevity, and I'm wondering if there's some way that you're working with Benevity to expand what you do across other clients or other members of your sphere of influence, really?
Yeah, that's a great question. And within the Rise Fund, in certain situations, we are a control investor. In other situations, we are a minority investor. And in the case of Benevity, we have a very good and strong partnership with the other investors in the company. But one thing that the Rise Fund in particular can do, because of our focus on positive impact, is to work with Kelly and her team, Sona Khosla, for example, the head of impact, to bring to bear all of our knowledge and understanding of what matters to companies in terms of corporate responsibility, ESG. We can bring to bear our understanding of how to measure and report on positive impact. And we can bring to bear our academic resources. So one of the things that the Rise Fund does is to really rely on academic research and third-party evidence to validate that good is being done in the world by virtue of our companies. And so we have a whole series of reporting that shows how employee engagement increases, how corporate donation matching increases donations overall to nonprofits, how the systems that we have within Benevity, again, enable us to find the right kind of nonprofits or causes to partner with, so ensuring that we minimize fraud or other sort of negative consequences. And we can bring our full toolkit to the table to work with Benevity's team to help explain this to corporate partners. The other thing that we and the other investors at the table at Benevity do is to make introductions. So at TPG, we were a user of Benevity's platform for many years before we invested in the company, which is proof in and of itself of the power and the value of Benevity. So as a customer, not only as an investor, but also as a customer, we can talk to our other portfolio companies within TPG or our other relationships about the good that Benevity does, the impact that it amplifies in the world, but also the employee engagement and the positive benefits to culture within companies, to increasing employee loyalty, employee satisfaction, because they feel that their companies care about causes that matter to them. So these are all things that we can bring to the table in our work with Benevity.
Yeah, this is really interesting too. And I'm wondering if, Kelly, you could provide some tangible data or use cases of some of the things that you're doing with your clients, because we are hearing this issue come up a lot about employee satisfaction. And we are in this era where stakeholder capitalism has been a conversation for a number of years, but it's not an idea that we can say has garnered complete consensus, right? There are still areas, corporations, certain CEOs that need convincing that this is better for their business. So what can you give them to hold on to that shows them that this is a better way of doing business?
Yeah, there's actually a lot more data today than there was when we were, embarking on this 10 years ago around the business value of investing in ESG. And essentially it shows that the companies that invest in these programs and these initiatives, they do better on everything from revenue to earnings per share. And an area that we focus on is also employee retention. And so, we have companies in our ecosystem, such as, Google and Apple and Microsoft on the tech side. We've got Citigroup, World Bank on the financial services side, Nike, Nordstrom on the retail side. And we're seeing, goodness and purpose. It's important in every industry and every type of company. And what we found looking at the data for our own clients is that those who engage in volunteering and giving through their companies, they're 57% less likely to churn and go off and find another job elsewhere. And so we don't often think about social impact as a critical lever for retention, but in a hot job market like we're in today, it actually is important. And many of our clients report correlation, not just with retention, but with things like higher employee engagement scores, pride, promotion of more diverse talent within their organizations, and even customer affinity and loyalty as well.
That's a fascinating statistic. And also, another big giant step back here, because I don't want to take for granted that the S part of ESG is so well known and understood that everybody knows how to do it. As long as I've been covering ESG, the E part of it is really what seems to have been the part that people got a handle on. But the S part is also very broad as well. Maya, how do you start to define the opportunities in the social part of ESG for LPs, for companies, for anybody that's looking to make this a more even part of the pie?
Yeah, that's a great question, Sonali, because, with all of the conversation about climate change and the challenges wrought by climate change, we want to make sure that the S is not diminished or forgotten. And I think, for better, for worse, over the course of the last year, the S has become even more pronounced in terms of its importance and the urgency of dealing with the S, with the racial justice movement, with refugee crises around the world, and frankly, the effects of climate change on poor and low-income individuals is much greater. So there's an S component there. Within the RISE Fund, we translate the S into investment categories for ourselves. So we look at S in terms of financial inclusion, access to better healthcare, access to better education. These are investment categories that make sense to us, but which also have very positive impacts on systemic challenges that lead to inequity. So if we think about investments that we've made in the education space, whether it's InStride that works with companies like Starbucks and others to allow working adults who haven't finished their college degree to gain their college degree and basically ladder up in their workplace and have access to better jobs because they get their college degree, or whether we think about financial inclusion companies like Acorns or Varo Bank, which help everyday Americans to save more, invest more, to get access to fee-free checking and other financial services. These are among the companies that are important to us on the S side, but one of the killer apps on the S side are companies like Benevity that are for us impact as a service company. So again, they are companies that can work with other enterprises generally through a technology platform that enable those companies to speak to achieving better values and a better society, but taking action as a corporate themselves. So there are various themes that we invest in the Rise Fund. Some iconic companies in different categories, all with the effort to basically make a dent in systemic inequity, to allow better access to healthcare, education, job opportunities, and a better life for all, while at the same time on our E side addressing, the health of the planet.
It's such an interesting point to make, the ability of technology to level the playing field, because it's coming out of a crisis where there was a lot of worries about just the opposite, right? The big tech firms getting much bigger, tech displacing jobs, and the ability of our workforce to really meet this new technology environment. And Kelly, maybe you could provide some examples of where technology could be used to create the most good.
Yeah, I mean, we certainly saw quite a rapid shift in the last year in terms of how nonprofits and causes around the world had to shift their operations from, a world that was mostly physical to being entirely digital. And so that's just one, very current example of how Benevity and other similar tech has helped to make that shift. Some of the things that Benevity was setting out to change, back when the company was founded, was just the inefficiencies in the charitable side of the ecosystem. So, back then, 5% of donations were being done online. It's still only 15%. Tech is helping that, but still has the ability to change it. And how little of those donations were coming from corporations, and we're now helping to facilitate that, and also helping businesses to be able to measure the impact of those investments as well.
It's amazing, too, because you saw this during the pandemic, just a great need and demand for people to be giving back to their own communities at a time where, for the most people who stepped outside, here in New York, the food lines, right, for the food pantries were just completely down the street and, endless for months. And it was a real need to give back to your own community, the power of the employee. I'm wondering what kind of engagement figures you had, Kelly, that may have risen or changed at all during and after the pandemic.
Yeah, probably the biggest one is that last year we actually saw, a lot of the headlines said that, many nonprofits, depending what their areas of focus were, struggled, and overall donations were down last year. Through our platform, donations were actually up 74%. And so once again, technology enabling. And so we actually, there definitely was a trend before COVID, before Black Lives Matter, of companies, working to solve some of these systemic issues. But when these things hit, last year, they were really under pressure from their people, from their customers to do more. And people wanted to give back, in more immediate and sustainable ways than ever before. And we definitely saw that reflected in our own business and just the amount of giving and even volunteering that was done through the platform.
Maya, I'm curious about this next wave. When you look at the next 12 months, when it comes to social investing, where do you see investors putting the most of their dollars?
Yeah, so I think that the digital or the technology business models are going to be extremely important. So as for all of the reasons that Kelly mentioned, but also because technology allows you to process multiple transactions, even small transactions at very low cost. Technology allows you to transcend borders and to transcend the limitations of physical environment, as we saw with our education portfolio and our financial services portfolio during the time of COVID. Those that were digitally enabled, edtech companies, fintech companies really did extremely well as the world moved online, and the new normal is going to have a lot more, sort of digital engagement as things go forward. But I think one of the look forwards is that the past year has really underscored the importance of corporate social responsibility. And it has underscored it not just from a top-down perspective, but from a bottoms-up perspective. A lot of individuals, because of the crises that we've lived through, because of the challenges of the work-from-home environment, have really been thinking about what it means to work for a company, what kind of community they belong to, at work. And work is no longer just a paycheck. It's a source of community. It's an expression of people's values. And this is why I think Benevity is so important as a solution for different companies. And this is why for us, the impact as a service space or the technology for good space is so critical, because the nature of what companies need to do in the future in terms of not just satisfying, consumer demand with whatever product and service that they have, but also more holistically making statements to employees, customers, suppliers, regulators about sort of the good that they stand for, and living that through with the help of service providers like Benevity is going to become more and more critical. So we see a lot of tailwinds for the technology as a good market.
And Kelly, you have now this new investment as well. And I'm wondering for you, what does the next year hold for you in ways that you can adapt, change, grow, and kind of focusing on the areas that your clients are asking for more of?
Yeah, at Benevity, we're actually calling 2021 the year of S. And, as we said earlier, the focus has historically been primarily on the E. It's now really the S. And so it probably needs to be the decade or maybe even the generation of S, because some of these social issues like DEI and B don't change overnight and don't change on a quarterly cadence. And so, we're really seeing that commitment to the long-term benefit for companies to realize the value of their investments in this area. And so for us, we're leaning in more to the S, the reporting side. We've hired a chief data officer this year. We're doing a lot more around the impact reporting and measuring, helping companies to measure the value of these investments, because they do have real business value, and that's definitely a big focus for us this year. We're also expanding our offering to, be able to facilitate more of the employee resource groups and bring those, that community aspect to some of the discussions that are happening on these difficult issues. I think, we were maybe a little bit surprised at Benevity when the Black Lives Matter movement started, and many of our clients started reaching out saying, what do we do? And, internally, we were still figuring out what we would do within the Benevity community as well. And so it's certainly a quickly evolving area. And so we're putting a lot more focus on that this coming year.
Maya, maybe do you have a few parting words of advice for folks who are not as familiar on how to socially invest that they can use to start getting into it in a bigger way?
Yeah, so the surprising thing is that across every category, whether you're a retail investor, whether you're a family office or high net worth individual, or whether you're a pension fund, a sovereign wealth fund, or some other kind of institutional investor, the opportunities to align values on the E side and the S side with your investing without compromising financial return, so while maintaining your fiduciary interest, are really increasing. On the retail investor side, there are some, long-standing organizations like Calvert, and there are, equivalents in Europe that are available. What we have seen when we launched the Rise Fund, and now increasingly in the alternative investment market, is that there are newer product offerings. A lot of what happened in impact used to live in the venture space, but the Rise Fund was solidly articulated to be a growth investor in private equity. Most of our investors come from the traditional pension fund or sovereign wealth fund world. So there are opportunities even beyond TPG. We are now an ecosystem with other private equity firms having launched funds. And there's everything in between in the real asset side, on the bond side. And it just takes sometimes a conversation with your money manager or your wealth manager. If they don't know about impact, if they don't know about ESG, it's time for you to find a new money manager, because this is where the future is heading, and it's incredibly important, and those opportunities and products are out there.
Yeah, and we have just about a minute left here, Kelly. Parting words of advice. Number one, simple way for people to get involved.
You know, I would say start by asking, what do your employees care about? What do your customers care about? And then focus your ESG efforts there. You know, the data has proven that companies can do well by doing good. Benevity is a great example of this. There are many others. And so if you're not yet leaning into these areas, there's a real benefit there to your people and your ability to build talent. So just find out what people care about and find your purpose and start leaning in.
We're looking forward to following the data and following both of you. Thank you so much for your time. It was great to have you for this panel today.
Great. Thank you, Sonali.
Ralph Waldo Emerson wrote, "Coal is civilization and power."
From the early 1900s to World War II, coal powered America. We're still quite dependent on coal, but coal was a 19th century source of fuel. And we're in the 21st century.
The town is completely shut down.
It's just empty building after empty building after empty building.
We knew it was coming. We just didn't know how hard it was going to be. We're losing everything.
Show of hands, how many of you believe there's a war on coal? Yeah.
We hope to make our voices heard. We want coal energy. We like coal energy.
The thing about coal, somebody's taking a paycheck home on Friday night, putting shoes on the baby.
What's happening is not a war on coal. It's coal's war on our health.
Burning coal kills. You get asthma, you get lung disease, you get cancer.
It's the biggest contributor to climate change.
Climate change is real. It's happening.
It's the biggest source of toxic water pollution.
This is United States of America here, and we're fearing our water.
With Donald J. Trump as president, our miners are going back to work again.
Why are we trying to win a war that even if we win, we're dead last?
We need real jobs and real community, and coal isn't it.
There's plenty of coal still can be mined, and coal can still power America.
Coal is a wonderful thing, but it comes at a pretty expensive cost.
The market is going to drive coal away. That is an inevitability.
It's just going to get worse. Something has to change. You got to do something different.
If we're sitting waiting for coal to come in and be our savior again, we're fooling ourselves.
People have to stand up and speak out for their rights.
This is the pivot point. Either do something about it or leave it for future generations.
Fighting climate change is one of the biggest challenges we've ever faced, but it's also an opportunity to improve public health, create jobs, fight inequality, and spur innovation. At our company and our foundation, we're tackling the climate crisis from every angle, including problems that have been overlooked or ignored. We look for ways to make the biggest impact, and we focus on what we can do right now to make progress as fast as possible, because we don't have a second to waste.
We will soon be starting to defeat climate change, and it is possible thanks to the leadership of persons like Michael Bloomberg.
In the fight against climate change, Bloomberg's efforts are unequaled. Here is all of our work across the planet, cities, global business, and more. Around the planet, Bloomberg steps up when others step back, like leading the charge to end coal power. Bloomberg has helped close more than 60% of America's coal plants, half of Europe's, and we're expanding to Australia, Japan, and South Korea. And we are moving the U.S. to a clean energy economy. We work around the world, measuring and improving air quality. We protect our ocean and the livelihoods of the people who depend on it. We support ingenuity. And in the absence of climate leadership, we step in.
I want to thank Michael Bloomberg and Governor Jerry Brown, whose leadership has been critical in creating America's pledge.
It gave us something to hold hope for, and that is that we'd have cities and states actively working to address these issues.
Now with the U.S. back in the Paris Agreement, Bloomberg brings together the most expansive coalition of American leaders driving climate progress from all of society.
We cannot address climate change effectively without putting cities at the center of the agenda.
Cities are home to the majority of carbon emissions, but also the most innovative ideas for fighting climate change. As mayor of New York City, Mike Bloomberg improved the city's air to the cleanest it had been in over 50 years. Now, Bloomberg convenes the world's largest networks of cities and mayors committed to reaching climate goals. We consult with cities to design and implement climate-related programs. And Bloomberg challenges cities to aim higher, then invests, to turn their climate ambitions into reality.
Fighting climate change and growing the economy really go hand in hand.
Businesses want to reduce the risks they face from climate change, but often lack the information they need to act. Bloomberg led the charge to create a global framework for climate-related financial risk reporting to harness the power of the markets in the fight against climate change. And we help emerging markets attract financing to cut carbon and grow their economies. We provide the global financial community with data-driven insights to help them integrate an environmental, social, and governance lens across their investment process. Bloomberg is the world's leading source of research, data, analysis, and up-to-the-minute news on all industries accelerating the transition to clean energy and infrastructure and a more resilient economy. We convene global and business leaders to discuss the latest topics in sustainability, climate change, and finance, including how to move the industry forward. We're encouraging more people to join the fight against climate change by sharing the stories of people on the front lines and the transformations they've led. We support innovators and thinkers who raise awareness through art and design. And Bloomberg is leading by example. Our employees are dedicated to making an impact in their communities. As a company, we're committed to achieve net zero carbon emissions and 100% renewable electricity by 2025. And we raised the bar for what's possible at our new London office, which was rated the most sustainably designed office building in the world.
If we work together and act boldly, we can win the global fight against climate change. Our company and our foundation will continue leading the way.
Hello, I'm Karen Tulin, Chief Correspondent for Equality here at Bloomberg News here in New York, and welcome to our discussion on building the diverse workforce of the future. Our panelists are all experts in this field. They are Damian Hooper Campbell, he's the Chief Diversity Officer at Zoom, Alicia Petros, the Chief Diversity Officer at Hershey, and Leslie Slayton Brown, the Chief Diversity Officer at HP. Welcome to everyone. Now, you're all three very different DEI professionals from three very different companies with very different legacies. What you all have in common is that you're not looking way off into the distance when it comes to building diverse workforces. Diversity is mission critical, and it's a mission that is happening right now. And so I am very excited to begin our conversation today. I want to start off first really looking at and talking about where your companies were just as the focus on global racial reckoning was happening, just as COVID was kicking in, and also at the same time that their shareholders and other stakeholders are really starting to pay attention to ESG. And so with that, I'll start off with you, Leslie, at HP, where you've said that diversity is kind of baked into HP's DNA. An 80-year-old company, the first woman, the first Black American, and the first Asian American employees back in 1940, 1943, and 1946, respectively. But you've said that HP's journey in the diversity kind of landscape has been one of not just diversity, but about moving from diversity to inclusion and belonging. What does that really mean?
Well, so first of all, Karen, thanks for having me. I'm honored to be here with Alicia and Damien. Hello. As an 80-plus-year-old company, it's interesting because when we talk about it being a critical part of who we are, I mean, well into the 1940s, when HP's in its inception, we looked at how do we build diversity, how do we build equity within the company, and although there was always room for improvement, I think it's important to note that was well before civil rights, 20 plus years before even civil rights was going on. And so the work that we're doing today in that evolution from just the representation of diversity to making sure that it's equalizing, that it's equitable within the company, of job opportunity, of leadership. And so for a company that serves customers in 170 countries across the globe, it's really important to get it right. It's important to have the representation. It's important to have the equity. But more important than that even is when you get us here, we have to have that space to really thrive. And that's the belonging and the inclusion piece of it. And so that's the work that we're really focused on today, is how do we welcome everyone in and really allow them to thrive and do their best work at HP.
And how important is leadership? How important is senior leadership to that equation?
It's critical. And we started at separation 5 years ago from Hewlett-Packard Enterprise to HP Inc. It was important for us to stand up an infrastructure that started with our board of directors and really allowing for the most diverse board of directors in the tech industry. And so the importance of that is the guidance, the vision that the board affords us. But more importantly than that is the push and the mentorship that the board allows as well. And so we established a dual mentorship kind of a program with board members and our senior most leaders of the company, L1 leaders. And so as the board is mentoring and coaching those L1 leaders, they're also learning more about the businesses. They have the opportunity to travel to our sites and look at and talk with our employees, our business impact networks, and hear firsthand what's happening on the floors at HP.
Now, Alicia, at Hershey, also a company with a huge legacy of community involvement, especially around children and education. Your company has really kind of talked a lot about intentionality. Why is intentionality so important? Why is that something that you focused on?
Yeah, first, Karen, it's an honor to be here today, and I'm so excited to be part of the conversation with Piers, Leslie, and Damien, and I'm looking forward to learning a lot from everybody who's a part of this dialogue. You know, Hershey has such a proud legacy of bringing goodness to the world, and that really focuses on equity and inclusion. And so for us, we know that our efforts in this space must be intentional. And so we look to our legacy of goodness to inform everything that we're doing today, and also to help us push our organization into the future. You know, at Hershey, DEI is a priority. This is something that makes us a leader in the industry, makes us a great company that people want to work for, and a company that people want to do business with. And we are really focused on this. And what's different for us right now is that we are really focusing on leading with bold transparency. And this goes directly to our leadership stance. You know, people really have to feel a culture of DEI in order for it to be really real. And it's no longer about what I think we should do, it's about what we think we should do. And so to ensure this, we're infusing DEI in everything that we do. And our tone at the top is critical. You know, we're an organization that had a woman on our board of directors in 1970. And so we are continuing that legacy of equity and inclusion. Today, Michelle Buck, our amazing CEO and chairwoman, leads the Hershey Board of Directors, which is 58% diverse, inclusive of 5 women. Our executive committee is 44% diverse, and our global workforce is nearly 50% female. So we have accomplished a lot. Women and people of color lead many of our top commercial roles, but we also know we have more to do. We are not done, and we have set some really ambitious goals.
Okay, so we're going to come back to those goals, but Damien, I want to come to you. All right, timing is everything, Damien. Timing is everything. And so you joined Zoom to this brand new role at Zoom just weeks after the murder of George Floyd. I really just can't imagine. New role at a new company at such a time. You joined a company that was in the process of becoming a verb, right? I mean, it really is remarkable, right? And so you had said, I think, you know, when we were chatting with your team before, that you'd wanted to do a listening tour when you joined Zoom. You really didn't have the time to do that, right? That kind of went out the window to do this listening tour, right? You had intense external demand from your customers, right? And then intense, I would imagine, intense internal need from your employees, right? And then you're in a new role. How did your experience with other companies, which ironically also seem to me at least to be verbs as well, eBay, Uber, Google, right? Companies that have vast experience in the tech field. How did that help you kind of figure out, how am I going to chart this course? How am I going to thread this needle, right? Of meeting the demands of my customers, communicating with my employees.
Yeah, great question. And hello, peace, everybody. Damien Hooper Campbell. My gender pronouns are he, him, and his. Hello to my esteemed colleagues. Karen, thank you so much for having me. Look, I think I got a lot from those other experiences that I was blessed to have at other companies. But I think all 4 of us can agree there is no preparation for COVID. There's no preparation for working from home all of a sudden and working virtually. There's no preparation for the significant movement around racial and social equity that we all found ourselves in. And Karen, I wish that it was weeks after George Floyd's murder that I joined. I joined days after. June 1st was my first day. And so imagine, you know, I am a Black man in the United States, so I have that duality of my own feelings about the situation. But I'm also trying to start this practice virtually through this 13-inch laptop here. And I'm trying to do it at a company that has clearly had investment in DEI, but is now really putting a stake in the ground and saying, this is important to us, and so we want to centralize it. So I don't know that there was preparation from before, definitely around a technical understanding, definitely around, you know, this being the 3rd practice that I've started. I understood that this needed to be something where I had to listen, but it's exactly what you said. I didn't have time to listen, right? I literally was thrown into it. And so what I would say is, balancing, we adopted very early on as I rolled out some of our guiding principles, a principle that said we're going to adopt an inside-out mentality. And so while there was lots of pressure to say things externally, and we said a couple of things externally, we said, look, we don't want there to be a delta between what we're saying outside and what we're doing inside. And so we really spent a great deal of time with employees going headfirst into the touchy conversation around race, which oftentimes people don't want to get into. We went into conversations that were deep around social equity and around justice. And so therein gave us an opportunity to listen to our people, but to also fast forward and accelerate a conversation that oftentimes is put as the last thing that companies want to talk about. And so I would simply again say that I don't know that there was preparation for it. I think we just decided, regardless of what's going on in the world, we have to start in-house first. And so we began with our inside-out mentality and are still kind of on this same journey of helping people to understand each other's differences.
So I want to move in. We have about 20 minutes left. I want to move into the real heart of meat of the conversation, which is what works, right? Let's turn this conversation about what we'd like to do and what would be nice to do into what actually might actually work, what's going to actually help our employees do what they want to do, come to work, be successful, go home and have happy lives while helping our businesses succeed. And so, Alicia, you said two of my favorite words, bold and transparency. So maybe we should start there. At HP, you one of the tools you used was an annual employee survey. Is that someplace that we should start? Is that something that you found helpful, to pick up on Damien's point, looking at your employees, talking to employees, looking internally and saying, okay, let's get our house in order. What are our employees thinking? What's important to them?
Yeah. So for Hershey, change starts really by listening to the hearts and minds of our employees. And we've got a really robust internal census survey process, so we're constantly doing that. What was different was that after the death of George Floyd, similar to Damien's viewpoint, we really knew we wanted to slow down, take a moment, pause, and reflect. Reflect on the work that we had done, but also take the time to listen to what was on the hearts and minds of our employees. And so one of the takeaways that we have is that co-creation is really key to accelerating change. So post George Floyd and amidst the pandemic, we conducted many listening sessions with hundreds of Hershey employees across the globe. These conversations were really born from dialogue from our business resource groups, our 8 vibrant employee-led affinity groups in the company. And by the way, our BRG participants grew 37% in 2020. So we know that everyone is looking for a place to go to have really rich dialogue. And our Black BRG produced some 1-minute videos about the realities and struggles of being Black in America. One of the things that we learned is that our previous efforts on diversity, equity, and inclusion were focused mainly at the executive level. And so what's different for us now is employees want to be involved. And so we've intentionally tilted our focus at the entry and mid-levels of our organization, so that we are driving diversity, equity, and inclusion at all levels of the company. Now, we're a company that measures a lot.
And are those mid-level employees, are they involved in decision-making as well?
Yes, they are. And one of the big lessons that we've learned is to really focus on the priorities that are key for our employees. And so out of that, we really hyper-focused more of our data efforts around representation, looking at race, promotion rates, and equity measures. I am super proud to share that the Hershey Company has no pay gap. That's right. In aggregate, all of our U.S. roles occupied by women and people of color, employees are earning $1 for $1 compared to white males. Now, we get there through a lot of intentional actions. And our Pathways project was born out of those listening sessions. So for us, that's our 5-year plan to make Hershey even more diverse and more inclusive. And again, Karen and team, this came directly from the hearts and the thinking of our employees. So we're really focused on 3 pillars. More pathways to join, bringing in a wider perspective of talent into the organization. More pathways to grow, recognizing and developing talent we haven't always in the past, and more ways to reach out, showing up for consumers and communities in new ways. And our BRGs play prominently in some of the strategic efforts that we are undertaking.
Now, Leslie, at HP, you've also done your listening tour and helped develop the goals that you were going to get out of those. What were some of the goals that then came out of your listening tour?
Yeah, so I think to Alicia's point, we wanted to be intentional. We wanted to be bold, and more than anything, transparent but honest about like where are we really? And so we did a deep dive on data. And the data isn't just for data's sake, but it's the data to tell the story. And our story showed that, one, we're doing great, but we have room for improvement. So we were very intentional about hyper-focusing on how do we build more leadership, Black leadership, because people need to see themselves up the chain. And so we set goals around 2x hiring of Black at the VP level and above. We looked at our growth and increase in women in tech, Black women and Black people in tech, and set room for improvement. So let's put some numbers around what do we want to see in the future. Our goal by 2030 is to see 30% women in technical roles as well, and people of color. We just went across the board and just said, there's just more for us to do. And so we focus our sustainable impact goals on 3 primary pillars, and that is climate action, it's human rights, and it's digital equity. And so within each of those, the task force that we formed as a result of George Floyd, the racial task force that we formed was really designed to build up those strategies that are deeply embedded into the business itself. And so no more are we saying we've got initiatives and we've got programs, and we do have those things. It is what goals are we driving at the highest level of the company within these strategic pillars and embedding those goals into that. And so our focus we go from our management business objectives annually, 50-50 gender, racial equality, VP level and above for tech. And then we build out to 2025. We have very specific goals for increase in Black employees. And then we have 2030 goals around our overarching sustainability impact goals.
And for some of these goals, how are they encouraged? Are there metrics around compensation for how does that work?
Yeah, and I think, and Alicia brought this up as well, is we're looking at not only gender equity, but racial equality as well within our pay. And so we do an annual assessment of that. We do our annual voice in insights in action survey. We do, as a result of quarantine, we did quick clicks to be able to understand health and wellness of our employees. We report, monthly, quarterly, to our senior leadership, to our CEO, and to our board of directors on the work that we're doing. So accountability is our focus this year, of not only putting the goals in place, but how do we hold ourselves accountable? And by the way, those initiatives and those programs and the councils that we have all need to ladder up to those goals that we've put in place.
Wow. Now, Damien, I find your role interesting because in addition to everything else, you also sit in, or you're also involved in product design, and you also have college recruiting. The entire recruiting piece also reports into you. I especially find the product design compelling. I don't know if that was part of the plan all along, or if that was something that you kind of said, this needs to be part of what part of my role when you landed at Zoom. Can you explain why that is, why that's important?
Sure, absolutely. I mean, look, I think my colleagues have just articulated that a lot of the work that they're doing, and kudos to both of you for where you're on the journey, ladders up to business goals. And so making sure that diversity, equity, and inclusion touches every part of the company is kind of just, I think, good DEI strategy. And so, yes, it was absolutely part of my job description. It was part of the conversations I had early with our founder and CEO and with multiple stakeholders on the leadership team. And it was important that we say, hey, if we're really going to play this thing out, if we really believe that a more inclusive way of hiring and intentionality there leads to a more diverse set of folks in the workplace, and then you create this environment where people bring all their backgrounds and tackle tough problems, well, it doesn't stop there. We've got to also be very proactive as we think about the way we design, who's designing, and who we're designing for. And so there were early conversations where myself and my team were brought into product reviews to say, hey, we're thinking about doing this. What do you think? And we said, well, it would be silly of us to be the only ones who are opining on whether or not this is inclusive or what we're missing, because even as DEI practitioners, we don't know it all. And so what did we do? We looked out to many of the employees, our employee resource groups. We looked out to a broad group of stakeholders inside and outside. You know, one of the most recent examples of this is our pronouns feature that just recently launched. Shout out to Ronnie Dickerson-Stewart on my team who led that work. But that was great partnership with our product team, where we said, look, customers want this feature. They want to be able to have broader optionality to self-identify. And it is a phenomenal way for us to advocate for so many people who are oftentimes misgendered. And so that was intentional work with our product team, but we also worked with our Pride ERG. We also worked with GLAAD as an external organization and got feedback from customers. And so it's really just the beginning. And on the university side, you know, we also are being very intentional with our early and career talent to say, this is a pipeline that builds, and we're starting this practice from scratch, our university recruiting practice. Why in the heck wouldn't we embed diversity, equity, and inclusion into this from its very early stages? So yes, absolutely, product inclusion is a major part of what we do. It's what our customers need. It's our way to deliver happiness to them. And it's just something that we're committed to as a long-term process.
And so, you know, part of your roles isn't just what you're doing, and you all three are doing so much within your own companies. But it strikes me that there's a broader role. There is the leadership within your own companies, but there really is, to your point, Damien, there really is a leadership role that you fill within your industries, within your communities. There is a best practice role. There is I won't even say best practice. There is a best trying role. My mother used to say, even if you don't know what to say, sometimes just say something. And there is we may not be getting everything right, but we are being intentional. We're being transparent. We are trying. We're doing something. It's not haphazard. There's a method. We're measuring. We're holding ourselves accountable. But that seems to me to be a very serious part of this job that I don't know if it's always been that way. And maybe that's something that those of you who've been in doing this for the longest can talk about. But it's that role within the broader community, with your stakeholders, with your shareholders, with the universities, with your employee groups, with your communities, with the other citizens that you run across, where you're kind of showing what can be done, what can be possible, while still conducting a responsible business. Can you talk about that a little bit? You know, Alicia, you know, is that right? Is that true? Is that something that feels different now than it did perhaps a couple of years ago?
You know, what feels different for us right now is that we're including so many voices in the creation of our intentional actions. around diversity, equity, and inclusion. You know, Hershey's had a long history around equity. Our founder, Milton Hershey, started the Milton Hershey School for underserved kids in 1909. And so that world-class organization today serves 2,000 underserved youth. And so this legacy of supporting children in education has always been important for us. And we believe that every child deserves the right to a bright future through education. When we talk about the involvement of employees, I'm really excited to share that our unprecedented endowment with the Thurgood Marshall College Fund that we started last year with an initial infusion of $1.5 million and will grow to $3 million over the next 10 years was actually an idea from two leaders of our Black BRG, Danielle and Mo. Danielle happens to be a TMCF alum, and she said, you know, when I was studying food science at a TMCF HBCU, I really could have used a little additional assistance. And we listened to her story and we thought, we can do this. This aligns with our purpose, with our values. This is a proud proof point on how we are taking a stand to create a more equitable future. And so we look at our initiatives not only through our internal goals, many of which are linked to executive compensation, and we report out on those quarterly. We speak with our employee base frequently, but we also look at our role in creating a brighter and more inclusive world. And so we are infusing our efforts across our supply chain, across our ESG efforts, and we're really being quite intentional and specific in these focuses.
Leslie, how do you not get distracted? How do you maintain focus on the work that has to be done? You have your pillars that you have to service, but how do you not get distracted with everything that's on your plate?
It's, you know, one, because we have very clear goals, and because we are being held accountable, which as I said before, when you look at the value of what your board brings and your executive leadership team to hold themselves and the employees accountable with those clear goals and focus all the time because they are deeply embedded into our strategy. It's very difficult to not stay focused, right? When you're being held accountable. And so what I'll add, however, is, and what I believe that the George Floyd murder afforded us was the opportunity to have even deeper, more real conversations about race, which were, I believe, a little bit absent in the workplace. And so how do you solve to something that you can't really talk about? And so, and that's what it's brought into view for us, is to be able to bring specific goals, specific targets into view that are centered around, wow, we're off balance here when we start looking at this diverse workforce that we're striving for. And so we stay focused on that. And in light of other things that come along, whether it's, Asian hate and the unrest in Israel and, all of those things, those are always going to be happening. And as Damien said, you can't necessarily plan for them, but what you can plan for is to be an agile company and an inclusive culture where when those things do happen, you can bring them into the conversation.
And Damien, you have literally 15 seconds. What's your final word?
My final word is to all practitioners out there, take care of yourself. This is an unprecedented time. We love the attention that's on this, but this is a long-term journey. So advocates, strap up for the long-term journey, and DEI practitioners, take care of yourself. Thank you.
That's a very, very, very important note. Thank you all. Thank you so much to our panelists today, to Alicia, Leslie, and Damien. And from all of us here at Bloomberg, I'm Karen Tulin. This is Bloomberg News. Take care.
Thank you.
Thank you.
A principle we recognize our responsibility as a financial services leader is to help more people and businesses feel secure in their finances and their future. For us, good business has always been about people, from helping our newest investors get started to providing more valuable insights to our most sophisticated investors. We're committed to fostering a more diverse, inclusive, and sustainable world. And working together, we can create a brighter future for all of us.
Hi, everybody. I'm Carol Masser of Bloomberg Business Week on Bloomberg Radio and Bloomberg TV, and I'm delighted to have with me the president and CEO of Belvedere Vodka. We're talking about Rodney Williams. Rodney, nice to have you here. So much to get to because you guys have been talking about and then really acting on those conversations when it comes to sustainability at your company. But let me just kick up. Because I do want to get a feel of what you are seeing right now in our market and business environment.
Well, we are all well poised for a return to some sense of normalcy, but we're calling it a new normal because so much has changed, during the pandemic. In our industry, there was always off and on trade. Either you consume the product in a restaurant, bar, or you take it home to consume it elsewhere.
Right.
But home itself now is this whole new channel where people are entertaining at home. They're making cocktails at home because they've had all this time during the pandemic to become more comfortable doing those sorts of things. So there's almost 3 channels versus 2 in the industry itself.
So it's interesting because, and we're going to move on in a second, but in terms of a recovery, because people were doing so much at home, I'm assuming there was a fair amount of demand, right, over this past year. So how do you determine whether or not the market environment is getting to kind of pre-pandemic levels and then maybe something a little extra because people are doing more things at homes and experimenting with making cocktails?
It's a great question. And, if we had a crystal ball, we'd be in great shape. But what we really are drawing from are lessons from China and Asia, countries that have sort of moved through the pandemic at an earlier pace than North America or Europe. And what we're certainly seeing is that the home consumption is continuing, but consumers have a huge interest in going back to restaurants, going back to bars and nightclubs, and it's sort of validation that at the end of the day, humans are really social beings, and people really did miss that connection during the pandemic.
All right, so let's dig down and let's talk about sustainability because you guys have been talking about things for a while. It's really in your DNA in terms of a brand, but let's talk about the last couple of years. Last year, you launched your Made in Nature platform. This year, we have Belvedere Organic Infusions that came out in the spring. You have a new biomass capture facility that I want to talk about. So how long has this all been in the works? Tell me how it kind of all comes together. What's the thinking and the conversations that go on at Belvedere that really guide you in a sustainable way?
Yeah, sure. Well, when we look at Made with Nature, it's more than just a campaign for us. It's frankly a whole platform around which we organize all of our activities. Communications, innovation, and certainly sustainability and CSR. And the gestalt behind it is that when Belvedere was launched, it was really about being all natural. And a lot of people miss that part of our narrative, that Belvedere has always been all natural, no additives, no sugar, because Poland was one of the first countries to appellate vodka the way France, Italy, US appellates wine, such that we can have no additives. We're non-GMO. All distilled spirits are gluten-free, and we're kosher certified. So we operate at these standards. And, prior to the pandemic, this was kind of nice to have information, except for maybe the younger Gen Zs who are really, really into this. But we all lived with the consequences and the forces of nature, and this has all become much more top of mind and relevant for a much broader consumer base. So
well, and that's what I was curious. Well, and it's the consumer, it sounds like, that's leading it, right? The consumer wants to, as you said, you guys have always been natural, purified water, free of additives, as you said. You talked about your Polish rye. It's been there, but you needed to communicate that to the consumer. Exactly.
And we also needed to provide valuable proof points for what we're doing. So with organic infusions, the vodka is organic. The rye that we're using is organic. The herbs, the botanicals, everything about it is organic. And we do big research in our key markets, 5 different countries and 3 different continents. And pre-pandemic, across the board, you had millennials and older Gen Zers saying, yes, the ingredients are important to me. And now post, as we're moving out of this era, we're finding that, some of it is because of the influences of kids being home from college on their parents, but cross-generationally, people are much more interested in simple ingredient lists, things that they definitely recognize, and things that they understand what they are, wholesome ingredients.
How easy, how hard is it to be organic completely? Because the supply chain has gotten much better than it was a few years ago, right? But the supply chain largely is still not that way.
Yeah. Well, it's a great question. So one of the things that helps us is that Poland is the second biggest producer of rye in the world after Germany. So there's lots of access. And we have long relationships with our 8 key farmers from whom we gather the rye. And we've been working on this initiative for several years now. But it's not as easy as it seems, which is, I think, what you're driving towards. The yields from organic rye fields are 3 to 5 times less than a natural rye field. So it requires us then to be much more efficient in the rest of the supply chain to balance out, incremental costs that accrue from this. But the other part of the story is that even to be certified organic, and in our case, we're certified both in the EU and in the United States, we also have to recognize local market requirements, which can vary country to country. And in the U.S., California can have some incremental requirements to what the USDA requires. So it is quite complicated, but worth it in terms of what our consumers are asking of us.
Well, and I'm glad you covered that part of it, because I was thinking about, you're made in nature, as you were talking about, you have 3 umbrellas. It is organic product, it's green energy, it's sustainable packaging, and I want to kind of go through all of that. I mean, you talked about the organic component. How is it easy, I put in parentheses, green energy? How easy is sustainable packaging? How easy are those components to do?
Yeah, well, we've taken our time with it, to be frank with you. So in terms of green energy,
why do you take your time? Is it because it's this? Yeah, go ahead.
Yeah, the ideas for it come from our employee base. So it wasn't as if we saw a consulting report or something back in 2012, but rather a group of employees said, hey, there are ways in which we can cut CO2 emissions. And it led to the idea of actually implementing a biomass capture facility at the distillery itself. So we take the steam and the heat as we're distilling the vodka and convert that into green energy. And so that's just come online. By the end of this year, we will have cut CO2 emissions by 80%. And by this time next year, we'll be carbon neutral, energy-wise, as we operate the distillery. So, and that idea, the whole idea for this came from a gentleman on the distillery leadership team who's actually getting his PhD in green energy. So we're proud to be his thesis proof point in terms of that. But what we also see, Carol, is that the employee base is so interested in offering ideas and seeing the business move in a way that's more ecologically sound. So we sort of have three pillars that we're operating on. One has to do with our own internal ecosystem. The other is around clean energy, and then what we're doing, writ large for society itself. And in terms of our ecosystem, we're looking at disposing of 40% less water in our distillation process by driving more efficiencies, which will allow us to use 27% less water from our wells by 2024. So it's these types of ideas that employees are offering that are really helping sharpen the enterprise.
The biomass facility, you had to get the EU regulatory approval, right? It was a process.
It was a huge process. So from 2012 to 2017, we were able to cut CO2 emissions by 42%. And we got a grant. We're the first distillery to win a grant for green energy work from the European Commission in 2018. And we've used those resources and our own to really help perfect bringing a biomass capture facility online. And then the other virtuous part of the story is that we distill vodka for about 7 or 8 months out of the year. When we're not distilling, we're in the process of connecting to the local town's electricity grid because they currently burn coal for electricity, and we'll be able to supply them with the green energy, clean energy that we're not using.
It's interesting too. I think about what you all are doing, and it sounds like there's several drivers, Rodney. It's consumers, obviously, right? That's what they want. It's your employee base internally, what everybody's want. It's increasingly regulators who also are pushing all of that. On the regulatory front, are there things, I know the EU is doing a lot, are there things that governments could do even more to kind of move the needle? Because I guess I bring this up is the pandemic, it was a crisis. Governments had to step in, they had to shut down the economy. People's lives were at risk. It took a crisis intervention. Climate change is at a crisis status. Most scientists, I'm not a scientist, but most scientists would put that out there. Do we need a government kind of crisis effort when it comes to sustainability efforts and to the climate at this point? Do they need to step in your view?
Well, yes, I think there is an opportunity for more synergy, frankly, between governments and to simplify some of the rules. So for us, creating organic infusions is just half the equation because the warehousing, the shipping process all has to conform with organic requirements, which in Europe differ from country to country, in some cases quite significantly. So that part needs to get smoothed out, and I think it will happen. We're one of the first big brands to commit to organics, and I think as more do so, as consumers require and expect more of this, yes, I believe there is an opportunity for governments to streamline the regulations that they probably haven't paid all that much attention to.
You're a leader in your industry. What about across the industry, in terms of working with competitors to some extent to improve the impact that your industry is having on the environment? You guys are obviously taking steps. Not necessarily everybody is doing the same thing. So how do you work together as an industry to even push the needle? And this goes to leadership, right, on a greater scale.
Yeah, no, it's a fair question. And I think one of the more valuable things that we've been able to participate in have been roundtables and symposiums with not only other competitors in our industry, but also with leading academicians. We've had a 16-year relationship with the Technical University of Łódź in Poland, as well as the Technical University in Poznan and Gdansk. And they have kept us very much up to the minute current in some of the debates about some new sustainable strategies and organic agriculture. But I think the other part of the equation is that what is table stakes, what is expected of each competitor in the category is rising. 3 years ago, it was sort of big news when we and several others said that we would no longer use plastics and plastic straws in our events that we have all over the world. And but from there, it's evolved to that's just an expectation that consumers have now. Now they want to know, how are you taking it out of your packaging? How are you taking it out of your promotional materials? So the bars will continue to rise in terms of expectation. And I think that rising tide will bring the rest of the industry together to really rally around some of this.
But does it make you a little nervous? I mean, I will be very honest with you. In the newsroom, sometimes we'll hear a company put out targets and we're like, they're going to do that in 10 or 20 years. I don't even know if the, New York coast is going to be around. And, like, you can imagine, the conversations, but we see it, whether Venice, Florida, right? We know what's going on. So I do wonder, do you think we need to be faster about all of this?
We do. And it's such an imperative. And I think, we're all seeing it now. Globally, in terms of the intensity of climate, and for an agrarian-based product like ours, which is dependent on rye, we're very cognizant of the impacts of climate change. So I think where 5 years ago in the research, brands that were working to be good stewards of the environment were thought of as that's a nice thing that they're doing, but it's not really a purchase driver. That's changing now. And consumers are taking much more seriously what is the track record, and probably will penalize brands that aren't really seriously moving in this direction of being more environmentally sensitive.
And I know you guys keep very close track on your supply chain and your rye. And I do wonder, use of things like blockchain and technology, are we increasingly seeing that in your industry? Are you doing it? Are you thinking about it as a way of making sure you know exactly what you're using?
Yes. I think one of the big lessons from the pandemic was that just-in-time supply is quite risky. So we've certainly learned to rely on new technologies and other systems to accommodate for uncertainty. That's certain to come in the months to come, and as we were talking earlier, the new normal is that uncertainty is normal. And we can expect some of these dislocations. One thing that's helped us is that for decades now, we've worked with just these 8 agricultural farmer suppliers. Right. So we're able to be 100% traceable in our product and our use of our rye. And having those relationships allows us then to apply new technologies and even in terms of biomass capture, green energy, we hope, down the road with our key partners.
One thing, this panel is about leading a sustainable brand, and I am curious of the conversations. You guys are owned by LVMH, well-known company. They own many luxury brands, including you guys, and you have been with the company for a long time. You understand how, the inner dynamics work. So when it comes to, you say, I want to spend this kind of money on a biomass capture facility, or I want to do this, And as you say, you find efficiencies in the rest of the supply chain so that you can keep costs down. What are the conversations like that you might be having with Bernard Arnault or some of the other senior executives? How does that go down?
They have been incredibly supportive. So we have always gotten the CapEx that we needed to really fund moving forward in these areas. And I think it's because the sense of luxury has sort of evolved over the years, even pre-pandemic, with consumers really looking not just in terms of authenticity about brands and craftsmanship, but for a meaningfulness and a purpose in terms of how they go about their business. And there are many brands, when I look across the portfolio at LVMH, who have been environmental leaders. Guerlain has done tremendous work with bees and ecology. So this has been very consistent with that. And the LVMH team has been very supportive of our efforts here.
And I feel like I know the answer to this question because you talked about how ideas about being more sustainable come actually from your own team, but leading a company and having a strategy and an initiative and a plan, a sustainable plan, and then implementing it can sometimes be tough if not everybody's on board. Of course, you are the boss, but I mean, how do you kind of relate that message to everybody so that you can move towards a common mission?
Yeah, no, it's very important that all of our team really understands and rallies around our DNA. So we really spend a lot of time communicating that. And Made with Nature is sort of a consumer shorthand for the values and the principles that Belvedere has always stood for. And as we interact with our own employee base around these things, not only does it generate ideas, but it also generates a sense of pride and a sense of importance around what it is that we're doing. We're not curing cancer at the end of the day, but we can bring a product that's great to the world. And what we're also seeing, especially in developed markets, is that consumers are beginning to drink less but better at a younger age. And so with that, this whole push around Made with Nature and what it involves is quite consistent with those values.
So I want to ask you, because you guys have laid out a lot of new commitments. As I said, you launched the Made with Nature platform and came out with those goals under those 3 umbrellas that happened last year. Are there any other new commitments that we can look forward to from you?
Oh, yeah. So, when we look at our home of Poland, it's interesting because Warsaw is the greenest capital in Europe, and Poland is actually the most forested country in Europe. But it also has a number of severe pollution sites and has suffered from some topsoil degradation over time. So we are embarking with our academic partners on a restorative agriculture initiative called Extraordinary Lands, which you'll hear more about, which is really making new technologies and growing techniques available to help restore topsoil in certain depleted areas. And we think from those learnings, we could possibly apply that many other places around the planet.
Which is pretty incredible, having had a recent conversation with food CEOs about concerns about how do we sustainably continue to feed the world. This has been an incredible conversation. I have one more question I want to ask you, and that is Sustainability 3.0. What does that look like for you guys, or how do you think it needs to look like for the world?
Yeah, so there are a number of elements to it, we think. One certainly has to do with how the product is made and the ingredients. Another element is in terms of our efficiencies and how do we find creative ways to take out costs and to conserve resources and to do things in a much more renewable fashion than perhaps we had initially even thought possible. So we've been experimenting, and thanks to the LVMH R&D team, with a number of different substrates and materials that really we think are the future for sustainability, or part of sustainability 3.0, and taking it to that next level.
Well, Rodney Williams, I said this was an amazing conversation. I really mean it. The only thing that would have made it better is maybe a little glass of Belvedere vodka on our tables. But I know it's a little early. It's only lunchtime.
It's never too early.
I know, right? Listen, thank you so much. Good luck with your efforts, and I look forward to hearing more in the future. Rodney Williams, he's the president and CEO of Belvedere Vodka, and I'm Carol Massar. Thank you so much.
Big honor.
Fighting climate change is one of the biggest challenges we've ever faced, but it's also an opportunity to improve public health, create jobs, fight inequality, and spur innovation. At our company and our foundation, we're tackling the climate crisis from every angle, including problems that have been overlooked or ignored. We look for ways to make the biggest impact, and we focus on what we can do right now to make progress as fast as possible, because we don't have a second to waste.
We will soon be starting to defeat climate change, and it is possible thanks to the leadership of persons like Michael Bloomberg.
In the fight against climate change, Bloomberg's efforts are unequaled. Here is all of our work across the planet, cities, global business, and more. Around the planet, Bloomberg steps up when others step back, like leading the charge to end coal power. Bloomberg has helped close more than 60% of America's coal plants, half of Europe's, and we're expanding to Australia, Japan, and South Korea. And we are moving the US to a clean energy economy. We work around the world, measuring and improving air quality. We protect our ocean and the livelihoods of the people who depend on it. We support ingenuity. And in the absence of climate leadership, we step in.
I want to thank Michael Bloomberg and Governor Jerry Brown, whose leadership has been critical in creating America's pledge.
It gave us something to hold hope for, and that is that we'd have cities and states actively working to address these issues.
Now with the U.S. back in the Paris Agreement, Bloomberg brings together the most expansive coalition of American leaders driving climate progress from all of society.
We cannot address climate change effectively without putting cities at the center of the agenda.
Cities are home to the majority of carbon emissions, but also the most innovative ideas for fighting climate change. As mayor of New York City, Mike Bloomberg improved the city's air to the cleanest it had been in over 50 years. Now, Bloomberg convenes the world's largest networks of cities and mayors committed to reaching climate goals. We consult with cities to design and implement climate-related programs, and Bloomberg challenges cities to aim higher, then invests to turn their climate ambitions into reality.
Fighting climate change and growing the economy really go hand in hand.
Businesses want to reduce the risks they face from climate change, but often lack the information they need to act. Bloomberg led the charge to create a global framework for climate-related financial risk reporting to harness the power of the markets in the fight against climate change. And we help emerging markets attract financing to cut carbon and grow their economies. We provide the global financial community with data-driven insights to help them integrate an environmental, social, and governance lens across their investment process. Bloomberg is the world's leading source of research, data, analysis, and up-to-the-minute news on all industries accelerating the transition to clean energy and infrastructure and a more resilient economy. We convene global and business leaders to discuss the latest topics in sustainability, climate change, and finance, including how to move the industry forward. We're encouraging more people to join the fight against climate change by sharing the stories of people on the front lines and the transformations they've led. We support innovators and thinkers who raise awareness through art and design. And Bloomberg is leading by example. Our employees are dedicated to making an impact in their communities. As a company, we're committed to achieve net zero carbon emissions and 100% renewable electricity by 2025. And we raised the bar for what's possible at our new London office, which was rated the most sustainably designed office building in the world.
If we work together and act boldly, we can win the global fight against climate change. Our company and our foundation will continue leading the way.
Hi, everyone. Thank you so much for joining us. I'm Jennifer Zabasaja of Bloomberg Quick Take, and I'm really looking forward to this conversation, which is focused on walking the talk and sort of how companies can really put their money where their mouth is and show that social justice issues matter to them. And so I'm excited to bring into this panel the following guests, and I'm just going to bring them right in. Crystal Barnes, she is the Senior Vice President of Corporate Social Responsibility and ESG at Viacom CBS. We also have Chris Miller here with us. He is the head of global activism at Ben & Jerry's, and also Celia Woolett calling us from London today. She's the founder and CEO of the Responsible Business Initiative for Justice. So thank you all for being here. So much to talk about. And I really sort of want to start with what we're seeing here in the U.S. We are seeing a debate happening right now on voting rights. We saw the president yesterday call this an assault on democracy, and he was referring to a lot of the bills that are making their way in legislatures across the country. Chris, I wanted to start with you. Ben & Jerry's prioritizes voting rights. I'm curious, where does the company stand on what's happening right now?
I think we're profoundly concerned about the attempt in states around the country to roll back access to the ballot box and to voting rights. We have seen a steady progress over decades here in the United States of expanding the franchise, making it easier for people to vote. In my home state of Vermont, we have just put legislation in place that provides for mail-in balloting and voting for all citizens of the state. So I think we are very concerned and think that there is a special role that business leaders and companies need to play in defending against the rollback of voting rights and voter access.
Yeah, and let's talk about that. Crystal, I want to get your take. Where does the private sector come in on an issue like voting rights? It's facing an uphill battle with Congress, but where does the private sector come in here?
Yeah, I mean, as you can imagine, it influences our audiences, our employees, all of the stakeholders that we have as a media company. And so for us, it's important to whatever statements or point of views or perspectives that we put out there, that we're able to back them up, right? We take that very seriously. So whether it's infusing, for example, this past election, content and insights around voting within our content. How do we truly leverage the content that we produce to ensure that our audiences have the information that they need to take the appropriate action? And that's the role that we play as a media and content provider, is just really leveraging the voice that we have and the reach of the audiences that we touch to ensure that they have the tools and resources that they need to do what they need to do at the polls and with all voting.
And Chris, where does Ben & Jerry's sort of take their stance, and what is it that Ben & Jerry's is looking to do on this issue?
I think we work on a number of issues, but for the last 5 or 6 years or so, we have been focused on issues around systemic and structural racism in the United States. I think when you look at the legislation that is being considered and in some cases has passed in some states, you're seeing legislation that at least the outcomes are such that they will tend to disproportionately impact low-income people and people of color. And so it is our commitment to social justice and the work that we have been doing to highlight and ultimately confront the systems and structures that perpetuate racism in the U.S. that compels us to oppose this kind of legislation. And I will just briefly say, I think the landscape is shifting on these issues, that the expectations on corporations and brands to sort of match the work that they're doing inside their businesses with becoming a part of addressing some of these issues that we're wrestling with in society. And I think consumers' expectations is that companies need to be playing a role in helping solve some of these problems that our society struggles with, including voting rights.
Yeah. Right. And Celia, I want to bring you in here because you are someone who is working with companies a lot of times and dealing with when they're going to decide to speak out, how they're going to speak out, and as Chris was saying, how they're actually going to back up what they're saying. What is that process like? And how do you talk to companies who maybe are a little bit hesitant to speak out?
Yeah, I think, just to echo what Chris just said, there's such an increased expectation on businesses to do that. We've seen this a lot in the last year and a half, especially. There was a data study conducted last year which said that 60% of consumers now believe that silence is not an option for businesses. So we're definitely in this place where businesses have to find their voice. In terms of what this looks like, this looks like a lot of partnership with the campaign organizers and advocates that are working on the ground. And I think the companies that are doing this very, very well and are speaking with authenticity and credibility are those companies. I've had the great fortune of working with Ben & Jerry's that are taking their cues from the campaigners and organizers who have been working on these issues for years and years. These are companies that really recognize that, the right message at the right time to the right person said in the right way is going to create this huge change for campaign organizations, but they're actually listening to those campaign organizations on what that messaging is, when it should be given, to whom should it be said. And I think that partnership is where we're seeing a considerable impact by businesses and a really powerful impact by businesses.
How do you tread that line, though? I mean, Ben & Jerry's is a company that's been speaking out for a number of years, but how do other companies tread that line? Celia, I want to get your take, and then Crystal, maybe you can weigh in on sort of Viacom's impact.
Yeah, I think the work that we do, businesses are at various stages. There's some companies that we're working with that aren't actually ready to even speak out yet. They're still at the point where we're bringing directly impacted people and people from the campaign level into their companies to talk to their leadership about what engagement looks like. With some companies, we're at the planning stage where they're trying to figure out what their voice is, what their identity is, what issues they're going to speak out on. And then, I think I work on criminal justice, as you know, in the US, and I think there's so many different components to criminal justice, whether there's a human rights focus or whether it's extreme sentencing or whether it's something very workforce connected like Clean Slate, which literally is getting people back to work when they have criminal convictions. And I think that businesses can, to a certain extent, pick the issues that they think fit their identity from a menu of issues that are all supportive of racial equity in this country. So, I don't think that there is a one-size-fits-all approach for businesses. For a company like Ben & Jerry's is willing to take on issues that other companies aren't. But I think taking on zero issues is not an option. I'm happy for you to pick an issue that really resonates with your identity as an organization. But, you've got to pick at least one, and preferably two or three.
I think that's exactly right.
Crystal,
you have to pick the issues that identify with your brand, but the issues where you know that you can make an impact, right? So
yeah.
For us, it was about, we had a campaign last year, Vote for Your Life. We knew that getting folks to actually work the polls and to power the polls was important, right? And so we were able to focus our energy, our audiences, our voices, our people, our power into that message across all of our brands. So it's really about picking the issues around the big issue that you know that your brand can have an impact on, that you can have a measurable difference in. You'll be able to see the impact after a certain period of time. That's the important piece of it to me for brands. Don't try and boil the ocean. Do what's authentic to your brand, but that will directly connect to your audiences in a way that will influence impact.
Yep.
Chris, how does Ben & Jerry's decide when to speak out on an issue? There's a number of social justice issues that are out there that we can talk about. But there's also some issues that get brought up, when we look at sort of the climate of the world right now and sort of where things are at. How do you and your team sort of come up with the statements and when to speak out?
It's the question we're probably asked more than any other question, and it's more art than science. I think we work with a constellation of progressive partners and allies. And I think, to Celia's point, the work that we do is led by our civil society NGO partners. We aren't we aren't policy experts. We don't pretend to understand the best way to reform the criminal legal system in the United States. We do know, however, who knows the answer to those things, and those are the people that we work with. So I think what we've come to understand is that as a consumer-facing brand, we have a unique set of advocacy tools, if you will, that are different than many of the civil society NGO partners that we work with. And that in many ways, those tools that we use to sell pints of chocolate chip cookie dough and Chunky Monkey can also be used and put in service with our partners to sell ideas, to help people understand that climate change is an existential threat to humanity, that the criminal legal system in the U.S. disproportionately impacts people of color, and provide ways for people to take action. So I think we look to our partners and our allies to tell us when our voice, when our reach, and when these tools can be most useful in helping push issues to a tipping point and make progress on these things that we care about.
So it's sounding like the key component is having someone like a Celia or an NGO kind of come in and guide a company. Is that right?
It is the most important part of what we do. And what I will say is I think in many cases, it's a little bit counterintuitive for companies to kind of open the doors to campaigners and activists. We have found that it is the secret to the success that we have in doing this work at Ben & Jerry's. It allows us to ensure that we're working on issues that are important, timely, and relevant, that our messaging and framing is consistent with those on the front lines and those impacted by these issues. And that's really important. And we don't preach to the choir, unlike many of our civil society NGO partners. We speak to a broad general population audience, and we can help mainstream these ideas, these policy solutions. And I think that's a really important role that we play. But being partner-led is I would say, it is the most important part of getting this work done right, I think.
Yeah. Celia, do you want to weigh in on that?
Yeah, I mean, there's so much about what Chris said that I completely agree with. I think, from the business side, number one, those businesses that are doing this really well are the businesses that have a Chris in-house. And usually, I have their phone number. They are that, I'm texting with them. They are that accessible to the kind of partners on the ground. And I think when you are a business that is thinking about what you're going to put on the table, we're talking about the issues, the menu of issues that a business might kind of decide what fits for them from. But I think businesses also should be thinking about the menu that they're going to offer to those campaign partners. And for me, that kind of roughly divides into three categories. The first is helping those campaigners achieve systemic change. And that looks like, honestly, committing a percentage of your government affairs budget and staff to supporting those campaigners on the ground and creating policy change. We can go. My background is I'm a lawyer, so I could work on one case at a time, or I could change a law and not require any of my colleagues to work on those cases because they don't exist anymore, because we've ended juvenile life without parole, or we've ended the death penalty, or we've made it automatic for people to have their record expunged when they have the right to have their record expunged. So we're not doing expungement petitions. Systemic change is huge, and businesses have this incredible tool already
built at their disposal that they simply need to offer to the campaign community. The second is narrative change. If businesses are looking, again, if we're talking about metrics here, a percentage of their marketing and communications budget that they can offer to campaigners to provide that mega platform. We partnered up, Jennifer, last time we spoke, we were launching a campaign with Richard Branson. I'm telling you, Richard Branson's tweets get a lot more retweets than my tweets do. Richard has a considerable platform, and he is willing to give a portion of that platform over to really important campaign organizations. And then the third is looking internally within your own company, looking at what you're investing in, looking at where you're getting supplies from, where your partners are sourcing from, and looking at who your employees are. And so in my work in the criminal justice field, that would be, are you hiring people with criminal convictions? Are you sourcing from places that don't use prison labor? Are your investments avoiding the prison industrial complex? That's the very, very skinny version of this. But you could replicate that model of like systemic change, narrative change, and internal policy practices for pretty much any issue out there.
Yeah, and Crystal, I want to bring you in here because Viacom CBS is obviously a media company, and Celia was just talking about the narratives that you can put out there, but also internally, I wonder how is Viacom CBS sort of backed up the messages that they're putting out there, and I mean internally, but also externally too, right, with some of the platforms that you're publishing content on.
Yeah, absolutely. So last year, BET launched this initiative called Content for Change. And for us, it was all about how do we leverage the 3 C's, right? How do we leverage our content that's being created? How do we leverage the creative supply chain and life cycle? And then how do we leverage our culture? Right. And so, and to do all of that around combating racism, bias, and negative stereotypes within our content. So it's about the output that you see when you turn on the TV and you view our content across our networks, but it's about the behind the scenes. What's happening across that creative supply chain? To Celia's point, what's happening with the partners that we implore to create some of this content? What are the expectations around DE&I with our talent and with our people that have hands on that content that gets created? And so it's about ensuring that you have kind of like a full circle infrastructure around that content so that it's wrapped in the DE&I expectations and standards and quality that you're looking for in the output. Ultimately, that is what will have systemic change. That is what will change the narrative within our communities, our families, our homes, with our friends. And that is what we will consistently continue to look at as we look at our entire creative life cycle, just making sure that it's infused into that process.
And we have a question from the audience, which, Crystal, maybe you can speak on, and then we can get all of your take. Someone's asking, do you allow your employees to vote on issues or petition for an issue to be focused on? Of course, we're living in a time where a lot of people are passionate about issues. Crystal, I'm curious from Viacom CBS perspective, where does the company stand on this?
Yeah, so we, like many companies, last year had a lot of activity around just encouraging employees to get out and vote. So whatever that means, and facilitating that for them in a way that was seamless with their families and with everything else that was going on. And so absolutely, I mean, we encourage our employees to get out there and to get active. We encouraged and actually provided volunteer hours and time for them to actually go to the polls and work the polls. We kind of wrapped a program around that because we realize our employees are one of our most valuable assets, and we want to make sure that they're equipped with everything that they need to exercise their civic duty and to get involved, very similar to the messages that we share with our audiences and other stakeholders.
And I'm curious, for all of you, what if an employee doesn't agree on the stance that a company is taking? Chris, maybe we can start with you, because Ben & Jerry's, as we mentioned, is very vocal. How do you tread that line?
You know, the issues that we work on, the policies that we support, the statements that we release are not a byproduct of a sort of internal consensus with employees. They're sort of deeply rooted in the values of the company. And, you know, as you know, our company was founded by 2 guys, Ben Cohen and Jerry Greenfield, and the values of our company very much reflect the values of our co-founders. So when we take a position on an issue, there are always people who disagree with us. but rooting that point of view in these deeply held values that are the foundation of our company mean that you can disagree with us, but it's hard to suggest that we're sort of misappropriating our consumers' values, or we're sort of latching onto something because it feels popular. What I will say is we work really hard to bring our employees along on these issues that we're working on. We've been working on issues of criminal justice reform and police reform, and we have an ongoing series of engagement opportunities for our employees to really dig into these issues. So I think we work hard to bring employees along on this journey. And the other thing I'll say is we have a broad social mission. There are many ways at Ben & Jerry's in which an employee can connect to the mission of the company. It's not just about a statement that we may make in response to something that's happening in the world, but we have community grant-making committees at all of our sites where employees can be a part of making small donations to their communities. Our manufacturing site in northwestern Vermont builds community gardens for senior citizens in the community. So there are a whole bunch of ways beyond just our position on the events at the United States Capitol on January 6th that an employee can feel like they're a part of bringing the mission of this company to life.
And if you don't take a stance, oh, go ahead, Crystal.
I was going to say, and it's about providing that space for feedback, right? There are many times where our employees come to my team, whether it's a statement that we've made or wanting to, get involved in a local issue or effort connecting to some, legislation that may be coming down the pike. It's providing that runway for conversation to ensure that employees know that their voices have been heard and know that whatever decision that the company ultimately makes, they still do have the ability to activate in areas that they are interested in addition to activating against issues, as Chris mentioned, that are connected to the company's mission, vision, values, right? And so it's making sure that employees feel heard and then taking action based on that listening session.
And what happens if you don't take a stance? I mean, I wonder, is there an impact to business? Celia, you sort of got at this a little earlier. What are the pros and cons of doing this?
Well, I mean, I think they can be pretty dire. If we give an example again from my work, Barclays Bank, a big commercial bank, big high street bank in the UK, was thrown out of a membership organization and kind of outed for investing in a private prison construction in Alabama, and the sort of reputational impact of that was profound, and they ultimately pulled out of the deal. So I would not underestimate the impact from a consumer and a public reputation perspective of failing to take action on it. And in this conversation about employee engagement, I think the sort of the feedback that you're perhaps not getting might be in whether you're losing talent or you're failing to recruit and retain talent appropriately. Referring to that same data that I talked about a little earlier in this conversation, it was just over 40% of employees, and this was within a few months of George Floyd, said that they were currently looking for a new job because they did not think that their employer was doing enough to speak out about issues of racial and social justice in America. So, and I don't know how often businesses actually get that as feedback when an employee leaves versus they just leave and they find a company that reflects their values more. But I feel like talking about the recruitment and retention, particularly of millennials, is something that I've been talking to businesses about for years. And I actually don't think it's as complicated as we sometimes think it is. Millennials do want the company they work for to have a purpose and to have a value. And I think that there's this second damage that is happening for companies that don't speak out, which is that they're losing talent and they probably don't know why.
Chris, has Ben & Jerry's ever sort of taken a negative, had a negative hit because of something that you've spoken out on?
We have taken a wide range of positions on controversial issues over the years. I can tell you for 43 straight years, this company has grown year over year. Ben had this insight many years ago that the strongest bonds and relationships you can create with your consumers, your customers, we call them fans, is around a shared set of values, right? So it's not just about a product transaction in the freezer case at the grocery store, but it's building loyal consumers and fans based around a shared set of values. So we understand not everyone agrees with us, and frankly, we don't need everyone to love us. But we have built a strong and successful business that has grown year over year by making both great ice cream, but also standing for things in the world. And I think those two things are a critical part of what makes Ben & Jerry's Ben & Jerry's.
Crystal, I'd love for you to weigh in on that too, because there's also, I mean, we've been talking about backing up what it is that you're saying, but sometimes there's a lot of doubt with what companies put out, statements they put out, right? So how do you continue to sort of foster that trust that you believe in, ViacomCBS believes in what it is that they are saying?
Yeah, and this actually goes into one of the questions around the impact seen in your business. I mean, it is about setting those measurable goals, right? So last year, we set some goals and targets around wanting 40% of our newsroom to be BIPOC, right? We set goals and targets around putting research and insight into the content that we produce, ensuring that it actually has the outcomes that we are looking for. We put resource into ensuring that, you know, there's accountability with our talent, again, and with our creative supply chain against those DE&I culture and metrics that we put forth as a company. So it truly is about ensuring that you have a North Star and that you are working collectively towards that North Star across all of your brands, so that at the end of X amount of time, again, we will have measurable outcomes and we can actually show the impact of these efforts. And that has been tremendous throughout our, you know, our brands and connected to, again, all of our goals and our mission. For us, it's also about the research of it all. That's the research kind of geek in me, and making sure that, you know, we produce the content, but it's the education of it all. And so we've had some extensive work that we've done on ensuring that even the most kind of vulnerable communities, even within our children, that they have the tools and metrics that they need to have conversations around race and equity and unity, that teachers are equipped with what they need to have those conversations with kids. In many ways, it's a new day and having these conversations early on with children around social and racial justice. And so what's the role as a content producer, but also what's the role as an educator, as a media company, to ensure that these conversations are happening within our communities and across ethnicities and demographics?
You better believe you'll hear from consumers and viewers about it if it's not, right?
That's exactly right. It's an expectation for sure.
Yeah. And just finally, I wanted to get all of your takes, Celia. I wanted to start with you. You've been doing this work for some time. How do you ensure, or are you confident that this is not just a moment in time and this is actually a turning point for companies really being involved and active in social justice issues? How do you ensure that this continues even past the pandemic and past this moment that we're in?
You know, I think that that's something that organizations like mine need to put work into. Like it's ours to lose at this point. You know, businesses are with us, and we're working really hard to keep them with us. I think that there has been a shift in consumer expectations, which means that showing good progress on social justice issues is a good thing, which means that businesses are highly motivated to do it. Kind of profit and purpose are aligned, which actually for an organization like mine is the destination. Like, this is where we're very happy that we're at this point, that profit and purpose are aligned. But, you know, I do think that we need to put in this work. Organizations like mine need to be making it easy for businesses to engage, you know, doing that education work and showing the path forward and kind of making the number of businesses that would like to act equal to the businesses that are acting, because we, from the campaign level, are reaching out, we're welcoming, we're showing them where we need them, how we need them, and we're doing that in a highly organized and very, very strategic way. And we're respectful of the fact that businesses aren't going to give us 100% of their time. They're given a small portion of their time, and it's up to us to use it very, very wisely and in exactly the right place.
And Chris, I'd love to get your take too. Ben & Jerry's being on Instagram. What's sort of the next evolution? How do you continue the momentum?
Yeah, I mean, this genie doesn't go back in the bottle. The expectation on that corporations are going to be a part of these issues is only going to grow. I think for us, we'll continue to stay focused on, sort of using these tools that we have to putting them in service of our progressive partners and allies, focused on advancing systemic change, really addressing the root causes of issues that our society wrestles with. And I think, corporations and brands are going to have to make a choice. I think you can either lean into this work, of your own volition, or I think you run the risk of being pulled into it. We saw what happened to corporations in Georgia that had committed to these issues of DEI internally, but were silent in the face of these sort of very regressive voting rights laws. Campaigners understand that there's a contradiction between these things, and they focused on corporations. And so I think campaigners understand that this is now a tool in their toolbox, and so we'll see more of this, not less.
Crystal, I'll let you have the final word.
Yeah, I couldn't agree more. Sophistication is high, and so the expectation level is high, and it's important for us to ensure that there is intentionality in every single thing that we do. Sure, a lot of our companies have been doing a lot of this stuff for a long time. Has it been enough? No. And so it's time to get a lot more intentional. Time to get a lot more calculated and measured around the things that we're doing to ensure that we're not just doing stuff for the sake of doing stuff, but to ensure that we're doing it, again, against the outcomes that we are looking for and that we actually do shift societal bias. And I think collectively and collaboratively, we can do that across sectors, but it's going to require a real commitment financially and just morally from companies that we cannot deny any further.
Absolutely. Well, this was a really fascinating discussion. I appreciate all three of you for joining me. That's Crystal Barnes, Cynthia Willett, and Chris Miller. Thank you so much for your time and for all your comments today.
Welcome back, everyone. I'm Carol Massar of Bloomberg Business Week on Bloomberg Radio and Bloomberg TV. I have a great team from Cisco getting ready with me to lead a conversation that's a really important one on sustainability and building long-term growth. It's a company that knows about it. They have been working on sustainability and implementing sustainability initiatives for many, many years. So let me bring them in. Fran Cassudas, she is Executive Vice President. She's Chief People, Policy, and Purpose Officer at Cisco, and then also the Chief Financial Officer at Cisco, also Executive Vice President Scott Herren. So great to have both of you here with me. We're going to get into the sustainability, but because I have you here, I just wanted to ask you, the environment right now, there's so many questions. We have Fed Chief Jay Powell talking today saying, folks, we've got to be patient here. It's going to take longer for the economy to get back on track. Scott, may I ask you how you see the business environment, the economic environment?
Yeah, I think we see what many companies are seeing and what you see reported this morning. Business activity is picking up. We're coming out of the pandemic. It's picking up rapidly to the point now that it looks like inflation is not just something that's being projected, but something that we're actually seeing measured at this point. So I think that the business environment in general has strengthened pretty significantly, certainly from where it was during the pandemic.
And Fran, come on in on this as well, because you're dealing with the people at Cisco, right? There's so many different policies that may be changing and so on and so forth. How do you see it when you look at the economic environment, the business environment, the market environment?
Yeah, it's an interesting time because in addition to seeing a recovery across all industries, which is wonderful, you see a very active talent marketplace. You see people moving. You also see talent right now looking at how companies plan to work moving forward, and that guiding some of the decisions that they're making. And so I would just say we're seeing a ton of movement across the industry, a lot of opportunity, and candidates feeling like they really have their choice of where they're going to work and how they want their career to progress.
There's no, Fran, just to follow, there's no going back to the way it was pre-pandemic when it comes to how we work. It's different, right? It's changed.
Yeah, it's funny. I was talking to a customer yesterday, and we were sharing that we don't believe there is any going back to where we were. We do think that both from a company perspective, but also from an employee perspective, there's a realization that we're going to work differently. Some of the research that we've done shows us now that 98% of meetings will have someone who is not in the office, so we'll have someone who is remote. And now the technology and the people practices need to accommodate that. We also see that across the industry, employees in general are saying that they want to be in the office only 2 to 3 days of the week. And so I don't think there's going back to the way that it was before.
Well, and Scott, and just final on this, what does that mean for your business? You guys, infrastructure, this is your world in terms of connecting people. Is that good or bad going forward?
Yeah, let me start by saying I think in general it's good, right? I think there's a lot of terrible outcomes from the pandemic, obviously. No one wished for this. But I think it proved a few things that had been theorized and shown in spots previously, like hybrid work, like the ability to be effective and to lead teams effectively when they're not all sitting at their desk in the office. And so I view it just as a general societal good that's come out of this. From a business standpoint, the hybrid work and remote meetings will continue to be an upside for us at Cisco. It's to the extent that we're meeting like this, instead of sitting in a conference room, we're meeting using technology. And it uses not just our collaboration technologies and WebEx, but it uses a lot of network capacity and bandwidth, right? Inside the network, out to the cloud, and finally to the endpoint in the home. So I think in general, it's a tailwind for us.
All right, so let's talk about why you both are here, because I really want to get into this issue. And we're talking about, the initiatives that you folks have done in terms of sustainability and really how that has contributed to long-term growth. I was looking at some of the key points. You launched Cisco Networking Academy back in '97, set your first greenhouse gas emissions reduction goal in 2006. That's 15 years ago. You've put out 16 years of sustainability reporting. Correct me if I'm wrong. You're getting ready, I believe, though, for the 17th. The reason I go through some of this, and I'm only scratching the surface, is that this is part of your DNA. It really has been for a long time. Share with us some of the history of this, of how it came together. And Fran, I want to start with you. You've been at Cisco for almost 17 years. Help me out with how it all evolved and came to be.
Yeah, so I would say, first of all, it is a big part of who we are. The Networking Academies was our first real push into understanding that through education, we could create access and careers for people around the world. And it's interesting, the Networking Academies feed all of our competitors, our peers in the marketplace, and we want that. We're trying to create careers for others. We have trained, if you can believe it, about 12.6 million students since that time. And so this is something that's incredibly important to us. I think from an employee perspective, our employees care deeply, and we want to have both impact from a business perspective, but we want to feel like we have left the world in a better place. A year ago, we created our new purpose, which is to power an inclusive future for all. And as you would imagine, this purpose will guide us as it relates to doing our part, as it relates to the digital divide, inclusion, climate, sustainability, and how we partner with governments around the globe. The interesting thing is that we put that purpose together right before we understood the impact of the pandemic. And I will tell you that it guided us through the last almost year and a half now around how we want to show up, how we want to have impact, how we want to work with our peers to address some of the biggest issues. And so I'm so proud of the team that worked on this. The fact that our first sustainability report was in 2005 is wonderful. The last thing I'll say here is I think there's a big difference, too, in where we are today. If you look back in the early 2000s, sustainability was something that you did in addition to your business. It felt like it sat on the side. It was powerful. But now the biggest difference is it's embedded in who we are and how we work. And you see sustainability play out in how we design products, how we think about our customers, how we innovate. And I think this is the next chapter for Cisco and so many others, hopefully, because I think this is where you start to see the biggest difference.
And Scott, you're new to Cisco, but you've been in the tech industry. You're at Autodesk. Like, the things that you're bringing to Cisco, you've been thinking about and doing for a long time. I came across this quote where you said, fundamentally believe that climate change and sustainability is our generation's problem to solve. We don't have a lot of time anymore, do we?
No, we don't. And that comment came from looking at the greatest generation and the issues that they had to solve, and kind of work your way forward. This is a massive issue. This is a worldwide, it's a global issue that needs global solutions, and everybody has to take it upon themselves to be a part of the answer. I have a personal responsibility to this, and I've got a corporate responsibility to this. And I think that's the way. So when I say that, the idea is to spur more people to say, you know what, I can't do everything, but I can do something, and I need to take personal accountability for going out and doing that.
Scott, I was talking with the team over at AB InBev, and they said, that argument about trade-off between being sustainability versus cost, like it doesn't exist anymore. Is that true? Like when you no. So walk me through that as you guys continue to pursue strategies, how you think it through.
Yeah, I mean, there are so many. I would wager to say we don't do any transaction of any size with a customer that doesn't in some way ask the question, what are your goals on sustainability? What is your progress on sustainability? Where are you on circular economy? Where are you on greenhouse gas emissions? What commitments? Like, those questions are part of the business process. It's not, I think Fran nailed it with what she said earlier. This isn't a feel good, hey, we've got a skunk works going on the side, business gets tough, we shut down. That's not how it is. It's ingrained in everything we do. And it's ingrained in the way our customers select the suppliers that they want to do business with.
What has the biggest effect, you guys, in terms of having the biggest sustainability impact? Is it saying to your supply chain, you want to work with us? We're massive. We're a big company. Everybody wants to work with us. We'll find somebody else if you don't fall in line with these sustainable initiatives. What really pushes the impact here? And I can go to either of you. Fran, you want to take that? Or Scott?
Okay, I'll start. And Scott, please feel free to jump in. So the first thing that I would say is that I think it's so very important for us to put goals out there. And I think in the past, teams have been hesitant because this is hard, and there's such a broader ecosystem that it's hard to be really specific and feel confident that you're going to meet these goals. But I think we have to put stretch goals forward. I think Scott's going to go here in just a moment. You're absolutely right. The supply chain is a huge element of how you drive impact. It's a big area of focus for us. But I think the other thing I would say is having really clear goals around what we're trying to do from a greenhouse gas Scope 1 and Scope 2 emissions perspective is really important. We put out there the goal of reducing by 60%. We're in the process now of really looking at the next set of goals that we're going to have, because these goals end in 2022. We also put out a goal to have 85% of our electricity from renewable sources. We're really close to achieving that as well. We achieved it in the US, about 8 other countries, 60% in India. We're going to keep pushing on that. And then there's a supply chain piece, and that's significant. And maybe, Scott, you want to talk to that a bit more as well?
I think you said it right. We need to have the moral authority to go to our supply chain partners and say, this is our expectation of you. This is what we want to see you do in terms of greenhouse gas, in terms of your own operations and the way you utilize resources, not just the amount of carbon that you emit. And so that starts with us looking at our own operations, looking at the offices that we run, looking at the power that we consume. How do we do that? Looking at the way we design products for a circular economy, looking at the amount of virgin plastic that we use. We've had focus on all these areas, and I think you have to do that first to get what I'll call the moral authority to then go to your supply chain and say, I expect the same from you. And if you want to do business with me, this is what my expectations are. And I think that's it's one of the things that was really important to me as I was looking at Cisco as a place to come and snap into this role, was where is the company as a significant hardware supply chain, but also one of the biggest software companies in the world? Where is Cisco in terms of keeping its own house in order, and then having the authority to go to its supply chain. And it's one that the company has a decades-long track record on.
Well, it's interesting. First of all, I love what you say about scope 1, scope 2. I learned a lot in kind of prepping for this panel, but it's not just, it's directly what your impact is, right, on the climate, but also indirectly by the electricity you purchase or the trucks you use or whatever. Like, you have to think about all of those things. What's the role of government here in all of this? We recently had an article on the Bloomberg that said there's been a lot of ESG initiatives out there by a lot of folks, but we really need the government to kind of kick into a crisis mode, just like they did during COVID, to do it with the climate. And I'm curious what you all think about that. Scott, why don't you pick up on that?
I'll start. I think there are several roles that, and it's, when you say government, it's governments, plural, right? Because this is a global issue, and no one government is going to be able to have the impact that we need to have collectively. So it's what are government's role, right? And it does start with having a focus on it and ensuring that the electorate puts people in that have this as a focus, and then when that focus is there, that it actually gets implemented, and that there are programs put in specifically to drive toward a higher sustainability and less climate impact. And then I think it goes to something that I know I've publicly weighed in on a couple of times, which is the regulatory agencies requiring disclosure of how companies are behaving. It's not enough for us to, on a voluntary basis, and when I say us, I mean all corporates, to, on a voluntary basis, cherry pick the things that I think make me look good and push those out, put them in my sustainability report or a paragraph in my annual report. There's a wealth transfer that's going to happen from the baby boomer generation, which embarrassingly enough, I'm on the tail end of, so I'm one of them, to the next generation. And as that wealth transfer happens, there's no doubt in my mind that the recipients of that wealth, this is going to be a real deciding factor in where they decide to invest their funds. And so what does that mean? That means they need to know. There needs to be comparability, not just within an industry, across all industries, right? The easy analogy is, if I wanted to buy debt, if I wanted to buy a bond, it's very clear to me what a AA rated company is, whether it's a bank or a tech company or a transportation company. I know what AA means. We need a similar type of, beginning with the disclosure environment, but then ultimately a similar type of rating that's consistent across industries, because that's what's going to drive the investment of the wealth that is over the next 10 to 15 years going to transfer to the next generation.
All right, I know you both work together on all of this and the initiatives at Cisco. Fran, so what's the likelihood that we see anything like that, a regulatory body like an SEC, but for ESG and sustainability, so that there is an oversight and you're penalized if you mess up, right? And the investing world and the world at large knows about it. What's the likelihood we get something like that? Are you guys in Washington saying, this is what we need, and they're saying, yeah, I got too much on my plate?
What I would say is we are in Washington having this conversation. I think on a positive note, there is a tremendous amount of interest, but also pressure for us to do something differently. I do think that the government-private handhold on this is so incredibly important. Sometimes, Carol, I look to what's happening in Europe, and I see some of the more stringent regulations that are there, and I see it driving these coalitions that have to come together to get creative and to solve. And so I do think there's interest. I do think that the climate crisis that we all see now on a day-to-day basis is driving action. And I continue to think that even without that, there is a role for corporations to come together, to start to speak the same language, to adopt some of the same goals. And in doing so, we can take baby steps towards exactly what Scott was talking about.
Yeah, and Carol, to put a finer point on that, the SEC has been very vocal. The SEC and this administration has been very vocal about driving to a degree of disclosure, and I think they're taking a thoughtful approach. So under then acting chair Allison Herrenly, and now under Chair Gensler, they've been quite focused on we will get to some mandatory level of disclosure. It's a process. Right now, there are so many different, there's TCFD and there's SASB and there's the European regulations that are driven by IFRS. It's kind of alphabet soup, but there's a number of different regimens today. We need to see those consolidated. But the SEC is absolutely got this on the agenda. They've just closed the comment period around an initial set of questions and look to have a draft out by the end of this calendar year. So I think we're going to see very specific mandatory disclosure requirements come out before this administration's over.
All right, so I'm being a little provocative. Bitcoin regulation comes first or oversight, or this comes first?
I would say this comes first. Not that it's any easier, but I do think it's one that it's already, the wheels are already turning. It's already in process. And if you look at what's happening in Europe, it's already there. They already have, through IFRS, implemented a number of mandatory sustainability, climate change type metrics.
Yeah, even this morning, coming down with some more today out of the EU in terms of transportation. What's the conversations that the two of you have when it comes to sustainability initiatives? You know, how does that go? How does that work? And then kind of getting the message out to the company, Fran.
Gosh, so I would say from a company perspective, Scott and I are lucky because this is a topic that our people care about quite a bit. I think in everything that we do, we tend to look at the long-term opportunity, and we're really thoughtful around all of the levers that we have. And I would say, Scott, we're also creative in that, and we're supported by efforts like what our Cisco Foundation did. So as an example, the Cisco Foundation recently dedicated $100 million over the next 10 years for us to really fast track those startups that are out there driving technology that can have significant impact on this crisis. And our investment is a long-term play. I think the beautiful thing about it is when you look at some of those investments, they're not all directly tied to Cisco. They are tied to the bigger opportunity. We just finished an internal contest that we had looking at some of the great companies that are out there. And we just had a contest on greenhouse gas emissions. And there's a company in the US called Remora that is doing great work to reduce some of the greenhouse gas emissions that are coming from semi-trucks. And we just invested $50,000. And so you'll continue to see us get incredibly creative in how we do that. But I think from a CFO, Chief People Officer perspective, we're doing our best to really balance long-term, short-term, the levers that we have and how we engage our people because they have so many great ideas.
Yeah, I would add that when you think about return, which I think about a lot, as you can imagine, there's another return beyond what we talked about earlier, that this is a real decision factor. It's not a check the box item. It's a real decision factor for many of our customers. There's also a return in the ability to attract talent and then retain talent, because your company stands for something that people believe in, right? And when you look at the current generation that's coming out of college, they have a number of choices, right? It's the super competitive environment for acquiring talent right now. And I think having not just the wrapper of a focus on sustainability, but a decades-long focus on it, and really having it integrated into all of our operations, including our product design, by the way, where we design products specifically to use less electricity when they're in use, right? That's not just the way we produce it. It's our customers get that benefit. That matters, and that allows us to attract talent and then to retain it.
Well, in terms of the impact that the strategy that Cisco has been pursuing for 15, 16 plus years here in terms of sustainability initiatives and reducing greenhouse gases, how do you think it's impacted the long-term growth of the company? And as you say, it's not just, it is important in terms of measuring the impact on the climate and the environment, but in terms of attracting people and just different things. Scott, do you want to take that?
I mean,
for Fran?
Certainly, yeah. I'll talk about the growth rate. I see it as something that has gone from, 10 years ago, the questions around sustainability were more check the box. They were more rote. It was more, as long as you're not doing something really atrocious, I won't use my normal example, then you qualify. It's moved from that to now everyone can check the box. And now it's how do I differentiate who really has a bought-in process. And so there's no question that it has contributed to our growth, and the absence of doing what we've done would have been a real headwind to our growth over time. And that's just talking from a sales standpoint.
Right, and I'm thinking, Fran, from your time there at Cisco, like I can imagine the conversations that went back and said, look at what we did and look at the financial impact on this in a positive way.
Absolutely. I think we're...
Go
ahead, Scott.
Sorry, Fran.
No, all good. I was going to say we're lucky. We got a head start on some of the discussions. I think in doing so, it educated our teams around things like what does Scope 1, Scope 2 mean? How do we go after the greenhouse gas issues? But where Scott was going, which I really love, is that this head start now, as it applies to the way in which we're designing our product, makes our product so much more attractive to our customers. And so the conversation that we can have with them is not only is this product the fastest, but it's also going to reduce your energy usage. And I think it's those types of numbers that are the most meaningful. And candidly, I think get our engineers really excited about what's in front of us as well.
Yeah, they have to answer those same questions, right, about what is their carbon footprint. And so to the extent that we can help them along that path, that obviously becomes an advantage.
So what's next for you guys, and what does like Sustainability 3.0? We've been talking about this a lot in the newsroom, and I've been bringing it up with a lot of our discussions at this summit. Scott, what's the next thing for sustainability, Cisco, but maybe what it needs to be too for the world at large?
You know, so this is an area, as we think about, we obviously have competitors, right? When we're in selling networking technology to customers, we have competitors. There are no competitors in this space, right? All of us want the same outcome when it comes to sustainability. And so we work with common providers, we work with common suppliers. This is a space where we can actually lock arms. We compete actively for customers. We compete actively for sales. When it comes to working with the common suppliers that we all have, we actually coordinate quite well in saying, these are our expectations. And what would be hard, frankly, is if Cisco had a different set of expectations on the same provider versus some of our competitors did, right? So it's much easier for them to be compliant with what we want when we all have the same set of requirements from those common suppliers. And so what's great about this space is there are no competitors. We all are pursuing the same outcome.
Fran, your thoughts on that?
Yeah, so I'd add just a few things. So the first is, I do think we are going to see more and more of an integration of our social justice actions and climate coming together in a powerful way. When we look at our beliefs and when we look at who has been most impacted, these things come together in a very impactful way. And I think you're going to see that come together, which is good. To Scott's point, we're going to have to build the coalitions with our competitors because we know that there isn't a single company that can solve this. And then the last thing that I would say is the approach that I think we're taking with governments around the world and creating digital plans. Right now, we have about 1,000 projects in 40 countries that are driving issues around the digital divide, around sustainability. I do think this is the wave of the future, and we can use this vehicle together with our partners in industry.
We're out of time. I could talk for hours on this. You guys, thank you so much. You really are doing impressive stuff over at Cisco. Fran, Scott, thank you so much. Really appreciate it. Take care.
Thanks for having us.
Hi, everyone. I'm Shartia Brantley, Deputy New York Bureau Chief and Senior Editor for Bloomberg Live, and I'm delighted to discuss the importance of representation, Black-owned media, and more with Michelle G., CEO of Ebony and Jet. Welcome, Michelle.
Hi, Shartia. Great to be here. Thank you for having me today. It's an honor.
Oh, it's an honor to have you. Thank you. I do want to start off with talking about the state of Black-owned businesses over the past year. As we know, 41% of Black-owned businesses in the U.S. closed during February and April 2020, according to the State of Black-Owned Small Businesses in America report. And Black-owned businesses received just a sliver of the Paycheck Protection Program funding from the federal government. What do you attribute to these grim stats?
Yeah, listen, times are tough for everyone, and especially Black Americans, and specifically women, because we are the #1 entrepreneurial growth segment in the world. And so we're growing faster. And the reason we're growing faster, let's not move to the side, because we really haven't found our way in corporate America. So that's not going to stop us, right? So we're starting. It was astounding to me that 90% of Black-owned businesses, female Black-owned businesses, couldn't get any of the money floating around because they had one employee. So the rules were not kind to them, and so they closed their doors. And then think about the second piece of that. A lot of them are in the service business, and that's the first business that closed. So it was a double down, and then we're getting sick from COVID. It really was a tough time, but I can tell you, Shartia, we're still standing. We're still standing because our history will not allow us to fail.
Mm-hmm. And with that, with the pandemic and, George Floyd and Breonna Taylor, Ahmaud Arbery, and just, the sparks and calls for racial and economic justice, stakeholders now expect more from corporations, right? Investors, employees, customers want organizations and their senior ranks to reflect the communities they serve. So why is it so hard to bring about this change in this new environment we find ourselves in?
The big sigh, the big sigh. They say that's what they want, right? And they actually have the power to do it. My thing is this, it's just good business. If I am trying to target the growing economy, then I have to target people that look different. In 2025, 50% of the workforce will be brown. And so how do I speak to them? How do I market to them? How do I sell to them? How do I collect data and be able to understand that if I don't have anyone in the room that looks like who I'm speaking to? It is so frustrating, even to see on the consumer side ads. I was like, they don't know me. Walking into a store and I go to the beauty aisle, they don't know me because there's nothing for me. And so who is on the teams? Who did their geo-targeting? I mean, it's really, really just, it's going to be a matter of good business and sustainability if you don't have the right people at the table, which brings up a whole nother issue, Shartia, which is the pipeline, how to build it, how HR really doesn't have any power, right? How we're hiring chief diversity officers, and it's just entitled only because you show me their operating budget and I show you their value to the company. And so I'm looking at all of these things and knowing that corporate America is still not serious about diversity. They're just not. They can't be, because I can look and see what they're doing around people and know that they're not.
So how do we get them to do the work? Because it's been a year of pledges and commitments, and people are ready to move from words to action. So how do we go about bringing that sustainable change if we're not seeing the accountability and the change we need to see at this time?
It has to start from the top. Like, it just has to start from the top, and not being nice and not being good intentions. Like my grandmother would tell me, baby, people with good intentions, don't marry them, don't hang out with them, because if they can't activate that, then it means nothing, right? Somebody with great potential, when they die with great potential, they've done nothing. And so if it doesn't start from the top with measurable actions, when you tie your actions to money, people move. When you tie people's action to their bonuses and how they live and where they vacation, you will see a difference. And those companies that are actually tying diversity to people's performance and who they're hiring and what happens, you're seeing companies move and change. And so I like, this is a business proposition. It's not how I feel and, oh, it's amazing. No, it really is business. So tie it to your business. Give your people that are in charge of diversity, give them real opportunity to be successful. Don't let it be just entitled. I have a lot of friends that are like, oh, I took this great role. They get there, they're like, man, I was straight hoodwinked because I didn't get the tools, the staff, the money. I didn't get to build the strategy that I said. So it has to start from the CEO level. They have to be committed. They have to understand the numbers and data, and they have to allow their people to activate and then back it up. Right? When I go ask you for help, don't get ghost, don't return my call. And so I'm calling on all of the folks that are in the C-suite, and it's people that don't look like us, because we already know there's only 1% or less in the C-suite. So we need our brothers and sisters that don't look like us, that are in high positions, to really make this a priority and then measure it and let people know they will be held accountable if it does not happen.
Let's talk about that. There are so few Black leaders in the C-suite. Why is it their responsibility to spark these uncomfortable conversations when our numbers are so few?
I didn't say it was our responsibility to spark it. I said it's our responsibility to fight to make sure that when they go, they get what they were promised, right? That they're able to move and work and bring their expertise to the table and then raise their hand when that doesn't happen. Listen, I've been in many places and I felt like it was my responsibility to hire everyone that looked different, to just like, wait a minute, like I'm the low person on the totem pole. That's just not my responsibility. It's your responsibility too. And yes, we're still in a place that we have to raise our hand. We have to bring things to attention. We have to fight for the cause. We have to build underground railroads still today, right? And so it's 2 or 3 or 4 jobs for people of color because we're trying to do so many things, but it is not our responsibility. It's our responsibility to do our job great, but to make sure that we're honest and give feedback when we can. But it really is the people that are running the company. It's their responsibility.
Mm-hmm. Now, we've had some good news of late. Rosalind Brewer recently named the CEO of Walgreens Boots Alliance. Tashonda Brown Duckett is now president and CEO of TIAA. Fortune 500 companies joining a very small community of Fortune 500 CEOs. Are you encouraged by what we're seeing right now?
I mean, listen, when you can name them on one hand, no, I'm not like it really is. What it says to me is that the corporate community is not rewarding people based on their contribution. It's not based on their ability to, because we see women are in great positions. They're CEO, they're head of HR, they're the CFO. And we know that those positions, head of sales, they can transition easily, general counsel, into running a company. And we're not given an opportunity because those jobs are saved, they're sacred, and they're handed down generationally to people that people are comfortable with, that maybe are right. And so the people that are hiring folks that look different, think differently. I'll give you an example. Like, I don't know Mark Cuban, but he went outside of his comfort zone, hired someone who headed diversity, right, for AT&T, and he made her the president. She's doing an amazing job because she's doing, and she had the skill set. And so what I would say is this: don't have a different set of rules for me to get the job than you do for someone else, right? Don't make it about being comfortable. Make it about getting the best result because someone has earned that. This is the second issue that I have. Research says 80% of women don't ask for what they've earned, because they have this expectation, because we're polite and we're kind and strategic. Like we don't get to, we're not on the golf course doing all the things, but we have to learn to say, listen, these are my results. I have them. These are the people that said great things about me, right? That I keep, I ask, I acquire. And these are the reasons why I should have that job. We have to start asking for what we've earned. And when we don't get it and there's no path to that, we have to walk in faith and not fear, and sometimes go where we can have that.
And what role does unconscious bias, in your view, play into this lack of C-suite representation that we need to see?
Man, it's not only in the C-suite. It penetrates every single fabric of corporate America. I just took recently a class at Cornell University to get my diversity and inclusion certificate because I wanted to better understand, because I'm always popping off at the mouth. I was like, let me have some numbers. Let me be able to back some of this up. And the most astounding thing to me was that we can process 11 million pieces of data at one time. Our brain can. And what we do when it comes to diversity is we judge people based on 4 pieces of criteria. And that criteria comes from something that was uncomfortable, something that was negative. So we're judging people based on an experience we had with someone else that wasn't positive, and they don't even realize they're doing it. It just feels natural and organic to interact. So one of the things that the class taught is that companies aren't going through the process of allowing people to really get to know one another. When you walk in, you can see people's family, and a picture of their children are just like your children. They're all playing soccer or basketball or running track, because we're so busy chasing numbers, and our delivery has to be on point every quarter, that we're not taking time to do humanistic servant leadership things. And it's one of the things that, and we're going to talk about, Ebony, but we start our meetings with a moment of gratitude. What are we grateful for? What happened in your family? Because our families are the same. It's the only way we're going to get past those four things that really do exist.
Mm-hmm. So with that being said, then what role does having mentors and sponsors and champions and allies in place to help ensure that Black women in particular and other underrepresented groups get those opportunities that they are more than qualified for?
Yeah, I love to mentor folks, especially if they reach out and they're like, I really need you. I shouldn't say mentor. I advocate and sponsor people. I have conversations, because mentorship, I believe, the world's moving so fast. It's really difficult to have a mentor relationship, right? That is a rare occurrence now, because you have to get to know each other intimately. But I can't have an advocate or a champion or a sponsor sitting at a table when I'm not invited to the room. A young woman called me. She spent 8 years at a company, and she's like, I have this amazing advocate. So I started digging in. I was like, but you've been in the same position. You're not happy, but you have an amazing advocate. Yes, she's always speaking up for me. I said, you have the wrong person, because she's not able to get anything done for you. So oftentimes, because of someone's title and, they have a seat at the table, if things aren't moving, you have the wrong person. They might be an advocate, but they can't advocate for you in a way that you're going to get something done. And it hit her like a ton of bricks. I said, you got to find another person. You got to find another story. You have to build it for them. You have to be strategic enough to not allow someone telling you that they're championing for you and you sit in a position and nothing is happening. So my advice, my feedback is, make sure that you have a champion that can win for you. Not based on them winning for themselves. A lot of times, as a matter of fact, I think the number is 82% of times decisions are made about most employees when you're not in the room. So if you don't have someone who knows your story, who can tell it, articulate it, and then ask for something on your behalf, then you're never going to get to where you want to be.
Oh, that's a good point. I always tell people, if you're only known by your team, you have failed. You need to create relationships outside of your core team. And that's part of that, not being in a room and having those additional voices to vouch for you and who you are and what you can do. Well, Michelle, this brings me to your personal journey. And I had the honor of seeing you present recently at a meeting, and you talked about 12-3-1. Can you expand on that for the audience?
Yeah, I would love to. I really, truly hope that this really brief story blesses somebody, opens someone's eyes. So I have been an executive for many years. I was the #1 salesperson for some of the most recognized companies in the world, CNN, A&E, the History Channel. And I went from company to company. So I spent 12 years at 3 companies with the same exact job title. And I'm like, but I'm amazing. And I'm great, and I'm delivering everything. But what I did is I didn't take a look inside of myself. I wanted everyone else to change, and I wasn't being strategic, and I wasn't understanding the culture. I didn't understand that my frontline manager actually made all the decisions and set the culture for the department. See, I'm living in the culture for the company. Kumbaya, this and that, but my frontline manager is kind of a jerk and don't really like me, but I wasn't dealing with that. And so when I understood that, I started playing a different game, Shartia. And then I went to a different company with a new vision, new attitude, understanding that culture eats strategy. And I was able to move really quickly. And I've been on a journey ever since.
Now, Bridgman Sports and Media named you CEO in January. How are you settling into your role as CEO at this time?
Well, I have to say this. So February 27 of 2020, my job was eliminated. I was a really high level executive. I felt performing, it wasn't a great fit, but I found myself unemployed. Then I got COVID. I was sick, and I had a really long conversation with God. I was like, okay, so what is happening, right? And I doubted myself, and I did. So this whole thing, so there was this whole lead up to that. And when I got a call from Eden Bridgman, actually a text message, I had to Google her because I didn't even know the family. Like Junior Bridgman is one of the richest unknown people known to mankind because he played in the NBA. When I Googled her, I said, oh man, and we had a really transparent conversation about, legacy and this community and our commitment and us wanting to make sure that whatever we purchased or acquired or did together, that we knew that we wanted to be servant leaders to this community, to give them an opportunity to see the best of themselves. And when Ebony became available, she called me. She's like, Michelle, it might be Ebony and Jet. And my mouth I was like, really? Like, that would be amazing. 75 years of history, of telling stories, of being bold enough to put Emmett Till's open casket on the cover of the best of the best and the worst of the worst. This was the first Black magazine that wanted African Americans to see a true reflection of themselves. It's an honor every day that I wake up and have an opportunity to fight for this brand, to fight for this community, to fight to hire Black people to tell Black stories. Black media companies matter, because if I don't do it, who will? And so it's been a journey. It's the best journey of my entire life, that I get to do something that I don't call work every single day for a community that I love immensely.
Mm-hmm. Full disclosure, I grew up reading Ebony and Jet from cover to cover. What is your vision for these iconic brands? Oh, yeah.
So, the vision is this. I'm creating a vision based on data, research, and insight that I know our community does. We spend more than 60 hours a week on our phones. We consume more content, but more importantly, we create more content than anybody. And guess what? We are not being paid for it. It really drives me bananas that the world is monetizing, right, billions of dollars a quarter on what we create and give to the world. Can I take some of that? Can I give someone a platform and people a platform in order to tell stories, create content, so I can make a really bold statement? Ebony Studios, Ebony Content, Ebony TV, whatever it is that we call it, we will be in the content business, because there are so many stories that need to be told, and there are so many people that need to tell them, that need to take care of their families too. So we are doubling down. So not only are we going to be in the content business, we're going to be in the small Black business, small Black people business as well. It is my number one priority.
So how has then the pandemic, and as I mentioned earlier, these increased calls for racial and economic justice fueling, you kind of hinted on it, but what are you doing specifically to move things forward?
I mean, listen, every day that we wake up and we're able to tell stories, shine a light, dig deeper, put somebody on the cover, hire another journalist that is an amazing talent but was overlooked in the marketplace, we're doing something good, because we're allowing a space and a place to celebrate Black life. That is what our tagline is going to be. That is what we're going to do. Every single day we're going to celebrate. And then, and I think about it, okay, how do you celebrate police brutality, people getting killed in the street? We're going to celebrate the fact that we rose up and we're done. Like, we've had enough. We're not taking it anymore. I'm going to celebrate the fact that, there's a little girl who has an opportunity to be something great because her dad, we're standing on his shoulders and on how he was senselessly killed in George Floyd, right? So there's so many things that we can still celebrate, how we rebound and pivot, how we come together, how the world has. So we really want to celebrate Black life. And if we can do that, if we can show the good, the beauty, the brilliant, the bold, the folks that, are overlooked. I always say, like, I worked in corporate America and I'm not a bad looking person, 5'10", like, I'm all right. And I was invisible for so many years. How is that possible? I don't like that. It's not a good thing. And so I'm tired of people being invisible. I'm tired of having to check your culture at the door when they hire you to do something. They're like, I'm not comfortable. Oh, get along with the team and quietly assimilate. It's whispered to you. I don't like, that's not, no, it's inappropriate. And I want to make sure that we're building a company where people don't have to do that. And I also want to make sure that we're telling those stories. Good intentions doesn't get the job done, because a lot of CEOs have great intentions, but they don't have the nerve to make it happen. And so I want to hold all of those folks accountable, and I want to give people a platform in order to tell those stories.
Mm-hmm. Now I know, Byron Allen. I know Junior Bridgman also, signed on to, some of the letters recently, advocating for more dollars to be spent with Black-owned media, and explaining that difference between Black-owned media versus Black-targeted media.
Yeah.
What has been the response at Ebony and Jet on this?
I'll tell you, and I'm gonna give a couple of brands a shout out, just because before Byron called the marketplace to task, and he is not wrong. Okay, he is absolutely right. It's like, you can't want to advertise to my children every single day and want them to buy your products, but you don't want to give them a job. Like, that's not acceptable. And so that's all we're saying, is like, you can't target most of the ads, most of the creativity, most of the things are targeted towards this audience, but then you don't want to help them succeed. So Byron did a great thing. He called the marketplace. He wasn't wrong. How he did it, listen, maybe people aren't comfortable with that, but a lot of brands stood up. But the brands that stood up before that, Mark Pritchard at P&G, Michelle G, how can I help you? How can I support the brand? He's authentic because he understands that his business is reliant on this audience. He hires people. He's creating content. And so, when Mark Pritchard calls you, it's like, okay, I really might have a business proposition here. Coca-Cola called me. They're like, we're committing millions of dollars to the brand agencies. So we are in such an amazing position. Now we have to deliver, right? I have to make sure that I'm giving them and that I'm being a great partner. I'm just not going to take and not give them something that's amazing. But the marketplace has responded in an amazing way. I'm so grateful. I'm so blessed. This brand is so blessed. Eden and I are overwhelmed sometimes by the love that this brand has received over the last 3 or 4 months.
Mm-hmm. We're running out of time. What is one thing our esteemed audience can do today to make their workplace more inclusive?
Yeah, you know what? I think I really believe that if you get to know people and not put them in buckets. So that's the first thing, right? Get to know folks. Like, don't be the person that's like the 4%, like I'm judging you based on a bad thing. The other thing that I think that you can really, really honestly do is to be human, right? Be human. Like, we're all human. We all hurt and love, and a lot of times, we're asked to do things. The last thing I would say is this: don't expect people to be different or to have to get along. I think that if we welcome difference and if we welcome different ideas, then we're all going to benefit from that. So that's me on that side, right? The 1231. Me as a CEO, I say this. I say CEOs have to measure and hold accountable and understand that diversity is a business proposition. And we hear it all the time, that it's not a good deed or a good act. That if you're giving money away and you're doing all these things, where's it going? Did it impact somebody? Did it help their business? Really? Did it not? It's not just a tax write-off. So I believe that my side as a CEO, that I have to hire, hold accountable, and be better. And it's not just having good intentions, but actually activating and following through and measuring to make sure that what we're doing, what we're saying actually comes to fruition.
Mm-hmm. Oh, Michelle, we must leave it there, but it was just a joy speaking with you today. I hope we can continue these conversations going forward.
Yeah, me too. And thank you. I just want to thank Bloomberg for your partnership. We are working on some things I don't think we're ready to announce yet, but Ebony and Bloomberg, we're looking forward to your commitment to equality and this conversation. So thank you for your commitment. And it's an honor for me to speak with you today. So thank you very much. The Ebony team says thank you.
Thank you. We are definitely committed to making a difference in this world when it comes to equity and equality. Again, my thanks and honor.
Have a blessed day. Thank you.
You too.
That brings us to the end of the Bloomberg Sustainable Business Summit Global. Thank you so much to our speakers for their insights, to our moderators for their time, and most of all, thanks to you for being such an engaged audience over the past 2 days. I'd also like to thank our global advisor, Natixis Investment Managers, our summit advisors, PwC, RBC, Schlumberger, and Wipro, and our supporting sponsor, Principal Financial Group. If you'd like more information from our advisors and sponsor, please visit the resources tab on your screen. We're so thrilled that you made the time for the Bloomberg Sustainable Business Summit over the past 2 days. Please do continue to engage with us on social media after this. Our hashtag is SustainableBizSummit. Thanks again, and we'll see you next time.